Good morning, everybody. Welcome to day 2 of the Traders Conference. We are excited to have you. Whoa, excuse me. We're excited to have you here this morning. Welcome to day 2. If you were here yesterday, you had an amazing day of learning. We had 9 presenters yesterday. We're going to have 9 presenters again today, taking us through some awesome learning. So we are excited for another day of learning. My name is Kelly Clement. I will be your YouTube host today, so I'll be back here making sure everything is running well technically. We'll keep our fingers crossed that everything's going to work well technically. And then I'll be answering questions on the YouTube side and helping out there. So if you have any questions throughout the day, make sure to ask them here in chat. I am just going to go make sure everything's working okay, and I'll be right back with you. Okay, looks like we're looking pretty good. Everything's set. We have our first presenter, John Osborn, in the room already, ready to go. But let me actually show you how you can actually see today's schedule, who's going to be speaking, and kind of what's coming up next. Let me share my screen here. If you go to metastock.com, that's metastock.com, and then right here on the home page, if you just click the register now for the Traders Conference, click that button right there. It will take you to the Traders Conference page. We are on Tuesday, day 2. So you can see our lineup right here. We're starting with John Osborn, who's going to be talking about revealing hidden market moves with the stock market GPS to success in trading tool. So that will be our first speaker of the day. And then as you go through, you can see all of our other speakers. We have Wendy Kirkland, Rick Sadler, Alex Cole, Tyler Wood will be speaking together. Jerry Allison from Trader Tax. That's always a really good one. If you haven't seen Jerry Allison talk about trader tax status versus investor and what it means to you, it is a great presentation, very, very helpful. So recommend highly to come to that. Todd Horwitz, Ed Downs, Peter Dalal, and then finally Silas Peters. Now down here at the very bottom of the page, you're going to see this little registration form. If you register for this, what you're going to be put in for is you're going to be eligible for any of the prizes that are given away today. This lets us know that you're attending and that you're interested in winning the prizes, and that also that you are registering for the conference. So you'll get all that. So that is a lineup of today, and then you can see the speakers for the rest of the week as well by just going up to the top and then clicking on the other days. So you can see all the upcoming presenters and speakers, but make sure to register, get eligible for the prizes. So Jeff and I will be giving them away throughout the day. Let me go and turn this off, come back to the screen here. Okay, looks like we're about 2.5 minutes out. As you come into the room, make sure you say hello. Tell us where you're coming in from. Again, my name is Kelly Clement. I'm here in beautiful Salt Lake City, Utah. Let me know where you're coming in from. I'll be right back. right, everybody, that was just to check in with Jeff, who will be our host today for this conference. We are thankful for Jeff for all the work that he does to put this conference together. It's really Jeff's effort that works really hard to get this all set up and running. So we thank him for that and getting this all put together so we can have this full week of free market education and learning about the markets and what's going on. So we are about 45 seconds away from getting started. Again, say hello. We'd love to hear from you in chat. Ask any questions that you have during the day. You are here to learn, so you might as well be asking some questions to make sure that you're understanding what the presenter is talking about. So make sure to do that. We love being interactive in the chat and having you here. So welcome again. Let me go do my final check, so I'll be right back. Okay, looks like we are all ready to go. Remember to go to metastock.com, click on that banner, register, and here we go.
Welcome. I'm not sure. All right. Well, let's get started then. Kelly, while you're still on here, let's kick it off with a prize. So,
a prize
I'm ready to go.
go.
Yeah, I promised yesterday we would not miss an opportunity to give away a prize. So
let's do it.
The first prize we're going to give away today is Mark Leibovit, and the name of the prize is The Trader's Book of Volume. Mark Leibovit speaking, he's speaking on Friday, and he's a leading market strategist. He's got 35 years of experience. The book you can buy on Amazon for $40, but we're going to give away a copy of it right now. So Kelly, if you don't mind, let's go ahead and give it a number today. Give us a number between 1 and 10,407.
3,997.
3,997. That would be Ain L. And let's see. I don't have a country. They didn't register. This person didn't register with a country. So, but Ain L is going to be getting an email from us in terms of claiming that book. So watch for that email. It's going to go out sometime within the next week, or maybe 10 days, just depending on how busy we are with the conference. But if you're watching us on YouTube, thanks for joining us today. If you want to be able to be eligible for prizes, we'd love to have you register. All you need to do is go to metastock.com/tradersconference. Kelly's going to put that in the YouTube link for us, and then that way you can kind of be on the list every time we do a drawing. So, and we're going to give away prizes between every I was trying to add up how many there were in my head. It's too early, not enough coffee yet, but we're going to give away tons of prizes between now and the end of the week. So make sure you're on that list. All right, let's start with a legal disclaimer. Today, this demonstration is designed to instruct you on using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. And Metastock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. We got that out of the way. We do have 2 sponsors today and a live mic probably in the control room. Let me look. I can actually turn that off. If I can find the attendee list. Okay. All right. Let's go ahead and do that. Two sponsors today. There's Stocks and Commodities magazine. Stocks and Commodities has been a great sponsor for many years. Great magazine. If you do an extended trial of Metastock, our software, they're going to give you 5 months for free. And if you spend $300 or more, you're going to get 2 years free. We love stocks and commodities. They've been sponsoring all of the events we do online for a decade now, and they do a really good job. We really appreciate the work they do. And then CMT is our other sponsor. I'll talk a little bit more about them as we go through today. It's a very, very well-reputed organization. It's a nonprofit, and it's called. You can find out more about them at cmtassociation.org. So, are you guys ready to get going? Oh, and then, of course, there's us, Metastock. I'll talk more about that after John's done, too. So our first presenter today is John Osborn. John has been a presenter of Metastock for a number of years. Today, he's going to talk about, I think he's talking about Trender today. One of the things I'll say about, it's Trender. He's also going to talk a little bit later in the week about another patented product that they have called Value Charts. But with John, he's a pleasure to work with. One of the things that really impresses me quite a bit about John is he's a really good programmer. He's a really good presenter. And he's really, really a really nice guy to work with. So we love working with John. We love having him on here. Let's go ahead and bring him on. John, how are you doing?
Bigger now, thanks to that introduction.
All right, good. All right. Well, it does impress me that you are such a good programmer, and I say this every time, but you can also present so well, because those are generally, in my opinion, very, very different skills to have. So, just want the presentation over to you.
All right,
and
you should see
yes,
title page there.
Reveal hidden market moves.
All right,
it looks good to me.
Okay, so are we ready to go?
Yes, I'll get out of your way. You go.
All right. Well, welcome, everybody. I'm John Osborn. Thank you for that wonderful introduction there. I'm from Basecamp Trading, and I'm here to tell you about something that's going to change the way you look at charts forever, because you're able to see some new technology that's able to route traders through a chart to find the best trades, just like a GPS that you might have on your dashboard can help you get where you're going, even if you've never been there before. So let's go ahead and get started. And I want to do my risk disclaimer, and that is trading or investing carries a high level of risk and isn't suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. Just remember, trading is risky, as we know, so don't trade with money you can't afford to lose. We've done our best to ensure the accuracy of the information I'm going to share with you today. This webinar is intended to provide you with information that you can use to help make your own independent trading decisions. And remember, past performance is not indicative of future results. The markets are unpredictable, so be prepared. And the government wants you to know, CFTC Rule 4.41, that trading has both rewards and risk. Again, don't trade with money that you need for food or rent. I'm not soliciting you to buy any stocks, options, futures, or any other securities. And I always suggest trading in paper with anything that's new to make sure you're profitable in paper before you even think about using real money. That's so you have real money left over to trade when you're able to finally understand the system and the rules and the tools. So today, we're going to talk about how to completely transform the way you're trading and to start seriously grow your account by using a very powerful technique that I think I like to think of it as a stock market GPS. So imagine approaching the market differently than you might do today, where each day you have the guidance that our current customers use every day in their trading. Our traders have doubled, tripled, quintupled, and more of their accounts with it. And this stock market GPS lets you trade with pinpoint accuracy, just like a hedge fund does. Now, do you think you could possibly improve your trading if you had a tool like this? And I know you haven't seen it yet, but you're going to learn about it here. But think about it. Could a tool like this that you're going to see here help you drastically grow your account? So ask that question as you're watching what I'm going to show you here. Now, if you've never thought trading with such a guidance tool and having confidence was possible, I have some great news. It's totally possible with the tool I'm going to show you today. Now, this isn't an incremental minor change. It's technology that's been in use by our best traders and our team for years that we just keep improving as we ask more and more of it. Now, it's used in some powerful automated systems that we've sold access to. So we've actually sold solutions that use this technology. And today, and what I mean is as far as trade recommendations and things like that. So today you're going to learn what a stock market GPS is and how it can improve your trading. Now, this isn't just an incremental change. This is a powerful fundamental way to identify trading routes that lead you to profits in the stock market. Like this one here, this is a $37 per share gain in just 38 days in NVIDIA. And this was a $70 share gain in just 28 trading days. This one's still running right now. This is Tesla short here, and it's still going. I had to update this morning to increase it from, I think it was 60 a share to 70 a share gain on that one. And this one here, this is a gain so far in Meta. This one's still going. It gave an entry signal just after the market high back in January. Then it gave us a second entry signal earlier this year, and it's still running. It's currently giving us more than a 71% return. So if you're in Meta, I'm sorry if you're thinking about going long. There's been a little uptick here, but our indicator is still saying it's not ready to go long just yet. So we'll see. The indicator doesn't know that Mark Zuckerberg is thinking of laying off a whole bunch of people, but we'll see where it goes from here. And we can lock in our gains that we have so far anyways. So let me give you a bit of history about myself, and I want to explain why I'm so passionate about helping other people make money in the markets, both in creating tools that they can use, but in also helping them explain how to use it and teach them and give them the confidence. So I've always been interested in the markets. Even as a kid, I watched my dad trade, and he had to use newspapers and magazines. And he seemed to me to brag more about what he did wrong in the market than he did right. But still, he did okay. But he always said he wished he could have done better. And he got me inspired to learn about the markets. He made sure that I understood that making money in the markets is how you could stay ahead of inflation. And that's gotten really important in the last little bit here with inflation at 40-year highs. And if you want to get where you want to be, it's going to be by putting money in the stock market. So I dabbled with trading on my own. And when I was a kid, even as a young adult, I did it. And like my dad, I did okay, but I wanted to do better. And I was trading actively in the late 90s. That's when I really get started a little bit more than just putting money away in long term. And of course, the dot-com bubble burst, and I saw the end of that easy money made in the 90s. So since my dad had instilled confidence in me in the stock market, I decided to go out and take whatever training was necessary to learn how to trade when the markets are going up or down. And my plan is that I would figure this out and then share what I learned with my dad so he could enjoy trading in the markets too better. Well, that turned out to be a little more difficult than I thought. It took a lot more money, a lot more time than I imagined. And when I finally did get around to learning what it takes to be successful and be a confident trader, it was too late, unfortunately, to share with my dad. And since I wasn't able to teach my dad, I now teach others like yourselves about trading. And my hope is that you can reach your own trading goals. And those that I teach can help other traders do the same, who could then teach even more people. So, maybe some of my students will be able to teach their own father about how to trade, or their mom, or their son or daughter. And I know that helping so many others achieve their own goals in trading is something that would make my dad very proud. So that's why I love to share how to pull money out of the markets with traders like yourselves, especially people like yourselves who are showing up here and are genuinely putting in the time and effort to learn how to trade. So let's see how we can pull more money out of the markets here. So today, I'm going to show you some technology. I'm going to let you in on it, that a technology that can help any trader be a better trader. And I'm going to explain how this powerful tool can make a huge difference in your trading, because it has the potential to completely transform the way that you trade and revolutionize the way that you pull money out of the markets. And I hope that you'll share this with your own family and your friends to help them achieve their own goals, because you're going to need someone to go out and do things that are fun. If everybody else is working and not able to get time off, you're going to need to make them good traders with you. So let's get started. Now, I want to start off with an example here, because this is probably the best way to get a point across. So I'm going to share this example with you now, and let me know if you can relate to this in your own trading. So this is an example of where traders can misinterpret what the market is telling them. It's a common pitfall for traders who don't have all the information they need to make the right decision. So what do we have here? We have price running higher, and it doesn't matter what market this is. This happens to be Amazon, but it doesn't really matter. We can look at any market and pretty much get the same lesson from it in this case. But when we see the market pull back a little bit here, we decide, hey, that's, we're rising, we're pulling back. This is a great time to jump in, right? A pullback gives me an opportunity to jump into the trade. So we would expect it to run higher. We throw our money into it. We expect it to go up. And what happens? Well, only it pulls back, and more than we thought it would. And we get stopped out. We might say something not very nice. And that's because we entered the trade on what we call the wrong side of the mountain. We took a bullish entry when it was on the way down. And to make matters worse, after we got stopped out down here, when the next valid entry comes along, such as right here, we're hesitant because we just took this loss. And if we took this one, we thought we should get in. Well, are you going to be a little reluctant to take this one? Probably, because you took a loss the last time. And so you pass on this one, and then what happens? Of course, it runs without you. It's so frustrating. And I know what this feels like. It feels like the market is against us, because when we take a trade, it stops us out. And when we don't take a trade, it runs without us. It's almost like somebody's doing this on purpose to me. It's frustrating. It has an even greater impact on you than you might even realize when this happens. So how are you going to fix this? What makes this even worse is this type of flawed chart reading can wreak havoc on your ability to profit in the markets. When the setup looks good based on the information you have, and you jump in expecting it to go up or down or whichever way you want it to go, only to have it go against you, it feels awful. It feels like, I'm sure many of you have felt this. I've certainly felt it. It's one of the most frustrating experiences that all traders face. And when this happens, you brush yourself off and vow you're going to do it right the next time. And then the next trade setup comes along. That doubt that you have creeps in, and you skip the next trade as your confidence is all beaten up. And of course, that trade does run, just like that example there. So once you have a couple of these missteps where the trades you get into fail and the ones you skip run, it kills your motivation. You might even start to second guess whether you're cut out for trading in the markets. And maybe you start to feel that the markets are out to get you personally, that somehow those market makers and market specialists know what your trades are, and they're doing it on purpose. Even though we're just a tiny flea that no one even notices in reality. But it feels like that, and I understand it. And if this is something you've experienced, you're not alone. I felt it. I bet that all of the best traders have felt this at some point. It's typical, especially for new traders or traders that aren't able to identify a real route through the markets in the right way. Doubt is just one of the negative energy sapping anti-trading things that you have to deal with. And because doubt leads to a lot of other negative emotions and actions that we take to wreak havoc on our equity curve. And it kills your confidence. It gives you those negative emotions, and it robs you of getting your goals and your dreams that you know you can get through trading. And you see other people saying, why doesn't it happen for me, you say? Those negative emotions have no place in a successful trader's mind, because to be successful, you have to find a way to get those negative emotions out of your head. Now, some of you might be saying, why are we talking about this psychological stuff instead of showing me what this tool's about? And the reason is because you have to master the psychology of trading before you're ever going to be profitable, because it will self-sabotage you if you don't fix this. So having doubt is going to be a problem, because it's going to surface in the heat of the moment, subconsciously, when the trade's happening and your real money's going to be at stake. So to be a successful trader, you have to find a way to get your confidence back so you can completely eliminate doubt and instead enter each and every trade that meets your setup criteria with confidence and assuredness. So in that example that we saw, if you are confident in your system, you wouldn't have skipped that second trade. But because you missed that first trade, you gave up on the second one. That's because you had doubt and lack of confidence. We have to fix that. So how do we fix it? Well, we realized at Basecamp Trading that traders need one thing more than anything else in order to give them that confidence to trade well. And that one thing that they need most is clarity. Traders need and want a clear signal that shows you when to get in and when to get out of trades. Now, we don't want a black box signal on its own where we don't understand why we're getting in and getting out. What we want is a signal that still shows the why behind the signal. See, traders need the clarity that reveals the state of the stock, so we can easily see when a stock, or a mark, whatever stocks or futures, whatever you're trading, you want to know when it's changing from bearish to neutral to bullish, so we can then make confident decisions about the market's next move. If we have that kind of clarity, we'll brush aside all that negative emotion, knowing we can trust the technology, trust our system, and we'll have the confidence to trade and take each of those trades. With that clarity, we'll finally have something that can help rebuild that confidence that we know we need as successful traders. And even if you're a successful trader, having the confidence will help you be an even better trader. Now, and I'll show you in a little bit of how even a seasoned trader can benefit from having these tools. Now, we've all heard the axiom, the trend's your friend, but if you're not able to hear all that the market is telling us, trade entries and exits are murky, right? Because we built this tool to clear that up and give traders that clarity, because we know they're struggling, because we've been there too. Clarity comes from being able to see and understand what's behind the chart movement, because the chart is, and the market, they're not really out to get you, even though it feels like that. It's actually telling us what it's going to do. We just have to find a way to be able to see what the market is doing and hear it tell us, so we can know what a stock is going to do next. That's what's behind this new technology. Our technology interprets that hidden information for you. It helps traders navigate their way through charts to find the optimal entries and exits, just like a GPS up on your dashboard or in your dashboard or in your phone will guide us to find the best route through an unfamiliar city. And once you start using this, you'll see notifications at first that you may not expect. New users who have this tool sometimes contact us and say, why is the indicator telling me it's bullish? Shouldn't it be telling me it's bearish at this point? Is it broken? And of course, we always tell them it's working correctly. It's just that the algorithms that are in the tool are looking at the right things that reveal what's going to happen next. And that's not always what it might appear to be at first. It's like when you're driving and you think you know the fastest way across town is via the same path you've always been taking for years. And then you get a GPS and it finds a little hidden way that you never knew was there, a way that gets you there in half the time. That's what it feels like when you're using hedge fund quality tools like this. It's like finding the best route right on your charts to get where you want to be with confidence and speed. So what is this that we call it? It's called MQ Trender Pro 2.0. And you know how Eskimos have 20 different words for snow? Well, we have a lot of different names for this tool because we interact with it so much. So you'll hear me call it Trender Pro or MTP2 and some other names as well. But it's actually the Trender Pro 2.0 or MQ Trender Pro 2.0. I'll probably call it MTP2 most of all. Now, how is MTP2 going to help you? It's going to do several things here. First of all, it's going to map out the actions right on top of your chart. It's like having Google Maps right on your charts on virtually any type of chart or symbol in any time frame. And it shows you what to do with very simple, logical, meaning it makes sense without any training even, logical color coding and signals that'll make it'll just make sense to you right away. You'll instantly know what to do and when to do it. And remember we were talking earlier about that part about eliminating doubt in your trading. Well, with MTP2, your confidence is going to increase. And that's going to help you get bigger gains because you'll not only get in at the right time, you'll be able to stay in your trades longer and maximize your profits. If you can do that, imagine for a moment, would that boost your confidence? If you started to get in at the right time and you didn't jump out too early and you stayed in the trade and started to get some big wins, wouldn't that increase your confidence? And you'll have confidence in your tools because you can trust them and trust in your own ability to execute trades using the tool. It's this aspect that our more seasoned traders appreciate about MTP2 because it helps them get even more money out of the markets with fewer trades. And because you take fewer trades, there's less risk. the first time, when you first get into a trade, that's maximum risk most of the time. Once you get a few contracts off or a few shares off, you start to reduce that and you get some gains. You move your stop up. That's when you stay in trades for longer. It really makes a huge difference. There's fewer commissions, you have less stress, a whole bunch of other things. And all of this comes down to one thing, one important thing, and that is it gets rid of the fear. So just like a GPS on your dashboard gives you the confidence to get where you're going, even in an unknown area, MTP2 can give you guidance that gives you confidence to anticipate where the stock's going to go on any chart. So how does it do this? Well, Trender Pro uses a number of different Basecamp trading technologies to help us see the market in a new way, and a new way that simplifies how we see where the market's going to go and hear what the market is already telling us. So just like a GPS, it will tell us which way to turn to reach our destination. It lays out our route for us right on our chart that tells us which way the market's heading. It's very simple. Green for up or bullish, blue for neutral or sideways, and red, of course, for down. If I had to guess, if you had to tell me what colors these were, you probably could have told me. Maybe the blue might have been a challenge, but green is always used for up, red is always used for down. And these are, natural expected colors. So it becomes easy to look at a chart and understand it right just by looking at it. The core point behind MTP2 is that it helps you simplify your trading so you can easily know when to get in, when to get out, and when it's best to stay on the sidelines. That is, it gives you the clarity that you need to reveal and anticipate price movement. Now, we've been using this tool for many years, and it's gone through several iterations to increase its accuracy, where we've added additional features and more accuracy. So these are really helpful features that we've added, and the version that's offered for Metastock has all the latest innovations that we've built into the tool. And it's got even special innovations that aren't existent in any of the other versions that we have, by the way, because Metastock offers the capabilities that other platforms don't. Okay, so we have things in addition to just being bullish, bearish, and neutral. So what can it do? Well, as you saw, we can look at bullish, neutral, and bearish, but it can also detect when a market is starting to get extended and indicates that with the gray color. That is, it gives a heads up that we've been running in this direction for a while and that we might not continue anymore in that direction, or at least not much longer. But we don't just jump out of a trade when this happens. If we see gray bars, it doesn't mean jump out, because even extended stocks can run further in extreme cases. And so when MTP2 gives us an extended market signal, instead of jumping out, we just tighten up our stop to make sure we lock in gains and preserve anything that we've gotten so far, and maybe take a few shares off or a partial profit, but we want to stay in it and let it to continue to run. One thing, though, is you would not want to get into a new trade if it was extended. Okay. Now, another thing it provides is trailed stop indications, and these appear when we have a pullback against the trend. So if we're running up and we pull back a little bit, sometimes we'll have a signal that we call a trailed stop indication, and that indicates that the trend is taking a break or pausing, and perhaps even reversing. So we use these pauses as an opportunity to trail our stops in positions that we're in, or if we need to, get out of the position. They're like mileposts along the way where we lock on our profits. And we call these trailed stop bars golden bars because we use yellow for the color, but also because it's where we take our profits. Now, all of these colors that we see here will appear automatically right on your chart. It's almost like having Google Maps laid right on top of your charts to show you exactly how to get where you're going. Now, let me show you how it makes transformational differences in the way you pull money out of the markets. I'm going to go back and look at that example again that we had just a few moments ago, where we got into the trade at the wrong time, the wrong side of the mountain. Remember, we got in here on a pullback, and then it reversed and went against us. So here, we don't have MTP2 available to us yet. Let's add it in. This is like adding in and activating our GPS overlay. There we go. Once we have Trender Pro lighting the way, we immediately can tell that we're extended when we got in here. Does everybody see up here, see how it's gray? Okay, we changed from this green into gray. So at that point on that pullback that we were jumping in, this market was extended. It wasn't likely to keep running. Okay, if we didn't have Trender Pro, we wouldn't have necessarily known that. We might have said, hey, it could just keep going, but Trender Pro saved us from entering here. We quickly went into the neutral status and even got into bearish status down here. At the time that we got stopped out, this was giving us a signal to get in, and we could have made a profit to the downside here. Okay, now look over to the right here. And remember that point we said we would have been a much better entry and we were afraid to get in, because we had a breakout of the congestion and the compression that followed this initial reversal here in the initial run. Well, look what happened here. Trender Pro, hopefully you can see this good. Trender Pro is blue right here, and it changed to green right at that point. That's a buy signal. It changed to green right at the point where it was ready to continue the move higher and breaking out of this consolidation zone. Some of you might even see another pattern here. This is an inverted head and shoulder that's set up here as well, a little weak on the right side here. We had a pretty well-defined neckline, and we had a color change right at that point. This time with Trender Pro's help, we'd have the confidence to get into this trade and take that trade and grab these profits that just came out here. And look, we even had a trail stop golden bar here to tell us to lock in some gains up here. And then we continued on along with us here because we did have a signal, and I'll talk about that in a moment, to stay in. Okay. Now with Trender Pro guiding the way, we can see when to hold off on getting into a trade and exactly when it's the right time to get in, like over here. This is why we love Trender Pro. It's why hedge funds use this kind of technology. They have this added info. Then when you have it, you know when to get in, when to get out, and you can maximize your gains. Now, I'm going to skip through this pretty fast here because I go and have a lot of detail here, but I do want to say this is about how does Trender Pro make all this work? And it's because it's full of Basecamp trading technology and bringing together some of our best proprietary and even non-proprietary indicators into consideration. But when we look at these things, it's really about having a team of advisors working together behind your charts to guide you. It's like you're the CEO and you've built a team of the best advisors around you to keep you on course. And by looking at these factors and different indicators and different components that's built into Trender Pro, it can generate almost 50 different states to be able to easily show on the chart what to do. And we boil that down to the colors that you see. The bottom line is, just like a GPS, there's a ton of technology and complexity that's going on in the background, but ultimately what you just need to do is learn how to read the signals and understand what you need to do from an intuitive trading perspective. And basically, it's very easy to act on. It all boils down to the simple color codings you've seen. So it is easy to use, and you'll know what to do and when to do it. Now, I'd like to share a little more now about how we use this in a way to transform your trading. So many traders struggle with staying in a trade after they get into the trade. And we've had some of our in-house room hosts that have said, this is the best tool that I've ever had because it reminds me to stay in the trade and stay with it rather than just taking profits at X dollar amount or whatever. It tells me that, hey, there's more to happen in this trade. I might as well stay in. Okay, because some traders get nervous about the profits that they have when they're even up just a little bit. And they'll let their losers run all the way to the stop, but they can't let their winners run to the target or just keep running forever or whatever. Maybe not forever, but for what feels like it when you're in, if your goal was to get in at one point and you're still in it for a long time, that's such a great feeling when you're trading that way. Because you don't have any more risk in your trade. When you got in over here and you're way up here, your risk is way behind you here. You've already moved your stop, you've trailed, you've taken partial profits, and you're still making money on the trade. That is a huge confidence builder in your trading. And you stop cutting off your winners while letting your losers go to the full stop. That is what turns around your equity curve. So if you've got an equity curve that's not moving up in the right direction, stopping the self-sabotaging of your own trading is going to have a huge influence on turning that around and making it go up. So in its simplest form, we can use a transition to green or red to get into our long trade. So we could go from this red way over here on the left, and once we get to green, you could do an entry here, and now you're in green, and you just stay in it all the way up until you get back to blue. And some people will choose rather to wait for it to be red. So officially, you want to get in when it's green and out when it's red. I don't mind taking profits when we switch to blue. Okay, especially if you have multiple bars of blue. But you can see you get in here and take your profits over here. And how many people would have been happy in this trade, depending on what it is here. This is actually the SPX. But how many people would be happy in this trade making this little bit? But you left all this on the table. And because Trender Pro stays green throughout this and even break green here, that is an indication that you gave up all those profits. So if you normally only make, say, this much profit in your trade, and you left all of this on the table, can you see how having this ability could do a huge transformational change to your equity curve and your profits and your ability to pull money out of the markets? I hope you do. Okay, so we can use color alone to help us stay in our winning trades for longer. Okay, but there's another thing we can do too, and that is we can use our golden bars in a different way. This is the second way that can help us stay in trades for longer. This is one of my favorite parts of the technology because it helps us stay in while locking in gains, okay, using these trail stop bars. So let me show you what I do with these. So first, we trail the golden bars. So if we get in here, okay, and we start moving up, and then we get a pullback. Remember I said golden bars or trailed stop bars will appear on pullback. So we got a pullback here. And what I would do is I would lock in my gains, move my stop up. Now I might have been locking in gains at other pivots coming up, but this is an official long trailing stop here. Okay. Now you could do that up here too. You could lock in gains here, and you could lock in gains up here. Okay. And if you just did that, then you would have gotten out right here when you broke that previous low. Now, that's a pretty good run and a pretty good place to get out. As you can see, it was pulling back more significantly here. But there's a different way to use the golden bars. This I thought was a really clever way to use them. What we do is when we get a golden bar, we wait until the bar that follows the golden bar closes. So in a bullish trade, this is the one we'd be looking at right here. We'd be looking at this bar. So here's our golden bar. It closes. You can move your stop up and then look at the next bar. If that next bar closes up in your direction, or if you're short, it closes down, then we stay in the trade. So golden bar, it means, all right, let's check. Are we going to continue with this run, or is this a pullback that we're going to just keep dropping here? If it goes up on the next bar, we stay on, hang on for the ride, like we did here, and like we did here. Okay. If it closes lower, then we're done and we close out our position, like this right here. Okay, so this one closed just barely lower, but it is lower. This one closed higher. This one closed higher. And see, when you have a system like this, there's no question about whether you take it, get out of the trade or not. You just follow the rules. And it makes trading so much more simple because you get in when you have your entry signal and you get out when you have your exit symbol. No more doubt, no more guessing all through here. Should I get out? Should I get out? Should I get out? Should I get out? No, you wait until you get your signal and then you get out. And here it said stay in. So we took another run higher, then we got a pullback and said stay in. So even though it pulled back, we follow our system. We might have our stop down here, but we stay in and get another gain. So all of this gain here was all extra because we were using our golden bars and following through. Again, clarity is achieved with MTP2 because it makes it easy to know when it's time to stay in the trade for bigger gains. So rather than jumping out and get in and out in the trade as soon as it runs higher, we stay in. and we get bigger gains. It's really exciting when you can trade this way, and it actually makes trading fun. Sometimes you get one and done. So exit if the bar after a golden bar closes against the trade direction. If it closes with you, just trail the stop and stay in for the ride. Now, some of you might have noticed we got some signals in here. So it gets even better with Metastock. This is something else that's unique to Metastock. So we have a bunch of expert advisor signals that can identify key points to enter and exit your trades. And we talked about some of those, but you can see some of them working here. Here's the overvalued, come back to a golden bar, trail our stop up to here, another move up, trail back. Notice here's stay in the trade, and up it goes. We even get more entries here, which is nice. Now, speaking of additional features that you get with this add-on because of Metastock, you probably noticed that there is a trend ribbon in some of the pictures at the bottom of the display. The trend ribbon is using yet another Basecamp trading technology called MQ Trend, which calculates trend differently than the way that MTP2 does. MQ Trend is a popular indicator at Basecamp that we sell on its own. And now in Metastock, we can use the wisdom of the longer term market view that MQ Trend has because we've built it into the ribbon. Now you can use this to confirm the direction or help you stay in trades even longer for bigger gains. And I when I'm trading, I appreciate knowing what the longer term trend is for trades, especially when I intend to stay in for more than just a short period. And when I have both MTP2 and MQ Trend saying the same thing, like if we're bullish here and we're bullish in MQ Trend, then I know I have a much better chance of a profitable trade. And sometimes MTP2, like it did here, will alert us before the longer term trend's established, in which case it gives us the extra confidence that we're on the right track with the trade and we want to stay in for those bigger gains. Now here's another example of using MTP2 guidance and staying in with the golden bars. You can see the expert advisor signals guiding us along the way. So look at this entry right here. When we switch from red to blue, then to green, we get a long entry signal. Okay, this happens to be Google, by the way. And in our first golden bar right here, we check that the bar that follows it closes up. Everybody see that we closed up here after the golden bar? So we would trail our stop. Okay, and then we would continue to stay in. Well, right here, we got the extra notification that MQ Trend is in our favor. And even though we pulled back here, it was good that we got this MQ Trend signal because it gave us some extra confidence to let the system continue. Because many of you might have said, oh gosh, look at me pulling back. I'm worried here that I'm going to have to give back my gains. So some of you might just jump right out here and you would have lost all this gain. Okay. If you follow the system, what we do is we put in our trailed stop down here. And if you did have an exit on the following bar that changed to blue, you could exit here, but hopefully you'd use red. And if you notice too, even though we had a down golden bar, the bar that followed it was up. Not by much, but it went up. Okay, so we would stay in. We would trail our stop up. You could make it a little tighter than that, wherever you'd like to put it, but give it some room. And then what's this right here? Look, another long entry signal. Don't you love it when you're already in a trade and your system gives you a fresh get in the trade signal? This is what happens when you stay in trades longer. Because when this happens, it's like you're starting over again and you're already in it and you have zero risk because your initial stop and negative part was way back here. You're above that. You might have already taken partial profits, but this is one of the best feelings of trading is when you get a long entry signal when you're already in the trade. And this is an immediate reward for those of you who said, oh, this was so hard pulling back. We almost went all the way back to this stop. Well, we didn't. We got the entry. We got an extra entry. In fact, some of the traders would have enough confidence to add to the position here. What would happen? Well, look what we went up above that previous high in no time, paused for a little bit, got another golden bar. Look at this. It's up. We move our stop up here. Each time we move our stop, we're ratcheting in our profits, and up we go some more. And in this example here, it was still going. So you didn't have to jump out here with a little measly gain. You could just ride this. And that's fun. That's fun to trade like that. You'll see. Okay. And when you got the confidence of the ribbon and the signals, it's just a great way to trade. Now, let me show you, get rid of those there, a comparison of a chart with and without MTP2. This is Meta on the daily. Without MTP2 lighting up our chart for us, it could be difficult to find where the optimum entry point is here if you wanted to get into this trade. So even if you think that Meta is about to turn bullish, where's the entry point? Well, most people would probably choose this previous pivot back here, and you'd wait to get into this trade over here. Now let's turn on MTP2, and we can see our signals right here, plus a change to green, giving us the entry down here rather than up here. Well, here's the result. Would you rather get into this trade at this point and then trail it up at the golden bars, or would you rather get in after $20 worth of value has passed here? You know, if you trade 100 contract or 100 shares of this, that's an extra $2,000 in your pocket, because we're using MTP2 in even just this one trade. That extra confidence that MTP2 gives you keeps you from being stressed out about getting into the trade as well. This is why we say that MTP2 won't just help, it's going to transform your trading. Now, we can make MTP2 even a bigger part of our decisions so we can make better decisions if we bring in multiple time frames into our MTP2 decision. And that's called multi-time frame convergence, which is kind of a fancy name. But all it means is that I'm going to look for signals on the higher time frame that are pushing what's happening on the lower time frame. So in this example here, at point B, we were kind of moving sideways in this market, and then we had a breakout signal. Well, if we look back at that same point, which was right here, we were getting a long entry signal on the weekly at the same time we saw the signal on the daily. Well, knowing that there's bullish pressure on the weekly gives us the confidence to jump in here on the daily. So as soon as we broke out of this compression area here, we could feel confident in taking this trade. Even if you took it up here, you still had a nice run higher. And then where do we get out? Well, we would lock in our profits up here because we got into the overextended area here. And that would allow us to maybe follow the previous bar's low, or if you want, just wait until the next golden bar. And that, as you can see, this one closed lower. See how this golden bar follower right here closed lower than it opened. Therefore, we would get out of a long position here. Not a bad run. Okay, so we can see MTP2 is helping us with the multi-time frame convergence and still giving us the signal of when we can confidently take profits. Now, there's other features that we've included in MTP2. You're going to get MQ momentum. And by the way, MQ momentum we sell for $297. The MQ trend we sell for $297. These are built into the Metastock version of this tool. It's the only time that we combine these indicators together when we sell them is when we sell them through Metastock. So you're getting a package when you purchase this. Okay, we use the MQ momentum indicator on every single one of our charts at Basecamp Trading. And you also get that trend ribbon down here. And what we're looking for is a convergence of all these things at once. So we've already got a great tool that we can use by itself. And some of you will still feel a little uncomfortable when you first start trading. So you can use these other tools to help you get even better insight. Let me show you how we can use confluence, which is when we have multiple things telling us the same thing at the same time. So if they're in agreement, we are ready to go. If all three of the things say go, then that's a great signal. If we find out that one of them says go, but the other one says don't go, that's a divergence, and we want to avoid that or take advantage of it to the other direction. So when the three are aligned, like at point A here, okay, at point A, we switched from bearish to bullish on the trend ribbon. At point B, on MQ momentum, momentum is bullish above the midpoint and bearish below the midpoint here. So we went back and we went right back to the 0 point. What this means, we call this a momentum reset. And that means that if it were to run from here, it's ready to run a long way. It's not extended at all, and we can run. Look how it's lining up right with our signal at point C. So now we've got MQ trend, we've got MQ momentum lining up and running higher, and we get a signal. Look what happened. Okay, we got our trail stop here to lock in our gains at that point. That gets us to a possibly a better entry here, or a better stop here, maybe about the same stop. But right here, we closed higher, and look what happened. We just took off. Okay, so using these indicators together can really bring you that much further, although you can use Trender Pro by itself. And this is an example of divergence. First, a little convergence here. We've got a short entry signal right when MQ trend is changing to bearish, and we already have a switch over right at that same point where MQ momentum is dropping into the bearish side. So look how we dropped from there. Momentum dropped. We're in bearish in MQ trend. And right down here, this is interesting. At this point right here, look how price is lower. But look how MQ momentum is already higher. It's risen from down here. That's called a bullish divergence. So at this point, you would be ready for a signal to get out. We got a short exit signal right here. And that was followed by, as soon as we crossed over the bullish line right here, we got a long entry signal. So we got a divergence signal here to give us a heads up that it wasn't going to drop anymore. And we got another convergence or confluence signal where it all came together. We even changed to green on Trender Pro, or an MQ trend here, and up we went. So it's nice when these work together. Now, in Trender Pro, in Metastock, you get a bunch of other tools too. You get the expert advisor. You've got the signals that we talked about. I probably jumped too fast from the expert advisor. We got highlights and signals. It gives you text information that'll change on whatever bar you click on, to give you the detailed instructions of what you want to do, and talks about trail stops and what you want to do. It lays it right out for you. There's our signals that we talked about already. Okay, we've got scans as part of the explorations. There's 4 bullish and 4 bearish scans. These are looking for signals that are ripe and just triggered. Sometimes we look for an extreme jump. That would be in a surge, and also surges that are breaking out the previous 5 and 10 bars, which give us a look back of a week or 2 or half a month. So some really handy ways to be able to scan across the entire market in many different ways here. And we give you a user's guide, which is really a reference guide. And you can see down here, there's an FAQ section, which is towards the bulk of the document after we get through some of the definitions of things. But you have this guide to help you understand it. Ultimately, it's a matter of understanding the colors and taking the signals. Now, you know more about Trender Pro's abilities that can help with your trading. You can, hopefully, I've helped you understand the potential to get clarity, that clarity that you need to get that greater confidence in trading and get those larger gains. And when you have both the clarity and the confidence together, that's when you have transformational changes, because you're going to be able to achieve your trading goals and make it easier to be a successful trader. And yes, I do wish I could have shared this with my dad. He would have loved it. Now, I told you earlier that I'd show you how to unlock a stock market GPS for better trades. And I showed you how you can use our deep technology to trade like a hedge fund, exposing the hidden information that's behind the charts in order to get those massive profits. Now, you can get that and use it on your trading every day. So you can get trades like this. And by the way, this is solo, and solo has dropped quite a bit here. It's only $1. It's about $1 right now in value. Look at the signals. Even on a small chart, you can still get beautiful gains. You can trade larger amounts on smaller charts and still get percentage gains like this. Okay, so this is solo, 3 different good trades on our chart here over the course of a year, giving us multiple entries and exits and lots, or each of the times here, and lots of respectable gains, even though we're in a declining market. So if you're somebody who isn't confident with trading short, this is an opportunity for you. And of course, we have the bigger gains, like this Beyond Meat drop and this Carvana drop. This was a 91% gain, over $300 a share in Carvana, with a signal way up here, and that one's still running. at the time that we took that image, that was still running. Now, why should only hedge funds have access to the cool tools is what I say. Why shouldn't you have that capability? And now that you've seen what the hedge funds are using, the kind of things and tools they're using that they have access to, you can probably see that if you don't have these tools, you're at a disadvantage. So the nice thing is you can get them too. So what do you get here? You get MQ Trender Pro, Metastock add-on, you're going to get MTP2, plus you're going to get MQ Momentum, you're going to get MQ Trend built in via the ribbon, and this comes out to a whopping $17.91, which together we sell as a package for $14.99. And while that might seem like a big number, if you can do the kind of trades that I've showed you, you'll be, I would pay that amount to get the kind of returns that we get every day. I mean, if you could turn around your trading, the potential of what this could do for you is way more than what that cost is. But as part of today's conference, you're not going to pay that. We're going to discount it even more than $500 off. So today we're going to give you as part of this conference special, it's going to be $997. Okay, now remember, just trading one share of some of the examples I showed you today would more than pay for MTP2. And once you have it, you'll have the ability to find your own trades for your own massive gains and do that again and again and again. And who knows, with the added confidence and the predictability that you have from MTP2, you might even have fun in your trading again. Now, I know a lot of you are trading because of inflation. So we're throwing in, as part of this conference special, a extra guide. And this is about dealing with this 40+ year inflationary rate, where now it's imperative that everyone who's trying to increase their income understand what inflation is and how to keep it from stealing your gains. So don't let your wins evaporate. Learn how to manage inflation. This guide will help you do that, and that's included with your purchase. So I wanted to show you this trade. This is an intraday trade. Most of the trades we looked at were on the daily chart, but check out this intraday trade. This is a quick 4.4% gain just in the last couple of days here, where we got in at 11:30, out by 2:30. And it's still a nice 4.4% gain. That's 6 times more than a typical bank would give you if you put your money in there for a full year. Now imagine how your account would grow if you could do these kind of trades day after day, month after month. And there's still the opportunity for big gains too, like this 71% gain. I think it's a 71% gain in Tesla at that time using this technology. Now, like I said, you can add this right now and start using it right now. Okay. Jeff, do we have any questions that I could answer?
We do. We do. Let's see. James and Michael, James and Selby actually are interested in whether it works on different timeframes and what timeframes are recommended.
Great question, because what I did when I built the indicator is I put in my favorite timeframes. And I know most Metastock traders, and I might be wrong about this, but I thought most Metastock traders are trading kind of the higher time frame, not so much intraday. So the default templates that I provide with it are focused on using the daily and the weekly together. That's kind of the sweet spot for multi-day trading. So that template that I showed it typically has the right side chart shows you the daily chart, and the left side shows you the weekly chart for the same symbol. And that's how you can use that multi-time frame convergence.
All right, and then let's see. We have 3 questions that are very, very similar to James, Michael, and Randall. Wants to know if it works with futures and FOREX, and futures in that order. So they're all very similar questions.
So the question is, does it work with other markets other than stocks?
And specifically, the questions were around FOREX and futures. It's about 3 people asking the same question.
Well, remember I told you that we had a trader who said that it was his, I don't know if I told you this, but it was his favorite indicator. And the reason why is because it helped him stay in trades longer. And he was laughing. He actually made over 30,000 in a day, and he was trading futures doing that. And he says, I can't do that again, but he did come close to it again. But it also has to do with the markets being in the right position. It was a couple of years ago in crude. when it happened, around this time of the year, actually, 2 or 3 years ago. But he's a futures trader. So the person at Basecamp who loved the indicator more than anyone else was purely trading futures. He said he had a friend who was doing some of his trading at Amazon. So, it all worked out. So it can work across all those different markets. Forex, to me, it doesn't matter what market you trade in. The tools will work across timeframes and across markets. So it worked just as well. And remember, you get a 30-day money-back guarantee. Give it a try in your favorite markets. If you don't like it, don't use it. But I got a feeling once you see it, you're not going to be able to trade without it. And
I'd love the fact that you let us offer the money-back guarantee. It allows people to try it. If it's helpful, it's helpful. Yeah. It's a pretty easy. I wish I could get a money-back guarantee on some of the trades I make. I'll tell you that.
That would be nice. It's like a rebate.
Exactly. All right. I think that covers most of the questions, and we're kind of getting a little bit low on time, but it's okay. I want to say thank you for coming in today. I'm going to talk a little bit more about kind of like what I like about the add-on, and also I know you're coming back to talk a little bit about the other value charts. I'm gonna give an offer for that too. So, John, right. Thank you for coming. I appreciate it.
You are very welcome. Have a great day, everybody. Make sure you vote.
All right. Thanks, John.
Okay. Bye-bye.
Bye. Okay. Let me go ahead and turn myself back into the presenter here. And then show my screen. All right. And so I actually really like the box art that our marketing team came up with for the Trender Pro. I really like this box. But in addition to the box, it is also a very pretty box, but it's also a very, very nice program. He did talk about all the color coding. I really like how that puts everything together for you and makes just a clear picture. As part of the add-on, and this is a question that we got a little bit earlier too, as part of the add-on, you're really going to get a complete package. You're going to get the MQ Trader Pro, the average true range, the MQ momentum. He showed all of those. You're going to get the expert advisor, and with the expert advisor, we can really do some really cool things to kind of help you understand the chart with the highlights, the symbols, the ribbon. I love the commentary, especially if you're learning something new. Commentary, and I'm not sure that John showed it off as much as I like to, but like with the commentary, and I won't get too lost in this. We had to keep things moving today, but with the commentary over here on the side, it's going to tell you what's going on the chart. It's going to give you an English definition. And John did a really, really good job of actually kind of breaking everything down and kind of giving you a good definition so you can learn it. So it's going to include scanning. You can scan for new long entries. You can scan for the surges. You can do short entries. One of the things that I use Metastock for the most every day that I'm trading is a scan. I want to be able to scan all of those optionable stocks and see which ones have an opportunity. If you're joining us, I know we had a Vinod that was in here from India earlier. You can use this on Indian stocks. You can use it in any of the exchanges that we get from Refinitiv. And there's about 200 global exchanges. There's several 100,000 instruments. And one of the things I love about Metastock and the engine that we've built is that ability to go in. And for me, I like to scan the option stocks, but if, you can scan any market that you're interested in and get these entries and these opportunities. And by far, there's right now, I think there's about 3,500 or so optionable stocks. The ability for me to just ignore 3,200 of those and focus on the ones that have an opportunity is really, really allows us to focus on opportunities we'd otherwise miss, unless you are looking at $3,500 stocks a day. So in any case, I love how simple it is. I love how well it's put together. Normally it's $14.95. Here at the show, it's $9.97. We're going to do it on a money-back guarantee of 30 days. You can get that. You can call us at 800-882-3040. You can visit us online and talk to one of our sales guys, metastock.com/sales chat, or you can go to metastock.com/conf promo to kind of get that set up as well. So John is going to come back, and he's going to talk a little bit about another product that they have a patent on that's called Value Charts. I believe that's on Thursday, but it's another great program. It's another one that they charge $9.97 for. We're going to run a special on both of those products. If you buy them both here at the conference this week, we're going to give you $12.95. So it's $300 more to get both of those products. With that, you're going to get an advanced training class. If you haven't used our award-winning MetaStock software program, it's been rated #1 in its price category for 29 years in a row. We'll give you a free trial to that. We'll help you install it with our white glove installation. We'll give you some training to kind of help you figure out everything. We'll give you unlimited access to our support team, which is fantastic. So you can do both of that. You can call us at 800-882-3040, or you can chat online with us at metastock.com/sales chat. Don't see any questions? So there we go. I want to say thank you again for John for coming in. Let's talk a little bit more about stocks and commodities. As I said at the top of the hour, they're our sponsor for the sessions today. They've been sponsoring us for a number of years. If you do that value chart trender bundle, you're actually going to get 2 years of stocks and commodities for free. Anyway, we love stocks and commodities. They're going to give that to you just for as part of the purchase. They've got 17,000 articles, 1.3 million subscribers. They've been making magazines since 1982. So we really appreciate the work that they've done. And of course, we're Metastock. Like I said, we've been rated #1 29 years in a row. The offer we're doing, if you just want to try out Metastock, you want to see kind of like what all the fuss is about, why it's been so highly rated for so long, you can actually get an extended trial where you buy a month. We'll give you the second and the third month for free. And you can do that at metastock.com/conf-promo. The price on that, if you're here in the US, is $69 for the end of day version. It's about $23 a month to try it out. See how it works for you. And if you're like me, after you're done with that extended trial, you're not going to trade without it. It's just so helpful in helping you find those trades. So metastock.com/conf-promo, metastock.com/sales chat, or 800-882-3040. Kelly, let's give away a prize, man. Are you ready?
Ready.
All right. You know what I'm going to give away right now?
Oh, no. Let's hear it. What is it?
Deal, thanks for the question. It comes with data. That pricing includes data. So you don't need to worry about plugging in your Ameritrade data. It comes with data. Have you heard of Wendy Kirkland?
I have. Wendy Kirkland stuff is awesome.
Yeah, okay. So she's actually speaking next, but we really, I love Wendy. I love kind of the thing that she's going to talk about. But what we're going to do now is we're going to give a year complimentary subscription to her flagship trading newsletter. And this is a newsletter that comes weekly, and it's a list of every stock flagged by Wendy Kirkland's weekly system that's on the verge of. And those stocks, she's going to talk a little bit about one of her methodologies today. These are generally stocks that are primed for a good move. So the value on that is $468. And Kelly, let's keep things moving. Give me a number anywhere between 1 and 10,407.
Let's go with an early registrant. Let's go 866.
And that is Jerry G. Looks like you have a Roadrunner address. We're trying to kind of not dox you. So, Jerry, I'm going to reach out to you in terms of getting that prize. Watch for an email within the next week or so from us. And congratulations. You're a winner. Okay, and just a few. Wendy is coming right up, Dana. So there you go. And yes, you can use that Metastock with the FOREX market raw. So thank you. Speaking of Wendy, Wendy is a good friend of mine. I really like the story. She actually was running. Let's see if I can get the details on this right from memory. She was running a bookshop, and I think the words that were in her bio were eclectic bookshop. She had an act. I think it flooded from one of the hurricanes that went through the mountains, and that's how she started trading. So, how you doing, Wendy? I can hear you.
I'm great. I'm so excited to be here.
Well, it's great to have you. Let me make you the presenter. I always love having you here, but I think we should have you talk more often. All right. So I just sent the presentation over to you. I can see your slideshow.
All right. There it is.
Perfect. All right. I'm going to go ahead and get out of the way. It's all yours.
All right. Well, thank you very much. I'm so excited to be here and to talk about option trading and how it helped change my life in a sense. That we're going to discuss some indicators that you all offer on Metastock that has really, really helped to simplify my trading. And let me get started here. Get a pen and do that. And so for those of you who do not know me, I have been trading and teaching for about 15 years. And as Jeffrey mentioned, I don't come from a financial background. I am an everyday person, and I'm actually an artist. The shop that we had was not a bookshop. It was actually a gift store. And so my husband carved decoy ducks and birds, and I did the painting on them and other artwork. And there was a hurricane-related flood in our area. I live in North Carolina, and it does not flood in the mountains. And so it is very odd to be able to say this, but that flood ended up being the greatest gift. So it has totally changed my viewpoint on how things happen. If something negative happens to me, I don't necessarily sit and think, oh my gosh, this is awful. I am kind of at a neutral point to say, what good is going to come out of this? Because at that point, a friend took me to some classes, and it was like a 5-session thing. So I learned what option trading was. And then from there, really jumped in and started to study, and it totally, totally changed our lives. We were able to bring the gift shop back. We didn't have insurance, so we didn't know what we were going to do. And we were able to bring the shop back. Jack continued to work, and I traded options. And then, out of gratitude, in a sense, I wrote a couple books so that I could give back and share with other people. There's a couple books that are on Amazon, Exploring Your Options and Perfect Storm. And I spend a lot of time every week teaching. So here I am, I'm with you, and we're going to discuss the elements of successful trading. And it doesn't matter whether you use these charts or the process for stocks, trading options, futures, or Forex. What we're going to focus on is that the indicators and all that we're going to discuss help to pinpoint equities with consistent big moves. You don't want to get involved with stocks that are just going to move a few pennies and then down and up and down. You want stocks that are going to have consistent big moves. So it also zeroes in on equities that are overbought or oversold. And we're going to talk more about that. Find equities that have formed a top or a bottom, have reversed, and then started a new trend. So this is getting into stocks that are going to have bigger moves, and to enter trades that then have given a confirmed entry signal. That you don't want to just get in because you think it's a good idea to get in. You want to know that there is a reason, a confirmed signal for getting in. All right, so there's some folks, I heard you all earlier talking about Forex and futures and so on. There's a lot of people that just really don't understand what an option is. And so we're going to go through this just real quick. But in a sense, it is like renting a stock for a set period of time. So there are two types. of options. One is a call option. That is what you get in when you expect price is going to rise and go up. So it gives you, the buyer, the right to require the grantor to sell the equity to you at the agreed upon price at an agreed upon time, no matter how high the price is when you decide to sell the option. They must sell it to you at the agreed upon price, and you in turn sell it for the higher price and keep the difference. The buy and the sell happens behind the scenes at the broker for you when you decide to close the trade. So the second type of option then is what is called a put option. And this is when you expect the price of a stock to drop. And it gives you the right to require the grantor to buy the equity from you at the agreed upon price, at the agreed upon time, no matter how low the price is when you decide to sell the option. They must buy it from you at that agreed upon price, and you in turn buy it at the lower price and keep the difference. The sell and buy happens behind the scenes for you when you decide to close the trade. Okay, so let's look at an example of the pricing. And then we're going to get into what the charts look like. But this is to show you how this all works. If you purchase options, and we're going to look at Bristol Myers here, BMY, the pharmacy company, and its stock, when I typed this up, was priced at $72. So you're interested in contracts for the 75 strike. That's a little bit higher than the 72 current price. And because you feel the price is ready to move up, you pay $1.25 per share for the 100-share contract, the call contract, that it expires in 2 months. And for the $125 per contract, you're decided that you're going to buy 4 contracts for $500. In a sense, like I said before, you can think of options as a way to rent stocks for a set period of time. In this particular example, we're talking about renting them for 2 months. And so whatever happens with price, we can decide to sell anywhere along the line. So the stock goes up from $72 up to $76. And your premium is now worth $4.25 per share when you decide to sell. Your premium has gained $3 of the $4 price move. The transaction happens behind the scenes at the brokerage or at the exchange. You paid $1.25 and you sell for $4.25. And that means you keep the $3 per share difference. So you have 400 shares because you bought 4 contracts. Each contract is 100 shares. And that means that you realize $1,200. That is your gain on your $500 investment. So that is a profit of 240%. So this is the extra leverage that option trading can give you, that had you bought 400 shares of a stock that costs $72, you're talking about thousands of dollars investment. And yet here what you invested was the $500. All right. So with Metastock here, their indicators we have designed and all to help you find equities that have big moves. And to do that, we are using the average true range indicator. And what it is going to tell you is how much a stock moves on average per day. And so I like to zero in on stocks that move more than 2% per day. I'm not really interested in the stocks that move a few pennies, you know, a few pennies up, a few pennies down, a quarter up, a quarter down. That I don't want that. I want stocks that are going to have big moves per day. And so the average true range indicator here is down here. And you can see that this is Salesforce, and it moves about $6.20 per day. And so that is way over what the 2% would be. So this makes this a really, really great candidate. And so this indicator is very easy to read. There is a scan through Metastock, and we'll talk about this more later, but just to say you can scan, and their program will list the equities that have the required price move, so that you're only paying attention to the stocks that on average have a move of 2% or higher. And again, you can see that there's some stocks like Salesforce that has big moves. All right. So again, this is, we'll skim this real quick, but again, you can create a watch list of stocks that have the big moves, so that you're not spending a lot of time looking at each stock and saying, oh, well, this one only moves 1%, and this is only 0.5%. Oh, there's one for 3%. So this is helping you really zero in on the ones that have the big moves. All right, so now we're getting into my indicators that I use for trading. And so the first one we're going to discuss is the Kirkland Commodity Channel Index, the CCI. And you can see here on the chart, I have drawn in lines at 100 and at minus 100. And so I call these areas where it pops up over the 100 line or down below the minus 100 line, I call those fins. I think of them almost as like dolphin fins or shark fins, where once it gets above this, between the lines, that is creating a fin to say that this is way overbought. And then usually it starts down. Here it is way oversold, and that often is the indicator where it starts heading up. Again, very easy to read, very easy to use this information. And so it is part of my chart setup to be able to, and we'll cover the whole big picture in a few minutes, but I just want you to be able to start recognizing the information that these indicators show you and tell you. Again, I try to have things be simple. I like them to create a picture. I like them to tell me a story of what is going to happen to price. I don't want to have to be doing a lot of calculations and so on. I want it to happen for me. All right. So the next one is the Kirkland Percentage Price Oscillator, the PPO. And that is the one that is down here kind of in the middle, that we have the blue line and the red line, and they cross up and over each other. The crosses suggest a new direction. So as this cross down here is telling me that price is going to drop. Here it crossed up a little bit, then went flat, then finally got some white space between the lines, again kind of flat, but it still stayed above the blue line, and then finally rose. And you can see up here that this is the price rose, say from 140 up to 160. back here where we were talking about the drop, it dropped from maybe 190 down here to maybe 155. You know, that would have been an awesome trade. Getting in somewhere in here and this rise would have been an awesome trade. So this is just, again, one element in addition to zeroing in on the stocks that have the big price moves to tell us when direction is getting ready to change from going down or going up. So we move on here. The Kirkland oscillator then confirms when the moves are actually going to start to take place. So we still have the PPO here that is suggesting and maybe giving us an early signal. Okay, get ready. This looks like it's getting ready to go up. So on the Kirkland oscillator, I have some lines drawn, and when it actually crosses up and over, that then is an entry signal. When it crosses down, that is, this would be a call entry signal. This would be a put entry signal. And so this is what I actually use, the Kirkland oscillator, for my entries on trades. And so again, I'm taking in the information. Maybe the Kirkland PPO is giving me a heads up. Can look over here and see that that crossed up a little bit ahead of time. But I might have then been in this trade for maybe 2 weeks before it actually started to head up. And during that time, I would have had some time decay. So it is much better to get in when it really, really is getting down to business and is going up. And it's the same for when price is getting ready to drop. All right. So let's put it all together. That this is Newmont Corp. And then I go over here to the left side of the chart. Can see that the PPO maybe was flat here a week or so ahead of the Kirkland oscillator. But when it crossed up, that would have been my entry. And it rose, flattened out, rose again, and could have gotten out at any point here. You would have made money if you'd gotten out here at the first time that it started to flatten out and to head down. If you held a little longer, you would have made a little more. But anywhere along here, depending on what your objective and goals was, you would have made money. Here is your put entry. And so this is one of the points and the reason I've had these extra circles on here. So on the Kirkland PPO, you can see that it crossed down here and had this nice drop, but then it actually crossed up again. And then it crossed down, kind of stayed laying on top of each other, but crossed down with some white space between the lines, and then another cross up here. And yet, if you look at the Kirkland oscillator, it came up and it touched right there, but then it stayed down this whole time. So had you purchased enough time, you know, if you'd bought an option and you only bought 2 months out, you would have needed to sell here in June. But if you had bought and had enough time, this trade continued to drop for this whole period of time. And this is how the Kirkland oscillator can really, really show the kind of the fine tuning of price moves. All right. So we're going to kind of take a trade here right from the start and see how this works out. This is LYFT lift, and can see that we'll just start here at the top. The CCI was showing that this has been oversold for a period of time. And so usually when something has been dropping for a while, then from there it adjusts and it starts moving up. So the PPO has crossed up, says a new direction is starting. It is now bullish. And you can see this one up, it touched, it continued up, touched again, more white space. And yet, when we look down here at the Kirkland oscillator, can see that it never actually really crossed. Here it's getting close, but it still hadn't. And had you gotten into a call trade here with this PPO, look what happened with price. It just kind of flattened, dropped a little more. It never really, despite the fact that this is saying that it's bullish, price never actually rose. So you're waiting for the Kirkland oscillator to cross up over the line in order to show that it's time for an entry. So let's continue on here. And you can see that this again still shows the PPO had crossed way back here. So finally, the Kirkland oscillator crossed up. This would have been our entry. Crossed up, and I don't know, like a week later, kind of flattened out here, right there, and then crossed down. So chances are, had I entered this trade, would have gotten in here and probably closed right in this area when it started to slope down. So let's see what happened. So price went up $7 in 6 days, right up here. Rose that little bit. Can see on the CCI that here it started that fin, that's what I was calling it, remember, like a shark fin or a dolphin fin. And so this is when it started to go flat and then start heading down. Still, the PPO was up, had white space between it, but it started flattening out as well. And then you can see that the Kirkland oscillator kind of made a peak and saying, okay, we have risen, and we've risen about as far as we're going to go, and now we're starting to head down. And so it is sloping down, and that is where would have exited. Oh, oops. So let's look at what happened. So my goal is to zero in on stocks that are going to have a sizable enough move to make a good profit. And so a 2.5% to 4% equity move often equates to a double in weekly option premiums. 8 to 10% move often equals to a double when you're trading monthly option premiums. So if you're planning on holding for a longer period of time. So this is lift. This is what we were just looking at. You purchase calls after open on August 1st when the Kirkland oscillator crossed through that touch zone for $1.15 a share, or that's $115 per contract for the October week 4 expiration. And we're purchasing the 15 strike call. And let's say we just bought 4 contracts for a total investment of $460. We sell after open on August 8th. The call contract was worth $4.75 per share, or $475 per contract, or $1,840 for the 4 contracts we bought, which is a gain of $375 per contract for a total gain of $1,500 or 313%. So that little move for over that week period gained 313%. Again, this is kind of like renting stocks, and yet you're gaining a good percent of the price move. So price when we entered the trade was about $15, and we sold, it was $21.50. So that's a $6.50 change in price. That's a 43% increase in the stock's price, while our option increased 313%. That is the leverage of option trading. So for an investment of $460, we controlled $6,000 worth of stocks. And had we placed that same $6,000 investment into options, now that would be a huge trade, but all right, come on. You would have ended up being able to purchase 52 contracts, and that would have earned $19,000. That's just wild. But again, it shows you the leverage that option trading offers, that you're, in a sense, being able to trade and get in at bargain prices, if you want to think of it that way, and yet to be able to make really, really nice profits. All right. So here's another trade example. This is Goldman Sachs. And we start here and we can see that the CCI is rising. You can see back here this lower fin, and then it crosses over the minus 100 line, and it still hasn't gotten up here to cross the 100 line, but it is rising. Here the PPO just crossed up, but the Kirkland oscillator is still down. It has not touched, nor has it gotten up and over the lines. Again, the average true range, the ATR, is telling us that this is an equity that has big price moves, because that's what we want to zero in on, are the stocks that have the big price moves. All right. So let's see what happened next. It started to go up. I can look up here at price and see that it rose, and then it started to head down. You can see that the CCI came right up here to the 100 line and then dropped back down kind of to the middle. The PPO it crossed up here, but then just kind of flattened out. And the Kirkland oscillator did exactly the same thing. Look at how it crossed up over the lower line and then just flattened and never actually crossed up and over the top line. So during this time period that this is, say from the 29th of June to July 6th, it would have been having time decay. And so price would have been, the premium would have been declining while we're in the trade, and that you might have decided, well, you know, this is not doing what I thought it was going to do, and go ahead and close it. Or it would have had that much to regain when it did start moving. So price rose after the Kirkland signal cross. So here again, we can look at this and say, there was that fin that we were talking about. Here it created another fin. This is where, you know, it looked like it was going to cross up here, but it didn't. PPO kind of touched, maybe it actually crossed down there a little bit. And then there, finally, it crossed up and over the Kirkland oscillator lines. And that was on July 18th. And so that is the point where we would have entered the trade, is when it actually crossed up and over the lines right there. Okay, let's move and see how it, well, I can show you right here. Anyway, I didn't actually focus on the candles. So this is that area where it failed. This is where we would have entered. And then it rose, kind of flattened out here for a period of time. And this is when the CCI really started heading down and actually crossed over that 100 line, creating this fin, as I call them. And that is about the period where we would have entered. It's the same period where you can see here that the Kirkland oscillator started sloping down. Okay, so the Goldman Sachs trade had you purchase calls after opening on July 18th, when the Kirkland oscillator crossed through the touch zone for $10.50 a share, or $1,050 per contract for the October 21st expiration on the 300 strike call. And let's say we just bought one contract, because this is the price of your equity, for a total investment of $1,050. We sell at the end of the day on August 18th. The call contract was then worth $35 or $3,500 total for that one contract, which is a gain of $2,450 or 233% gain for that period of time. So Goldman Sachs price when we entered was $300, and when we sold it was $350. So that's a $50 change in price, which is a nice gain, 16.6% increase in the stock's price over that trading period. Yet the option increased 233%. So for an investment of $1,050, we controlled $30,000 worth of Goldman Sachs stock. And had we placed that same stock investment in options, you could have purchased 28 contracts and earned $68,600 in profit. Now, I don't know anybody really that would invest like that. But again, what this is doing is showing you the leverage of options. All right. So let's look at a put option. Again, I will remind you that a put option is when you anticipate or expect that price is going to drop, that there is going to be a move down. So can see here that price had been dropping for a week or so. The CCI did this little tiny fin. It dropped down below the 100 line, but it didn't make not a big fin like that, but it dropped down below. The PPO crossed down and the Kirkland oscillator crossed down. So all of these kind of confirmed each other, that instead of the PPO crossing down and then there being a week wait or something for the Kirkland oscillator to cross, they all pretty much did their thing at the same time. So let's see what happened next then. So I say, all right. So this is the area where we would have entered when the Kirkland oscillator dropped. Look how it kind of rose and touched right there, but didn't cross up and over. That is this little area right here where we got in, and it for a couple days after getting in, it just kind of flattened out, and then it dropped. And here you can see it started creating that fin where it dropped to a low and then started heading up. And so this is the cue. Okay, things are changing. I have a profit. Rather than giving any of it back, I'm going to go ahead and exit. And you can see that the PPO here kind of flattened out a little bit and then started to head up. And the same with the Kirkland oscillator, that it started to head up. So this would have been a way to capitalize on a put option to earn money while price of the equity is dropping. So this is the results. This is, again, was Halliburton. You purchased puts after the open on September 7th when the Kirkland oscillator crossed through that touch zone and went down for $1.82 a share. And so for the 100 shares is $182 per contract for the November 18th, 27 put. And let's say we bought 3 contracts for a total investment of $546. We sell at the end of the day on September 27th. It still had all the way till November to go, but we closed early, and the put contracts were then worth $3.91 or $2.09 profit, or $209 per contract times the 3 contracts, or $627, which is 115% gain. So to kind of start wrapping this up a little bit, the strategy finds equities that are ready to move. It keeps it simple. It keeps it easy. It keeps it readable for everyday kind of traders. It is zeroing in again on stocks with consistent moves. It's looking for stocks that are overbought or oversold, meaning that they have a way to go to recover to previous levels. It has put in a bottom or a top and are reversing and beginning a new trend. That is what that Kirkland oscillator shows. When it makes that peak and turns up and then crosses the lines, that is what it is telling you. And it gives you then that confirmed entry signal. It cuts out all the false starts, or most of them, and the shakeouts, and the trades hitting stops and then having to sell and then re-enter if you decide again. So the whole setup of indicators creates this, I almost feel like it tells you a story. Tells you when a move is starting. It tells you that it has been overbought or oversold and is getting ready to move in a different direction. And then it zeroes in on when that main move is getting ready to start. All right. So here, I'm going to talk about these very quickly, and then I know that Jeff will jump in and give you more specific information about what Metastock offers and more information about the charts. But here you can look and see that this has the Kirkland oscillator. This is just a very simple chart. Has the lines drawn in here, and so you're looking for, here's a cross up. This is where you would buy, and look at how that rose. Then here's and you could have gotten out at any point when you earned the profit that you wanted to make. Here again, cross up created this big fin up. Then it dropped down. If you had entered a put, you could have gotten in there and ridden it down. Here again, it's crossed up. There crossed up, little test right there, and then climbed up. You could hardly get anything that is more simple than this. And of course, there are the other indicators, and they can be added. Here is a put. So it's marked as a sell, but this is a put option. You can see here, this is where it dropped down. Enter and write it down. Here again, cross down right there. It rose up and touched, but did not actually cross that upper line. And then dropped and created this fin. Here's a place where you could have bought and gotten into a call option. And so not only is the indicator very easy to read, but you have this bars of saying, look, it's bearish, it's bullish, and it is telling you a very, very clear story. All right, here's a more intricate version of the chart that has all of the indicators on that we were looking at earlier. So you have the CCI, where I was talking about making fins. You have the bar here telling you that it's bullish and bearish. You have the Kirkland PPO, where sometimes the crosses happen a little bit ahead of time. And then you have the Kirkland oscillator, that this is really telling you where you're going to enter for call trades and enter for puts and so on. And then you have the average true range that is helping you to focus on stocks that have just the big moves. And so over here, you can see that the information is right here. This is telling you what the ATR is. And as far as the Kirkland oscillator, it's telling you bullish, PPO is bearish. So you don't even have to really look at the charts. It is telling you the information. All right. And so this then gives you the idea of how you can create a list that Metastock will, you put in the criteria of what you want, that you want stocks that are going to have a 2% per day move, and those are the ones that you want to focus on, and that will create a list for you. Jeff, are you there to be able to add to this?
I am. Wendy, thank you so much. We do have a couple questions. I don't, let's see. Is it okay if I ask you a couple questions?
Oh, sure. No, it's perfect.
Cool. Dana wanted to know if the Kirkland oscillator is the same thing as the true strength indicator.
No, not exactly. Not
Okay.
exactly.
She also wanted to know if you share the settings for CCI and PPO that you're using, or if those are proprietary.
I guess that I mean, all of a sudden my brain is going. I think maybe CCI is 34. I can't think what the PPO is, but I don't have any problem if you want to share that information at some point.
Okay. I don't know, Dana, but if you email me, I'll find out. So
yeah, I just glanced and I'm not seeing it listed there. So and my mind has shifted it, so I don't know the specifics.
Perfect. I just sent her my email address. I'll dig into it. I just wanted to make sure it wasn't a secret.
Sure.
So Alfred wanted to know how the scanner works. I'm going to show that a little bit by myself. But Wendy, that was awesome. I really appreciate you coming in. That's awesome.
I'm always so happy to be here and to share. So everybody have a great day. Happy trading.
Okay. Thanks, Wendy.
Bye.
Bye. All right, let me show you how the scanning kind of works in here as well. Alfred, thank you for the question about scanning and how that works. Let me go ahead and just answer it for you. And let me make myself the presenter too. So let me go ahead and change presenter to me. Turn on this, show this screen. Okay, and here you go. Okay, so as you can see, I've run a scan. I just ran a scan against about 518 securities. But what I'm going to do is actually close this down. I wanted to make sure that it would return some results. So that's why I pre-ran it. In here, I'm just looking at our Power Console. This is our scanner. So anytime you want to run a scan, you run a scan. You click on the exploration. And that's really kind of the tool that we call our scanner, really. Okay, what I've done in here, there's actually hundreds of different explorations that are in here. And what I wanted to do is I'll Wendy Kirkland scan start with WK. So if I type in WK up here, it's going to just list the ones. Yeah, there's 2 explorations that come as part of the program. This is a pre-filter, and if I hover over it, it's going to tell me that it's going to look for stocks that are greater than $25 and that have a volume greater than 950,000 average volume. Yeah, that's right. I had to see if there was a correct, if I was reading that right. So generally with that one, like you could run that like once a quarter or so and just kind of build a list of stocks that are more than 25 bucks and have a volume greater than that. And that's not something that you'd run on a daily basis, but it's certainly something that you could run. And it falls in line with the type and the caliber of stocks that Wendy would want to trade. So if we come in here, this is the actual one that you can run for the swing trading. And basically, I'm just going to run it. One of the things I want to point out here, too, is due to the fact that we have just so many exchanges that are available inside of the program, there's actually 321,122 stocks or futures or currencies or coins or things like that that I could scan. And that's just because we get the data from Refinitiv. Like if you're, it doesn't matter where you are in the world, and this has been very beneficial because of the relationship we have with Refinitiv. You can use this anywhere you want. So like, for example, if you're an Asian, you're interested in the Singapore exchange, you can just come in here to Asia. You can find the Singapore exchange. I can't remember what it's called exactly. Oh, I thought it was the Singapore exchange. So you could just scan the Singapore exchange. We also have the Indian exchange with London. We have Australia. These are all big markets for us. But the point I'm trying to make is if you're interested in those particular markets or something that's out of the US, this is a good product to use for it. In addition, I like the way that we've organized kind of the list. I like the way that the programmers have kind of laid this out. For example, I'm in North America. Actually, we're right here in Salt Lake City, and I'm an options trader. So if I wanted to come in here and just scan all of the options, I have a list right here of all the optionable stocks. And right now there's 5,832 of them. I could do all the ETFs. I could do all the mutual funds. I could do NASDAQ, New York Stock Exchange. You can come in here and find exactly the markets that I want to trade. Okay, what I'm going to do just to kind of keep things, and then of course we have futures, indices. I'm going to do index constituents. I'm going to keep the list a little bit small. What I've done is I've come in here to index constituents. I'm going to look at the components of the Dow, the S&P 500, and the NASDAQ 100. I'm going to run that scan, and it should run very, very quickly. I'm going to take a little sip of this, but it's going to go through 526 securities. And what it's doing, that could be 5,000 if you want, but it's actually rejecting 98% of these. And so what it's going to do is going to build us a list that we can focus on. In other words, we're taking out the trash. We want to be able to focus on the opportunity. You know, you probably don't. You might be able to look at 526 stocks and kind of look at them and evaluate them for their roles, but this will do it for you. And what this really allows me to do is it allows me to come up with the 8. See, it says 8 right here. 8 that actually have an opportunity to ignore the rest. So with Wendy's system, I love the fact that she looks at average true range. If I want to find something that has a good daily move, I can actually short sort it by this average true range column. The biggest daily mover on this that has an opportunity moves 13 points a day. It's Netflix, has a short opportunity right now. So I could go ahead and open that up. If I'm looking for more of a long opportunity, I can just look at the ones that have a long one in this column. That would be Allstate, ATR 4, Dish Network, ATR 0.2, JD.com, and you kind of get the idea here. Okay, so based on this whole list, I think like Allstate might be one that I would want to look at. I could open up the chart, and why not? Let's go ahead and open that up. I might have to apply her indicators to it. I'm going to. So once this loads up, I'm going to go ahead and apply the Wendy Kirkland template, and we can kind of see exactly what. Now, this isn't advice. We're not giving any advice today, but like if we were looking at kind of doing this, I'm going to go ahead and close the layout and discard changes. Right here, it's going to say that there is a buy signal. I don't like this from the look at it. It looks like it's a bit choppy. I like to look to the left. But if I did like it, we would see that there's a buy signal. Right now, the PPO is bullish. The Kirkland oscillator is bullish. The automatic swing trader is currently indicating a buy opportunity. If trading stocks, the closing price or daily volume are lower than recommended for this type of trade. So saying, well, the price is okay, but the volume is not. And kind of gives us a bunch of different advice in terms of like what options we could look in, what kind of term we should be looking at, and all that kind of stuff is actually just well written and well put together for her. Dana says as a member of her Gemini trading, she uses 1238 for PPO on some occasions and different numbers on some others. Thank you for that, Dana. I appreciate that. That's some good feedback. I'm going to go ahead and post that to the group so everybody can see it. All right. So with it, again, don't buy Allstate. I don't like this one. I'll watch it. I'll look at Allstate in another month and it'll be doubled or something. But yeah, we were able to kind of identify this as an opportunity. We were able to look at it because it had the average true range. Out of the 538 stocks, we may or may not like it. We may or may not want to trade it. I could go look at Netflix and see what I like about that, or it allows me to focus. And for me, I work quite a bit. And I want to be able to focus on the opportunities and just ignore the noise. And I think for me, that's why one of the things I love about MetaStock so much is just that ability to kind of filter it all out. So with Wendy Kirkland's automatic swing trader, again, it helps you find the highest potential using ATR, looks at them for a turning point, notifies you when the trend, and helps protect you with whipsaws. And I really like that she has a specific like ATR for the high potential. And really, really specifically has put a lot of thought into kind of how that's put together. Wendy does a great job. So it's going to include the automatic swing trader is going to include all of the indicators you need to run this, the PPO, the Kirkland oscillator, the experts that are going to give you the signals and English instructions, the scans, templates, everything you need to run it. And with it, it's only like a one-time cost. People yesterday were asking, okay, well, is this a cost I pay every month? No, this is a one-time cost. So you pay one time. It costs $499. We're going to discount that to $399. We're going to back it with a money-back guarantee so you can try it. If you kind of like the ideas and it's helpful for you, it's only $400. If you don't have MetaStock and you want to try out our award-winning software, it's been rated #1 30 years in a row. We'll include a trial, free trial. We'll include the data that you need to run it, so you don't need to worry about porting your data over it from TD, Ameritrade, or whatever. We're going to help you install it. We're going to give you unlimited access to our support team, which does a phenomenal job in keeping people running with MetaStock. We'll even give you some training as part of it. So all of that is only $399 as part of the conference. You can go to metastock.com/conf promo. You can call us at 800-882-3040, or you can visit us at metastock.com/saleschat. So I'll just put the link here. If you do have questions, or if you want to see this on, one of the other things that we're happy to do is if you want to see some charts with some of the signals, if you just come into our chat group, metastock.com/saleschat, they'll actually pull any chart that you're interested in and kind of send you some charts and send you some examples, or answer any questions that you have. So give us a call, 800-882-3040, metastock.com/saleschat, metastock.com/comp promo. So, and thank you to Kelly back there for putting all of that information in the YouTube link. I appreciate it. Makes it a little bit easier for me. Let me go ahead and for this one, I do want to spend a little bit of time talking about our conference sponsor, CMT. CMT has been supporting, they started supporting and sponsoring the events at our November conference in 2021. I don't know why I was going to say it that way. Last year, they've been sponsoring all of our events for about a year. We do this conference, this big long conference, twice a year, usually in May and November. We also have one that we do every single month. If you're watching us on YouTube, hit like and subscribe, and you can be notified every time we do one of these. Or better yet, if you want to be eligible for any of our fantastic prizes, go to metastock.com/traders-conference. Kelly's going to put that in the link for you too. And that way we can kind of email you when we're doing these awesome conferences. We're going to give away a prize right now. Oh, before I forget, CMTO Association is awesome. They've done a great job. They do a really good accreditation program. They're a nonprofit organization. And if you want to find out more about them, go to cmtassociation.org. So Dana says, I'm new to Metastock. If we buy the Wendy Kirkland package, do we need to buy Metastock as well? That's a really good question, Dana. I appreciate it. You will need a subscription to Metastock, which is our software program. Subscription rates will include that as a free trial as part of your Wendy Kirkland purchase. The rates for that start at about $69 for our end of day version. And again, we'll include that cost for you for the first month. You can also do an extended trial where you buy a month and get a second and third month for free, which makes it about $23 a month to evaluate it for 3 months. But it's only $69 a month, so, and there is a subscription as well. So yes, you would need Metastock. So, and thank you for that question. I appreciate it. All right, Kelly, should we give away a prize?
I think it'd be very kind if we did.
All right, cool. I wondered for a second if you were there. I was gonna maybe just pick a number.
Sorry,
up
I was busy answering questions on the YouTube side. It took me a second.
Awesome. No, you're totally fine. I always get stuck trying to find the mute button. That's where I get stuck. Too. So. Dude, I'm going to give away, we're going to do another one of the Norm Hallett's leather-bound gold leaf journal. So, okay, Norm Hallett's going to talk. He's going to talk on Friday. His website is The Disciplined Trader. And with this particular one, obviously he talks a lot about discipline. But here's the description. We urge our traders not just to journal their trading experience, but also to do it in a journal that you can be proud of. It's a reflection of who you are. And it's good. So in your honor, we've created the most professional, high-quality trading journal on the market, from the beautiful gold leaf pages to the gold embossed logo on the cover. This leather journal screams success. So the value of this, if you go to the Disciplined Trader and buy it, is $129. We're going to give you a free one, or we're going to give away one for free. Not necessarily. Let's find out who the winner is, though. So it's actually really cool.
Do I get to choose my number?
Yeah, do you want to do, the winner is Kelly. Kelly C. No, I'm kidding. Any number between 1 and 10,407.
6766.
6766. 6766. Okay, and that would be Fu T. So I am going to send you a message. Within the next week or so, Mr. Futi. Looks like you're located in Singapore. We'll get you some information on how you can claim that prize. Congratulations. That's actually a cool one. I wish I could win that. You can ask for a copy.
Agreed.
So, all right. Thank you, Kelly. Let's go ahead and move here. Of course, we're Metastock. Thank you for coming to our conference. I hope you're enjoying it. As I might have mentioned a little bit earlier, we've been rated #1 in our price category 29 years in a row. Scanning, testing. Our patented forecaster does a really good job. There's a reason it's been rated #1 in its price category for so long. We've been working pretty hard on it. We just introduced one of my favorite upgrades. Just 18 is amazing. $69 per month. If you buy 1 month, we'll give you the second and the third month for free. You can do that at metastock.com/conf promo. You can do that at metastock.com/sales chat. You can call us at 800-882-3040. Let's move on. Let's get back to the good stuff. Rick Sadler is joining us. Rick Sadler actually started his trading career as a student to Steve Bigelow. He's actually the person that created the T-line. And he's going to talk a lot about the patterns that we've built into Metastock and the patterns that he likes to trade. And so with that being said, Rick, let's get you started. How are you doing today? I think I just muted you.
How are you?
Yeah, Rick, how you doing?
I'm doing well. Thank you very much. Appreciate it. Thanks for having me on. And how you doing there? I see you. You look good. You're looking real good.
Thank you. I'll send the money, the $5 in the mail for the compliment.
Yeah. I'll spend it wisely. I'll spend it wisely. Yeah.
David, to your point, the screen says 59 and I said 69. If you're international and you want non-US data, it's actually $59 per month. But I say 69 because most of the people that sign up are in the US, and that's where the pricing starts for them. So thank you for that question. And that's a very observant of you. I'd rather say the higher price than have you be come in with a lower price. So anyway, Rick, we can see you.
Oh, okay.
I need to turn down the brightness and contrast. So I look like an angel, but I'm going to go ahead and get out of your way.
You can see me personally, or you can see my screen?
We can see your screen. I can't see.
Oh, okay.
I just your video
I
camera's not on.
Didn't want to pick my nose if you could see me personally. So.
No, we don't see that. So, all right, I'm going to get out of your way. It's all yours.
All right. Hey, everybody. My name is Rick Sadler. Thank you so very much, Jeff and Metastock, for inviting me here. I do appreciate it. Hey, before we get started, I want to give a big piece of advice for everybody. The last few days have been quite stressful for me. You have no idea. Friday, I lost my hard drive on my computer, and I can't stress enough how to stick with backups. I just want to throw that out there. I know it has nothing to do with our trading per se or anything, but I've spent all weekend, last few days, just pulling my hair out, and so needless to say, I had to recreate some slides, and because I was not that good about creating those backups. So let me tell you right now, folks, do a backup system and stick with it. So, all right. Again, thanks for inviting me here. My name is Rick Sadler. I am the founder of Hit and Run Candlesticks. Thank you so very much. Again, please be patient here. Part of my whole system's not even working yet, so we'll try to get through this. Hey, look, one of the things I want to talk about is, well, the 9 principles of trading. I could sit here. We could look at charts all day long. I could show you what I'm looking at. The truth of it is, I think it doesn't stick. All right, it really does not stick. This is why we're offering a 30-day free trial, 100% member for 30 days. And for those 30 days, I will do everything I possibly can. Bend over backwards, work on the weekend if you would like some private coaching to get you squared away on what we do. And what we do is quite simple. Simplicity is something that I think is so important in trading. Some of the things you'll be learning about is a 3/8 trap. We'll talk more about this in a little bit. Bullish or bearish. Goodness gracious, we certainly need the bearish setups in this market, don't we? Another favorite is a below the highest high in the past 5 days, or if we're looking at something bearish, above the lowest low in the past 5 days. Rounded bottom breakout setups is one of my absolute favorite chart setups. In fact, we traded GDX already today in the rounded bottom breakout, and made a good tidy sum of money. If you follow us on social media, Facebook, Twitter, anything like that, you'll know we already posted it out there. We also posted out there over the weekend some charts with targets, and GDX was one of them, and it hit our first target today. Pinball setups. The pinball setup is my the first setup that I truly ever made money on. It is what I use as leverage to actually convince my wife that, hey, I want to try this trading for a living. And then the story goes on from there. The Trendicator. This is something that I just several days ago, I emailed Jeff and I said, hey, Jeff, I've got a couple of things I would like to add to our program here on Metastock. And he said, fantastic, wonderful, but they are busy and we'll set something up to just after first of the year. But I've got some great things to put in there in our package to help with that. And then, of course, we've got our app where we send out alerts and trade logic videos. Trade logic videos are, when we send out alert, we might send out an alert that reads something like this right here. I'm looking for one. There we go. Bought GDX January calls 24 strike. About 5 minutes after that, I will send out a trade logic video that lasts a minute to a minute and a half, maybe 2 minutes long, and it will read GDX trade logic video with the current date and a link. You click on that, and there's this short video on why we're trading it, what we're doing, what we like about it, and so on and so on. So really take advantage of it. It's free. Okay. I want to talk about the 9 basic principles, and this is important. I've been trading over 30 years now, 33, I think. One thing I've discovered about myself and many other traders is that when you start out trading, you really think that you're better than you are, and that you don't need any kind of education. You don't need anything. You don't need any rules. You don't need any. Just give me the doggone chart. Tell me what to trade, because, well, you can't find them. So you look for somebody to give them to you, and then you can't understand why you don't make money while maybe that other person is making money. And the reason, it's all between your ears. It really is between your ears. Look, charting is wonderful. I couldn't survive without charting. Charting is my favorite thing to do. I trade everything off charts. I trade nothing off news. In fact, lately I have become, what's the best way I could put this? I've become quite anal about stop following the news. Who cares about the news? Just follow the chart. Everything is in the chart. Now, in all fairness, I will also declare that I'm a short-term swing trader. I trade sometimes a day trade, not too often. I don't purposely set out to do a day trade, but generally overnight to, well, maybe 10 days. 10 days might be on the little bit longer side, but I've traded longer. More times than not, I will trade a directional option. I buy around 70 delta. Is what I do when I'm trading a directional option. I trade calls and puts is what I do. It's very, very simple. And when I look at charts, it's very, very simple. I've got a few charts here you'll see that's on the slides that will show the simplicity. And this is exactly what we teach. And what will happen is I truly, truly believe that if a person were to dedicate themselves to some basic principles, I have 9 of them that I think are very, very important. We could go down a rabbit hole and probably come up with 30 of them if you wanted. But as you trade, you're going to go down your own rabbit hole, believe me. But I think just taking some of the basics and working with that, you'll be amazed at what happens, especially if you've just started trading or if you've been struggling. If you have been struggling, which a lot of people are right now. Anyway, I truly believe that if I could take, I've said this before to our trading room, that if I could take somebody off the street, just pluck them off the street and say, hey, I need to sit down with you for a couple of months maybe. Would you be willing to trade? And if they said, what is trading? That's the person I want right there. And if I said, well, we're going to trade stocks like Amazon or Google or GDX, they go, or no, they might know that. If I said, look, I'm going to trade things like AMZN, things like MSFT, or things like GDX, and they looked at me like I had a hole in my head, that's the person I would love to pluck off the street. And I would drill these 9 basic principles into their head. I would never allow them to turn on a television, and strictly look at the when it comes to a chart, be a minimalist. If I could take somebody like that for 2 months, I think I could make them a decent trader. The minute they turn the TV on, though, it's all going to go to pot. The minute they start listening to news, it's all going to go to pot. The minute they stop looking at charts and stop using common sense, it's all going to go to pot. So these 9 principles are very, very important. Doesn't matter whether you're just starting out or you have been trading for a while. Number one, the number one principle, and I do believe this is the number one principle in without question, is always trade with the market. So let's just assume that this is the diamonds. This could be the SPY. This could be whatever you follow as the market. I can tell you that I personally follow the SPY ETF for the S&P 500. After that, maybe the Qs come in there, something like that. But my number one market that I follow would be the SPY. So if the SPY is doing this right here, if we're moving down like that right there, why would you want to trade long? I can't count the people that want to be bottom pickers, and just because we have a bullish engulf, because you've been taught that, you know, a bullish engulf is to be bought. That's actually not what you've been taught. What you've been taught was a bullish engulf is a signal and you want to trade above the bullish engulf. But as human beings, what we do is we only hear what we want to hear. We don't hear what's really out there. So it's not the bullish engulf, it's what comes after the bullish engulf you want to trade. So anyway, when the market is down like this, why would you want to trade long? And the same token, and this goes for the current market we have, because I know there is a serious thirst to be bearish. I know it. There is a serious thirst to think that the world is coming to an end. By the way, today is November 20th, 2022. Just in case 5 years from now somebody puts this video with a date. Everybody knows it. Look, things aren't going so good out there. They're not. All right. I admit it. You've got recession talks. I went to the grocery store the other day. I filled my tank up. We've got inflation. And the thing of it is now everyone seems to think the world's going to come to an end. And in the stock trading world, you know what? Everything's going to zero. No, it's not going to zero. And in any bear downtrend, you're going to have bullish uptrends. So for the person that is determined to be short here, if you're short, well, if you have a small account, you probably have gone broke from here to here. You're broke, you're done, you're cooked, you're out of there, because you listen to too much news, you pay attention to everybody and everything other than the charts, because the chart's telling you not to be bearish. This is what tells you to be bearish. By the way, that black line right there is the T line. For those that don't know, it is simply the 8 exponential moving average. So as we look at this chart, if you have a little bit more money in your account, you know, say a mid-size account, I don't know what mid-size is. You know, that's everybody's personal business. But what'll happen is maybe the next level, you're determined to be bearish because you turn the television on, you listen to people that are just pro bears, roar, great big old bears, right? Well, how's that working out for you? Not working out too good for you, are you? So this is another group of people that have gone broke. Now these people and these people, what they're doing is they're saying the market is rigged. They're saying somebody's watching me. You know, the big trading firms, they can look and see my trades. I hear that all the time. What a load of baloney. The market's not rigged. Just, you know, let's take control of our own trading ourselves, okay? Let's take control. And these principles right here, they do it. They put you in control. Just focus on the direction of the market. Let's see here. Principle number 2. Well, I'll get to this. Principle number 2. Trade in the direction of the trade you want to trade. So here's what I'm trying to say. So this chart here has been in a nice bullish run, right? And see how this turns red right here. By the way, this is what I'm going to talk to Mr. Jeff Gibby about. Something like this in our profits package that I think is amazing, truly amazing. But this exactly is what I'm going to be talking to him about. A couple other things, but this is probably the biggest thing. So here's what I see all the time: bottom pickers and top pickers. So here's the chart moving down, right? But because we've been in a big trend, and you see where we popped up here on this white line. But by the way, the white line, nothing magical. That's the T line, 8 exponential moving average. So let's see, do I have white here? Oh, I do, but I'm going to use yellow. I like yellow better. There we go. So we start popping up. You get all the bottom pickers that come into here. Here's what I tell everybody: the bottom picks in my trading room. If you bottom pick, please send me your address. I will go onto my Amazon account and I will send you a box of gloves because you're going to need it. Bottom picking is uncool. It's just wrong. So don't do it. Wait for the chart to set up. You're not going to make any more money in this chart if you bought it right here. And say it went up here, I'll bet you $100 bill that if you bought it here and I bought it up here, we're going to make the same amount of money. Bet you $100 bill. I get a lot of takers on that, and I've made a lot of $100. So test me on it. Test me on it. Come on in the room, 30 days, test me on this theory. So here's what happens. If you're going to trade a chart, make sure the chart is trending in your direction. I don't use any indicators, okay? Well, let me put it this way. I don't use stochastics. I don't use MACD. I don't use RSI. I don't use any of these oversold, overbought indicators. Nothing's wrong with them. I'm just saying that I don't use them. I use the trend, and I use price action, and I use candlesticks for price action, and I use price patterns. I use things like the 3/8 trap, which is something I'm going to talk to Jeff about. And just about every little, let me make that a little bit smaller here. Well, you see how that white line went flat right there. The white line went flat right here, went flat right here. I'd bet you those are 3/8 traps. Bullish for bearish, I'll bet you that's a 3/8 trap right there. That might be a 3/8 trap. And this is a 3/8 trap right in here. This could be right there. So this is what we do when we see the long side come in here. We look for that 3/8 trap, and then look how the trend has gone up. That's what we're looking for. For the bearish, we see a 3/8 trap. Those are entries, and look what the trend is doing. It's really easy. It's real simple. Trade in the directional of the chart that you're trading. Don't try to be a bottom picker and guess that we're going to move up. Don't try to be a top picker and guess we're going to move down. When I first started trading, I would look at a chart and I would think to myself, look how much money I would make if I could have picked that top. Let me tell you now, that didn't work out so good. And honestly, I've traveled around the United States a lot trading, sharing personal webinars around the country. And I'll tell you, I've never met anybody, not one person, that has made a living with a steady diet of picking tops and bottoms. Okay, not ever have I met someone like that. And I've met a lot of people. So focus on the trend, let the trend be established. That's what we teach, how to watch for that trend being established. For instance, right here, let's see, will this work? Let's make this yellow too. Right here, yeah, it works. That would be an established trend. That would be an established trend. You see this right here? That is not an established trend. Why? Because we just went red. We need a few days of them, that red bars in there, green bars in there. So trade in the direction of the chart being traded. Remember, principle number one, trade in the direction of the market. If the market is moving up, trade to the bullish side. If the market is moving down, trade to the downside, bearish side. Don't be a hero. Don't be the Lone Ranger out there. Go with the crowd. Go with the crowd. I know your mom and dad, they taught you years ago, hey, if your buddy Joey jumped off a bridge, would you jump off a bridge? Well, when you're a kid, 10 years old, the answer to your parents is no. In trading, go with the crowd. Go with the crowd. Plan your trades. Principle number 3, plan your trades with targets. This is GDX, by the way. We had this trade planned out. We put it on social media on this day right here. It was over the weekend, I know that. Yeah, this is Tuesday. This is Tuesday. This is Monday. So it was Saturday or Sunday, I forget now. Right here. We plan the trade out. Boom. We hit our first target today. We plan a trade. Put your targets up there. Now I want to talk about targets for a second. There's a big misconception about targets. I seriously take this home. I think there's a massive misconception about targets. It doesn't matter who you are. You could be Joe Ace Trader. It doesn't matter. It doesn't matter. You can put targets till you're blue in the face. You can have all your reasons for putting them out there. I have my reasons, and I'm going to stick with them. But nowhere does that guarantee that it's going to reach those targets. Not anywhere. Not in any book. Not in any slip of paper. Not in the lint in your pocket. Is it written down that, in fact, GDX is going to go to those targets? There is a massive misconception about targets. Just because a target, a bullseye, right? We equate, when somebody says a target, we take them at their word for it. That is not true in trading. I don't know, let's all come up with a better word. You come up with a better word, you tell me, and I will focus on using that other word. As traders, we've got to sift through and we've got to use some common sense. Use some common sense. Okay, so watch targets. Massive misconception about targets. Principle number 3, place your targets. Important because one, it'll show you that you have a runway to make some money. That's probably the biggest reason that I use targets right there. And this is true for both the long and the short. So always take profits into strength, or there should be a word here says weakness, okay? If you're trading to the downside, I should add that there, strength or weakness if you're trading bearish. Okay, how much money do you need a week in net profits to double your account? I just want to give you just something to think about. I'm not looking for an answer. It's private to you. How much money do you need to double your account? Just something to think about, okay? This is something we teach. Principle number 4, wait for the entry. Here's where I like a couple of setups. They're my favorite setups of all. Let me share this with you. Let's just say we have a bullish trend here, which we do, okay? So I could actually, let's just do it like this right there. You can clearly see we have a bullish trend. So now what I'm going to do is I'm going to look for those setups, and the setups that I look for would be just like this. Now, everybody looking at this and saying, well, that's a simple pullback. That's all that is, just a simple pullback. You'd be right too. You'd be 100% right. But how would you like it if a program like Metastock could come in here and say, hey, this has pulled back, and what we call it is our 3/8 trap. So how would you like it if you scanned for stocks and it pushed up these 3/8 traps? How would you like it if it also pushed up the fact that you're in a bullish trend? Add that stuff together. Maybe how about if you would like it if you could say, I only want to look for stocks between this price and that price? Or what if you wanted to say, well, what if you could look for stocks that are the top 10% capitalized stocks in the stock market? That's one of the things I scan for. Look for the best of the best. That's where steady, consistent profits come from. The best of the best. What if you could scan for that? See, that's something that Metastock can do. All right, one of the cool things there. So all this can be done. You can take, I don't know, I trade the U.S. market, so on any given day, I don't know, maybe I can look at 5,000 stocks. The reality is I can't look at 5,000 stocks. I have to rely on a piece of equipment, software, Metastock example, where they take that 5,000 stocks, they drill it down to something I can manage. How many can I manage? I don't know. I could look at a couple hundred stocks at a time, no problem. Other people might not be able to do that. Other people could do twice that many. It's all about you as a trader. The point is you can detail it to drill it down to look just for what you want to look for. If you don't know what to look for, this is a common question I get. Well, I don't really know what to look for. Well, that's where you come into, say, our trading room. And here's where I want to stop for a second, just say a little timeout. Look, there are amazing coaches that you've already listened to. You still have amazing coaches you're going to listen to yet today. And I have to tell you, I can't speak for every single one of them, but I will bet the majority, they have trading rooms. And I want to reach out right now and tell you, go to the trading rooms, ask them to help you pick out what you like. And what most of us will do is we won't pick it for you. We'll ask you questions and we'll lead you. We just know how to lead you to what you like by asking certain questions. So because we don't want to tell you what you like. We don't know what you like, but you're going to show us because we know what to look for, and then we'll help you move along like that. So there's a plug for all the other trading rooms out there. So you step into a trading room, you say, hey, I need some help. I really don't know what I like. We can figure it out for you. So if you're short is being cool right now these days. So if you're short, you can see this downtrending stock chart right in here. This would have been a 3/8 trap right here, by the way, that broke to the upside. Here we pulled back, and right here would have been a 3/8 trap bearish setup. This would have been a 3/8 trap bearish setup, and this would have been a 3/8 bearish setup, but I doubt I would have taken that trade right there. This right here would have been a 3/8 bearish trap setup. So the reality is, if you really have a handle on trading, you could have been in it here, you would have held it. You know, I don't know if you would have held it right through here, but you could have been right back in it, and look at all the money you would have made right there. Lovely, easy, simplicity. But one of the keys, probably one of the biggest keys, is you've got to have a mechanism that puts these possibilities in front of you. Welcome to Metastock. Anyway, 3/8 trap here, bullish or bearish, is my favorite setup. You know, I said I was going to show you that a little more, maybe in some detail here. Boom. So say we have a bullish trend here. We have a stock that has rallied up and has pulled back. That's what I'm looking for right there, a 3/8 trap. The 8, yeah, you got it if you figured it out. That's the T line right there. The 3, there you go. It's no secret. I tell everybody that's the 3 exponential moving average. So what we're doing is we're trapping price in this area. We're waiting for a buy signal. Now we're going to move to candlesticks. And now let's trade this chart and let's profit into strength. We like to shoot for doubling our money. We know how much it takes to double our money in a year. We teach you this. And here's what we do not teach. We do not teach picking the bottom, and we do not teach picking the top. In fact, we very much frown on that. You don't have to worry. You're not going to do it anyway. People try it, but they don't do it. Anyway, trade profit into strength or weakness if you're short. Let's see what else we got here. I'm going to be careful. Let's see time-wise, how we doing? Sort of okay. So principle number 5, take profits on the week. Well, we kind of already talked about that. So I'll tell you what, let's talk about this. So seriously, I think most traders have given it some thought. You know, what would 10% a month do for your trading account? What would 10% a month do? Most traders probably have done this, and they've been sorely disappointed because you might be finding it that's not possible, and I would beg to differ with you. I would beg to differ with you. Or doubling your money in a year, I would beg to differ with you. So let's talk about that. Let's talk about doubling your money. What if I said you could double your money? Somebody would probably call BS, and I would say, well, I can show you how. I can show you proof, not just lip service. And I'm going to go on record right now. Am I doubling my money this year? No, I'm not. Okay, I'm not. But on the other hand, I am not doubling my money this year. I quadrupled it last year, year before. But this year, if I didn't double it, but what if I just made 50%? Wow, think about that. Think about that. If you have a $100,000 account, what if you made $50,000 this year? You know, you're going to go whack your big toe off because you didn't double your money? Come on. Come on. I'll teach you the math, how to get there. And it is nothing but math is all it is, and following a few rules. So is 10% a month doable? Yes, it is. Is doubling your account doable? Yes, it is. Keep trading simple. Understand what you have to do. One of the keys is take profits into strength. Now, I think I don't know who's here. I'm not, necessarily privy of seeing anything in here, who's here or doing anything. If you simply, I certainly don't know what size account everybody has. Okay, so you have to take this part with a little grain of salt as far as, somebody that has $1 million account making $50 on an average a day probably isn't going to excite you. All right. Somebody that has a $5,000 account, that could excite you a lot on average. Okay. Some days you're not going to make it. Some days you will, but on average, what would $200 a day average do for your account? Now, if you have a $5,000 account, you're not going to do that. So just stop thinking you are. I'm not going to lie to you. I'm not going to blow smoke up your skirt. I'm not going to tell you that's doable. No, it is not doable. Is this doable on a $5,000 account? Yes, it is. Is this doable on $25,000 account? Yes, it is. Okay, so you've got to, there's pie in the sky, there's ridiculous, and then there's good, honest trading. And that's where you want to be, is good, honest trading. You don't want these lottery tickets. How many people bought a lottery ticket? Rhetorical question. If you win, great. But that's one of those pie in the sky things. All right, pie in the sky. So you've got to keep it a bit logical. All right. So it's very, very doable. I'll be glad to share that with you. If I had time today, I certainly would share that with you. Let's see. Next slide. Setting goals. You know, man, I kind of touched on that a little bit. I think this is very, very important, setting goals. Everybody has tools on their charts. For instance, candlesticks are a tool, moving averages are a tool, MACD is a tool, RSI is a tool, Bollinger Bands is a tool. All this stuff is important if you use it on your charts. It is tools, okay? It really is. So are goal setting. I'm extremely goal setting minded, even in my personal life. I'm very goal set minded. A mechanic has to have tools. A construction worker has to have tools. A plumber, a doctor, architect, they all have to have tools. One of our tools as a trader is realistic goals. Now, for the trader that just wants to give me the stock pick, just give me the trade that's going to work, give me the chart pattern that's going to work, just I hate to say it, sell me the package that's going to work, and none of it's going to work for you if you don't take a little time and educate yourself, okay? Little time and educate yourself. You also have to have a few of those things that you never want. You never want to sit down and do because it doesn't seem like it's important. One of them is realistic goals. Whenever I coach somebody, I always ask, well, how much money you want to make? The person that answers as much as I can, I can write their name down and I can almost bet they won't be here 12 months from now. Like clockwork, you're not going to be here. Unless you change your attitude, you're never, ever going to make it in trading. Not with the attitude, make as much money as you want. Nope. You know what? I'm happy with making, $200 a day. Okay, let's just say if you're happy with that. All right. So I think there's, for me personally, there's about 210 days to trade in a year. All right. So what does that equal to? That's $42,000. How would you like to make 42K? Not bad, right? This number here is not going to change. This number could change depending on the size of your account. Also depending on the your ability. So right out of the gate, you're not going to be able to put those numbers on the board. Come on. I don't care who you're talking to. It's not going to happen. It takes a little time. It takes some education. It does. So if we were to take 500 times 210 days, there you go. How would you like to make $105,000 a year? Now, that's not necessarily a lot, but remember, if you're doubling your account, so what if you doubled that in 2 years, and then you doubled that, and then you doubled that? Look, trading is not a get-rich-quick scheme, but in terms of life, you know, I don't know how many people here, I don't know what your birthdays are, how many you've had, but in terms of life, come on. If we call this 1 year, 2 year, 3 years, 4 years, 5 years, how much money would you have at the end of 5 years? Please tell me what investment advisor does that. Don't get me wrong. I'm not saying don't use an investment advisor, very much so. But what a great way to make some extra income. That's a pretty nice side gig if you ask me. So, principle number 7. This one right here is pretty important. Maybe I should have made this the actual principle number 1. I've got a rule with myself personally in trading. If I have 2 to 3 losses that are sort of unexplained, they kind of, in the beginning, they're unexplained. Why didn't that trade work out? Because I expect all my trades to work out. They don't. Don't get me wrong. They don't work out. But when they don't, they don't all work out. But when they don't, I take it very personal. And I have to think about it. Why? Well, when I have 2, most of the time around 3 trades, I stop trading. yep, I stopped trading. Literally. I put everything on hold. I have to figure out why I lost 3 trades. Was it me or was it the market? Here's a news flash. It's not always you and it's not always the market. But there are times that maybe I don't change quick enough with the market, or maybe the market is just simply too doggone choppy for me, over my head. So learn to recognize when the market is over your head. Just because you ran out and bought an extra monitor, just because you have a trading account, just because you pay a subscription does not mean you have to trade each and every single day or each and every single week. All right? Number 1 rule in trading. This surprises a lot of people. And I'm not sure, not everyone believes me when I say this. The number 1 rule in trading is not to lose your money. The traders that aren't that good at trading, their number 1 rule is to make money. Traders that are really, really good at trading, this is their number 1 rule right there. You know what their number 2 rule is? It's the same rule right here. How about their number 3 rule? It's this rule right here. You know what their number 10 rule is? To make money. Make money is the least of your concerns. Number 1 concern is don't lose money. The best way not to lose money, learn how to trade before you trade and know when you're over your head. Some days are over your head. This is just a fact, okay? Please, please recognize that. Principle number 8. Stay in your lane. This has a lot to do with, principle number 7, kind of in there. Stay in your lane. I trade very simple options, strictly directional puts and calls. That's all I trade. I trade stock, but majority is the option side. And it is strictly puts and calls. I don't I don't trade bat wings or butterflies floating around. Nothing against them, nothing at all. I want to stay in my lane. I'm very good about what I do in my lane, and you should be very good. If you try to get too crazy out there, what'll happen is your trading will start to crack a little bit. Stay in your lane. You know, when you get 20 years under your belt, you can do pretty much whatever you want. But if you're kind of new to trading, like under 20 years, you're new to trading, then stay in your lane. Find what you do best and do that. And you don't need to do anything else. Just do what you do best. Of course, you have to find out what you do. You have to figure out what you do best. I hear from people all the time that when they're having difficulties in the market, I hear from them that the market is rigged. I hear this. No, the market is not rigged. No, it's not. What it is you're not trading with the market. You're not understanding what the market does. You're not understanding how to make a dollar. And that's what we have to do in trading. We have to figure out what works for us, each individual. A program like Metastock, they can stack everything together for you. They can put all the probabilities in order for you if you use it correctly. There's something that Metastock cannot do. They cannot guarantee that a trade is going to make you money. There is a certain amount of trading that is between your ears, common sense, and staying in your lane. Stay in your lane. I once coached a lady one time. She had never made over $250 a trade in her life. Now, I've forgotten what the top number was. I remember, and this was a private coaching. She actually paid for me to fly down, and her and her husband, and we did some coaching for almost a week. And she calls me up, and I think the number was 1,800 and some change. I forget the exact number. She calls me up and says, Rick, I'm up $1,800 on this stock. What do I do? Now, this was back before we had cell phones. And I had the phone in my hand, and I wanted so much just to bang the phone on the table. I just wanted so much just to bang the phone on the table. Take the money. Good grief. This is common sense. This is what's between your ears, okay? I can't even begin to think the amount of people that will not take those profits, and then what they do is they think it's going to keep going up and up and up, and what happens is it starts coming down. And now they start arguing with themselves, justifying it. Okay, hey, you know, this is okay, it was more, and now it's $1,100. Hey, that's a lot of money. I generally only make $250. Okay, I'm doing good. And then it comes down, okay, it's $1,000. You see where this is going? And then a week later, they're down here, and that's done. Use some common sense. Take the freaking money and walk away. Be happy. Stay in your lane. That was way out of this lady's lane. It was way above her pay grade. Take the gift. Take the gift, okay? Number 9. I like number 9. Number 9 is pay it forward. Here again, I want to mention all the coaches, the traders that's presenting today. Jeff Gibby, Metastock, everybody. Pay it forward. And here's the way you pay it forward, and it helps yourself as well. Share your trades with your group, whoever you're with or whoever you go to. Share your trades. If you buy something and let's see here. If you buy something and 3 days later it goes up here, don't come in the room and say, hey, I just profited this. Don't do it. Nobody wants to hear that. I'm not gonna lie to you. Kudos to you, but no one wants to hear it. You know what everyone wants to hear? I'm buying XYZ. That's what everybody wants to hear, not this. So pay it forward. Help other traders by sharing what you're doing. If you see your trade move up, and if it moves back just a little bit, but it's holding support, share in your wherever you are, your trading room or to your neighbor, because this will help you. To your partner, share. Hey, look, I see XYZ, it's moving back a little bit, but I'm okay because I see support right here. I'm okay. Actually, what I'm going to do is when I see the buyers step back in, assuming they do, then I think I'm going to add to this trade. Share the trade. Share what you do. You will be helping other traders. And in turn, you are going to help yourself. And I'm going to share why you're going to help yourself. And Jeff Gibby alluded to this when he was introducing to me. He mentioned Steve Bigelow. I was taught by Steve Bigelow. Yep. I was taught by Steve Bigelow. And one of the greatest gifts Steve gave me, not just learning candlesticks, one of the greatest gifts he gave me was he offered me to into his trading room and monitor it for a little bit. I said, sure, I'd love to. It sounded great until I did it. And it was one of the biggest educational times of my life. And that's because when you put a trade out there, you're putting your name out there, you're putting your word out there. You're putting yourself on the line for failure, because we all know 100% of the trades do not work. Okay, don't let anyone ever tell you that they do. They don't. So one of the greatest gifts was, instead of trading in the background and being a cowboy and winning some and losing some and never talking about my losers, only talking about my winners. And come on, every one of us are guilty of this. Everybody here is guilty of this. But if you come in here It's not a winner. It's not a loser. You're just stating a fact. Look, I'm buying XYZ. Or if you could come in here and say, look, I'm not buying this, but I like this chart. I see a good bullish candlestick. I see a chart set up. The market's moving in the right direction. The chart's moving in the right direction. Whatever stochastics are in the right place, RSI's in the right place. However, whatever you look at, all you got to do is share. I like this chart. I think on positive trading, maybe above whatever that number is, I think I'll buy this. You're sharing with everybody. Okay? All the trading rooms out there, there's a lot of them too. Everybody there will appreciate this. They truly will. We certainly do appreciate it. So, anyway, this might be truly, it could be the most educational idea for anybody out there. It was truly one of the things that put me on the track to actually making money. I certainly used to make money on a trade, but then I would lose it on another trade. This was years ago. Now I work, instead of trade by trade, I trade mostly week to month to year, and all I care about is making money over that period of time. Day by day doesn't matter to me anymore. So anyway, share your trades. I think you'll be a better trader. I really do. I think it'll really help. Again, I'm about at my end here, Jeff. Again, my name is Rick Sadler. I hope you enjoyed the 9 basic trading principles. I truly believe these are my personal top 9 trading principles. You could go down a rabbit hole. I could probably come up with 30. I could probably come up with 100, but you're going down a rabbit hole. Be careful. You don't need to do that. In your 30-day trial, Jeff will give you a link in your 30-day trial. By the way, it's only free to the Metastock group. We do not offer a free trial to anyone else. It's strictly for the Metastock group. But anyway, you'll be treated as a 100% member. In fact, when you're in the trading room, I don't know if you're a trial member or a member. I don't have that ability. And I will do everything I possibly can do to teach you what we do, which you're going to find is not a lot. It's actually very simplistic. Trade the trend, trade the right entry pattern, and profit into strength or weakness, depending on what you're trading. So, Jeff, if you're here, that is about the end of what I have here. If there's any questions, I'd love to answer some questions.
Okay, yes, I am here. Let's see. Dana, we don't have time for a lot of questions, but Dana wants to know if you use Fibonacci's to set targets.
Sometimes I do use Fibonacci lines. I never used to. What I mostly do is I will look at a chart and look at the history, and I can see where peaks and valleys are. More times than not, that works as targets. But here's what I have found. Fibonacci lines, they match up to those peaks and targets incredibly well. Or is it that those peaks and valleys match up to Fibonacci lines incredibly well? Either way, I think that would work as targets. Remember, targets are not a guarantee. Targets are good to see that you have a runway to make money. In other words, do you see the path to profits? So, yeah, I think Fibonacci. My favorite would be, by the way, is what is it? Fibonacci. What am I? I can't even think it. If I think about it, I'll come back. Yeah, I've lost. That happens sometimes.
Sounds good. We are getting the links posted into the chat room real quick.
Yeah. Thank you very much, Jeff.
Let's see. Peter wants to know, is the 3x8 trap and the 3 EMA Is the 3x8 trap the 3 exponential moving average and the 8 exponential moving average?
Good question. The 8 is the 8, and it's at the close or current price. Okay. The 3, I know a lot of people that use different settings on the 3. Here's what I use. I use the 3 exponential moving average, but it's the average of the highs. So it's not the close or not the current price. It's the highs. That's what I personally use. And what that does is it will throw a little bigger net around 3/8 traps. So the 3 exponential high. And by the way, you can do that in Metastock in case anybody didn't know.
All right, very good. And I'm going to spend just a minute, we're out of time, but I'm going to spend just a minute showing the 3x8 trap in Metastock. So Rick, I want to say thank you for coming in. I really appreciate your time today, and we'll see you again soon.
Hey, thank you, Jeff. Appreciate it. Everybody take care. We'll see you all down the road. Thanks.
All right, thanks, Rick. All right, let me do this. And then we'll do this. And then I just want to show the 3x8 trap. So for Metastock, it's all created, it's ready to go. Right here is what it looks like in the Dow Industrial. So you'll notice with the trend indicator, it's been bullish. You've got your exponential moving averages. And right now we're kind of getting a couple of these blue setups. And if I click into it, it's actually going to kind of give us a little bit of a definition about right there. A current 3x8 combined with the trend indicator is detected. Traders should look to buy the DIA, while more aggressive traders should look to buy a bullish option strategy. The 3x8 trap is Rick's primary setup for trading. This is Rick's favorite setup, and it's all coded. It does include, like I said, oh my goodness, holy shoot. It does include, I'm going to go ahead and kind of got really bright in here. And man, I look like an angel. Let's go ahead and just adjust that brightness down a little bit. It does include the ability to do scanning, testing, explorations. Oh, that's even looking better. Woo! We'll play with that a little bit more later. Let's see. Oh my goodness, yeah, I'll just have to play with that in a second. In any case, it's all created. The patterns for profit by Rick Satter includes the rod and bottom breakup, the T-line squeeze, the T-line bounce, the pinball setup, and the 3x8 trap. It includes all of those patterns. They include scans, exploration, system tests, all of that kind of stuff is included as part of the package. And we do have a lot of screenshots. You can run scanning on it. It takes full advantage of the Metastock tools. With it, you'll get the 2 explorations, 2 expert advisors, and it'll identify all 5 of those unique patterns. So very, very good add-on. $7.99 is the cost that we normally charge for it. $6.99 here at the conference. You can get a 30-day money-back guarantee on it. Just give us about 800-882-3040, or you can visit us online at metastock.com/saleschat. So thank you, Rick. I really appreciate your coming in. Kelly, let's give away another prize real quick.
Okay, let's do this.
All right, so what? Okay, right now we're going to give away. You remember Fausto Pugliese? He's coming up. He's going to speak tomorrow or maybe Thursday. I don't know how to check the schedule, but we're going to give 1 year away of his Cyber Trading Group Live. This includes his chat room, his Traders Talk Live, his Cyber Group Traders Talk Live. It includes 100 hours of recordings. The value on 1 year membership to the Cyber Group Plus is $897. And we're going to give it away right now. So Kelly, are you ready to give me a number? Let's figure out who this winner is. Okay, I did refresh my list, and I need you to give me a number between 1 and 10,515.
What was the value again?
10,515.
No, the value of the prize.
897.
We're going to go with 8,970.
Okay, I can do that. Oops. Okay, Lynn H. is the winner of the Cyber Trading University Prize. So we'll go ahead and Lynn, we'll be reaching out to you. Actually, we'll have Cyber Trading University reach out to you directly they're going to reach out to you within about a week or so to kind of help you pin that price. Lynn H, let's see, with a Hotmail account. So, and that's as far as we're going to do the doxing of you today. So I do want to say real quickly, thank you to CMT for sponsoring today's event. CMT actually has sponsored 1 year worth of events for us as of today's event. So CMT's, we're actually going to have Tyler Wood and Alex Cole talk in just a minute, but Tyler Wood's also going to give a presentation just on CMT later in the week. One of the things that I found really interesting when Tyler talks is really how much a CMT qualification, there's a better word, but I'm not finding it in my brain right now, how having a CMT designation can really help you in terms of what you're doing. And so if you want to find out more about the CMT, you go to the cmtassociation.org and they can help you. Very, very, very well reputed organization, and we're happy to be partners and having help us with the event. So of course we're Metastock. All of the specials that we're talking about with all of the add-ons can be found at metastock.com/promo. If you want to find out why Metastock's been rated #1 in its price category for 29 years in a row, we'll give you an extended trial. That pricing on that will start at about $23 a month, because what we're going to do is if you buy a month, we're going to give you the second and the third month for free. You can also do that at metastock.com/promo, metastock.com/saleschat, and you can call us at 800-882-3040. So there you go. All right. Our next guest, we have a 2-for-1 right now, is Alexander Cole and Tyler Wood. I love these guys' presentation. Kelly and I talk about how we really like their conversational style. Alex created the go-no-go chart pattern system. He's going to talk quite a bit about that. You're going to like it. Stick around. How are we doing, everybody? Alex, Cole, Alex, Tyler, how you doing?
Fantastically well. How are you doing, Jeff?
Good. You're just off of a plane you just got back from India?
Yes. The CMT Association hosted our Asia Pacific Summit for 2022. We've been all virtual for 3 years, but it's great to get back in person despite the 33 hours on a plane to get home. So yes, I got home very late last night, and today's been an odd one. We'll see if we can get through the next hour without tripping over my words. But it was a great opportunity. Met with the Bombay Stock Exchange, National Stock Exchange, did a bunch of media, and met about 400 traders who all use go-no-go charts, and that's what we're going to talk about today.
That's awesome. I have no doubt that you're going to be able to get through the next hour. I have complete confidence in you, Tyler.
Fantastic. How about a quick technology check? Can you see my slides?
Yes, we can, and the right ones. And I can see 3 of us up there, but it's soon going to be 2.
Fantastic. Hey, Alex. Long time,
Hello,
buddy.
Phil. Thank you, Jeff. How are you, Tyler?
Good to see you. All right, guys, I know we're running just a little bit late. I'm going to get out of the way. It's your turn. Go. Oh, awesome. Are you guys twins? Don wants to know if you guys are twins.
We are, yes. Brothers from another mother, I think, is the idea. But Alex is the guitarist, and I've got a drum set behind me somewhere. So hopefully, one of these sessions will deliver the content musically.
That's the paid session on Saturday.
That's right. That's right.
All right, you guys.
Awesome. Thank you, Jeff. Thanks for everybody tuning in to this Metastock Trader Summit. I mean, what an incredible event! A full week. Tons of education, great speakers, a number of other CMT charter holders that are speaking this week. And so as a chartered market technician, when I first started working with Alex over 10 years ago, we did a lot of educational sessions together for Bloomberg employees, for their clients, for students who are going through the CMT program. Alex is actually the subject matter expert for all of the prep classes that are produced by John Wiley & Sons, our publisher of the official curriculum. So we love teaching. And if you're here today, it's probably because you saw this title, right? You need to clean up your charts and learn how to trade responsibly in uncertain markets. And just raise your hand if the news headlines have been a little intimidating, maybe a little confusing, maybe there's just too many of them. I mean, I don't know if the Fed's going to hike rates again another 4 times, 5 times, 10 times, right? We don't know how long inflation is going to persist and whether that's going to drive central bank intervention. We don't even know, a couple of weeks ago when companies were reporting earnings, those that beat analyst expectations, right? So fundamental analysis tells us that's a really good thing. They've had a great quarter. They beat analyst expectations and they still traded down, right? So that's the uncertainty that we're talking about. All of those stories that are fed to us day after day by financial news media or by ourselves or by our friends at cocktail parties or wherever you are getting your information, it pulls you away from being a responsible investor. And so what we're going to talk about today is something called trend following. Now, trend following investors really try to take all of that guesswork out of their process. And to illustrate that point, actually, we hosted this huge conference on Saturday. I had the great fortune of sitting with some incredible institutional money managers, people who've been doing this for 30 years, running mutual funds with large pools of pension fund capital. And to illustrate the point, Dave Lundgren said, just take for instance how I got here to India. And he said, I don't know how to fly a plane. And certainly, for those who are looking for the X Games and extreme sports, flying a trick plane and doing loop-de-loops and all of that might be really exciting, but it's very risky. As trend followers, we're just passengers on the plane. And so he kept going with the metaphor. He said, look, to get here, I took the information that the airlines told me, and I showed up on time. I boarded the plane. I have no idea how to fly the plane. I don't understand aeronautics or what was going on, but I stayed on my seat until we got to India. I didn't try to jump off the plane early. I certainly didn't sit on the runway for 3 weeks after the trend had ended, or excuse me, after the flight had landed. And so when we think about trend following, it should be a big sigh of relief. So if anybody's been having a real struggle through this year, or trying to guess where the Fed's going or where markets are going to be headed next week, just set that aside and stick with us over this next hour. We're going to talk about how to be objective in your discipline and how to simplify your tools so that you can actually profit on the meat of those moves without overthinking it, without overdoing it. So this gentleman, John Henry, if you've seen some presentations from us before, you might be familiar with him if you've read the book Moneyball or seen that movie. But they applied this same idea of trend following to running Major League Baseball teams like the Boston Red Sox. And they focused on the statistics of players during selection and forming the team rather than what they believed about any individual player. So that's what we're going to try to do today. We're going to take the narrative and the storytelling out of it. We're just going to focus on what actually is happening. Now, to illustrate what we're talking about, it's not an easy game, right? These are simple concepts, but they're very hard to execute. And we know they're hard because most people fail. I'm going to show you some data that's been researched by great behavioral economists, some Nobel laureates, and others like Terence Odian, who compiled tons of data, statistically very significant data sets, and looked at how retail day traders underperformed. We could pick on the institutional community as well. 88% of portfolio managers of public equity funds underperform their benchmark. So paying them fees to manage your money is not what we're suggesting either. What we want to focus on is why do these folks struggle so much and what we can do about it in our own accounts. So first question for all of you at home, and this is an online event, you can shout it out, but you can also type your answers right in the chat. Out of 360,000 day traders that Professor Odian and others researched over a 15-year period, what percentage do you think lost money? Go ahead and take a second. The answer is 87% of those 360,000 day traders failed to remain profitable over the long run. Okay, that's less than 1/3 of 1%. All right. Second question. Now, this is a little different data set, but still very statistically significant. 43 million individual currency pair trades, okay, from a retail FX broker. What percentage of those trades were profitable? Meaning directionally, were the bets that they were placing correct? All right, we just said that they don't make money, but the answer is that over 50% of their trades were profitable. Well, that's a real quandary, isn't it? So the average retail trader has a win-loss ratio greater than 50%, meaning they have an edge. They know where they're looking to find those trades. So why are so many losing money over the long haul? Well, the answer lies in risk management. It lies in their behavioral instincts. They are letting losing trades pile up on them, drag their portfolio down, and they are cutting winners short. They're not gaining those big outsized winners because they're not patient enough to stick with the trend. And that's what we're going to talk about today. I'm going to get really mathematical on you for just a second. I know it's 1 o'clock on a Tuesday. Hopefully you've got a fresh cup of coffee in front of you. But what we're talking about when we say behavioral finance, or when we talk about cognitive psychology, all of these traits are things that human beings have developed over tens of thousands of years, right? This is evolutionary psychology at play in the markets. And raise your hand if you've ever had a trade that became an investment, right? You had such high conviction. You were convinced that that security was going to come back in your favor. You had done the deep fundamental research, or you had an inside tip from a friend who knew something. Whatever this was that gave you this strong conviction, the market disagreed with you. And as it traded down 5, 10, 20, 30, 50%, you still hung on to it because you just wanted to get back to break even. Well, that's the recipe for, that's the the equation for a risk of ruin in your portfolio. And we have to manage that risk. Now, here's the upside. On this chart that we're seeing on the right-hand side of the screen, this is the efficient frontier. Whoops, I've got a pen, not a highlighter. 1 second here. There we go. Now you guys can see. Along this efficient frontier, we have all trading systems that break even. So let's just look at this. 50% win ratio, right? So that's just a coin flip, right? You could pick stocks at random. Let's say half of them work out and half of them don't. As long as you manage risk and reward carefully enough, and you get that double-sized return on your winners, and you cut those losers short, you could still break even. Now, we want to move up this curve, 60, 65, 70% winning trades. And the best investors in the world will tell you technical analysis will help them get that directional bet correct. And then we want to make sure that we're managing risk appropriately, managing position size, and letting those winners run, which is going to give us outsized gains. This is where we want to be. And famous traders like Paul Tudor Jones are right over here, where they're happy to be wrong 4 out of 5 times, as long as when they have a winning trade, they can really play aggressively in the markets, lean into those trades, and get those huge outsized gains. So that's a 4-to-1 win ratio over here. And that just all comes down to trading discipline. So with us today, Professor Cole, looking sharp as always. Let's talk about how we would remain objective in identifying market trends. What tools would you use in the classical technical analysis toolkit?
Yeah, and just to follow up on your last slide, I remember one of the first meetings I had maybe back in like 2006 with a client in technical analysis, and he told me that he aimed to be right half of the time, and I was sort of a bit disappointed, but he said, but I also make sure that I make twice as much on those trades as on the ones where I lose. And then he took me aside and he said, but I think technical analysis means that I'm right more like 70-75% of the time. So that really that's the name of the game, making more money on your wins than you lose on your losses. And you can do that if you find the trend, if you trade in the direction of the trend. So we know that this is probably the most important thing we can learn as technicians, because if you can identify the trend in the price action, then you can profit on the majority of that move. And it seems like a simple idea, and it is, but it's not easy to do. But when we try, what we need to do is create a process that is repeatable so that we aren't, questioning our process every time. So the first thing you might do is look at the chart and see if it's just generally moving in any direction, right? Are we seeing higher highs and higher lows? But of course, we want to automate that and remove subjectivity. So you could use any number of tools, but the one that I like to talk about is, of course, the one that was used by the turtle traders. They use Donchian channels for their entries. If you aren't familiar with the turtle traders, look it up. Fantastic story. But what that study looks for is whether or not price is higher than it's been at any point over the past range. And the default for that is 20 periods. So if it is higher, then that line is going to move higher. And you're going to see that red line move higher every time price makes a new 20-period high. And on the bottom, you'll see the lows move up with it as well. Then you can throw another indicator on the chart. Once you've identified those higher highs and higher lows, people will throw, you can pick a process that works for you. We've worked with so many different clients, and this is an example of something that might make a sensible approach. But you could look for Bollinger Bands, because Bollinger Bands, if the bands are narrow and we see price breaking out of the bands, then we understand that in that situation, we should trade in the direction of the break. So breaking out of narrow bands could indicate the beginning of a new trend. Of course, moving averages are probably going to be on everybody's chart. And you want to know where the price is, where it is relative to its moving average. Price above a moving average is, of course, inherently bullish because you're saying that we're trading higher than we have done over this recent past. And then you could put another indicator on here, perhaps, to confirm what you're seeing in price. Volume is the confirmatory indicator, first talked about by Charles Dow way back in the day. It's not necessarily perhaps considered to be as telling as price, but it's something that confirms market participation. So you want to look for whether there's healthy volume if you're seeing a new breakout to a new high. That kind of analysis you can get from volume. And then you could put another indicator on the bottom panel where you perhaps look for something that blends a bit of momentum, a little bit of speed, velocity of price action with some trend concepts. And that could be the moving average convergence divergence. And we know that the traditional buy signals are when the MACD crosses above its signal, but it's also bullish to understand that when those two lines are above zero, that's a bullish situation as well. So if we were to walk down those 4 or 5 ideas somewhere on the left side of this chart, you would be fairly confident that you're identifying a new trend. You've got a higher high on Donchian channels, breaking out of Bollinger Bands. You're above your moving average. Your MACD is crossing above its signal and above zero, and volume looks to be okay. So at that point, you could be fairly confident that you are recommending to get into a position perhaps to the upside. You're on mute, sir.
Third year of a global pandemic, all these video conference calls, still haven't learned how to control my mute button. Sorry about that, folks. Now, the reason that you would use a multi-step approach is that every single one of these wonderful, and there are many more powerful technical indicators out there. You can look at the literature and look at signal tests of each of these. They all give you a probability of outcomes. So if you stack all of these indicators, and you have an even higher probability of the outcome of the trade working in your favor. This is a game of probabilities, not certainties. So that's why you would want a weight of the evidence, if you will. Go through a multi-step checklist to make sure you've got everything on your side when you're placing the trade. Now, the problem with this approach, right? We are firm believers in technical analysis. Don't get that wrong. But the problem with using so many of these indicators, even though it helps bring the probabilities on your side, it introduces analysis paralysis. And we have both been around the most expert traders, research analysts, and money managers, and they all have complained about needing to keep their process very, very simple. Now, that's either to explain from a sell side to a buy side client, or explaining within their firm, or explaining to an end investor what's going on in the strategy. But then think about it from your perspective. As a trader, have you ever found that you've got too many moving averages on your chart, or that some of your signals are redundant, or at worst, even contradictory? Some are signaling a go and some are signaling a no-go at the same time. That is the analysis paralysis that we're talking about. And when you have so many studies on your chart, you reintroduce all of those same behavioral biases. I'm going to wait for just one more of these to signal that it's a good condition for trading. I'm not quite convinced. Or, yeah, this meets all my criteria to get out of the trade, but I still have such really strong conviction. And look, there's that one indicator that's still telling me that there's some hope left. Well, hope is not a strategy, folks. And this analysis paralysis can really get in the way of you executing that responsible trading discipline that we talked about in the expectancy formula. So, Alex, let's talk about the solution.
So we created go, no go charts to take all of the information that I'd found valuable over the, I guess now, almost 18 years in the industry, working with clients that sit on some of the big desks, the big banks, the big brokerage houses around the world, and put that process, a really good, disciplined technical analysis checklist into a chart that color-coded the price bars based on strength of trend, leaving an easy-to-view chart. So you can still look for areas of supply and demand, areas of support and resistance. You can look at what's happening on the price chart because, of course, price is, of course, all important. So the go, no go chart just blends those concepts, those foundational principles of technical analysis into something that paints the bar based on trend strength. And hopefully that leaves you less confused with a less complicated chart to read.
Now, when we see the strength of that whole weight of the evidence, and what really stood out to me was that behind the scenes, the computation that's happening includes far more indicators that we looked at in that very simple technical checklist that Alex walked us through. So we've got even more weight of the evidence, and we've built this into 5 simple colors, right? So a strong and weak form of trends in both directions. So when we are in a strong go trend, you're going to see those blue bars. When we're in a weaker form, but still in a go trend, those are the aqua colored bars or candles, whatever you choose. When we're in the no-go or downward trending markets, we have a weak form that's in pink bars and a strong form in purple. And right here at these points of transition, you'll see amber or orange bars. And that signals to us that when all of the weight of the evidence, all of those technical indicators in the background are in their neutral territory, we know that the market is in a period of indecision. Alex and I are both very fond of, taken with the life and work of Jesse Livermore. And he was famously quoted as saying, in the markets, there is always a time to go long, a time to go short, and a time to just go fishing. So you have go, no go, or go fish bars. And that's as complex as it gets, right? You just look to the color that gives you the weight of the evidence, and you can have a much more disciplined approach to placing your trades. Now, Alex and I are so proud of this work. We feel like if the institutional trend followers have been using these tools to their advantage for decades, we really want to share it with the self-directed end user. And so for all of you who are Metastock users, you can find the Go No Go trend for free on Metastock. It's just apply that template of Go No Go trend, take it for a spin, use it however you would like. All we would ask is that you let us know, what time frame are you trading? What securities are you trading? How's it working out for you? Have you found yourself more willing to get out of a trade when it switches over to a no-go? You can shoot us an email, info@GoNoGoCharts, or on Twitter @GoNoGoCharts. Send us a DM. Just let us know how that's working out. And that's all we ask in return. All right. Now, when we talked about, how do you get from New York to Mumbai? You just follow the trend, right? You just board the plane and get off when it lands.
Multiple planes.
Yeah, for me, that was like 6 planes, like 34 hours of travel. But I live in the States now. Left Manhattan a few years ago to get away from all the pandemic nonsense. So what we believe is that all of these trends are driven by sound fundamentals. The fundamentals of the companies, if we're trading equities, the macroeconomic environment, expanding GDP, right? Those are things that drive trends. The opinions about those fundamentals, we could care less. And I hope that all of you take away one thing from today's presentation. It is that the financial news media, and even most who are really responsible in their fundamental approach, those sell-side analysts are not there to simplify your process. And their opinion about the fundamentals, frankly, doesn't matter. The greatest fundamental analyst out there is the market itself. And to prove that point, Mark Abraham, one of the most brilliant and successful trend followers out there, said ultimately it's the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down. And that consensus is revealed by analyzing price. So why do we put all of those indicators in the background and just give ourselves a color-coded bar? It's so that we can look at price with a clear focus. We can see areas of support and resistance. We can see trend lines. We can spot price action as it's happening. And Alex and I are big fans of Edwards and McGee and those classical technical concepts, pattern recognition, that become very difficult to execute on a chart that is cluttered by too many indicators. So let's do a few of these together really, really simplistically. Alex, let's dive into what's happening on the S&P 500 just on a daily basis. Where are we at from a trend perspective?
Yep. So we have entered a weak form go trend. We've seen some choppiness over the last week or so. We were looking at this about a week ago and wondering whether or not the new go would hold. We saw an amber bar, then a long amber bar come in, and now we've gone back into a weak form of go trend. Been an interesting year, a trying year for a lot of people trying to trade through these markets. But right now, on a daily basis, we're seeing a weak go trend.
Absolutely. Now, we know that any technical indicator worth its salt is going to work across any time frame. And for many of you, you might trade intraday. You might trade very, very short time frames, and that's great. because we learned from Charles Dow, the OG technical analyst over 130 years ago, that the market moves across multiple time frames. Now, he used metaphors as well to explain technical analysis, and he's an accomplished nautical gentleman, a sailor. He said that the primary trend of the market is like the tides of the ocean. It's really unflappable. So if you look at a 20-year chart of the S&P 500, we've basically gone from bottom left to top right. Now, within that primary trend, you have other time frames. The secondary trend is going to be the reaction to what are those fundamental or macroeconomic drivers of long-term trends, and that's the market's own reaction to the news and to the events of the day. We can see that markets become way depressed or way elevated to what that overall primary trend is. They mean revert. They revert back to the long-term average price, and it's on that secondary time frame that a lot of technical analysts have made hay, because you can understand the behavior of other market participants pushing this to some extreme lows before reverting back to the mean. Now, there's also the tertiary period, right? So if you think about on a price chart, it is moving up and down, up and down, up and down, but as it courses over the primary trend, right? That tertiary period, Charles Dow compared to the ripples on the surface of the water, right? So tide, waves, and ripples. It's a complex thing to explain, but I feel like his metaphor does a very good job. Go, no-go charts, as any great technical indicator will do, are going to work the exact same way on any time frame. And what we want to encourage all of you to do is, even if you are trading in a very short time frame, make sure you look at those longer term perspectives to understand what the underlying bias or the direction of the market is. So Alex, let's switch back. We're going to look at the S&P 500 again, but this time on a weekly view. What are we seeing in terms of the trend?
Yeah, so from that larger time frame bias, we're still in a no-go trend. You can see that really since the beginning of the year, we've been making a series of lower highs and lower lows. And so to put that new daily go trend into context, we need to make sure that we're aware that on a larger time frame bias, we are still in a no-go trend. Now, we'll look at some of our other tools later on in this presentation to give us so that we can get a sense of whether or not the trend is likely to stay in place on the longer time frame. But right now, take that daily go trend in the context of a larger no-go on the weekly chart.
Absolutely. You know, the relief rally through the summer really caught a lot of investors in some painful situations, because relief rallies are very seductive. Who is not rooting for America, right? We want the market to recover and return. And over the summer, what we saw was a little dampening of the rising rate environment. We saw the US dollar strength pull back a little bit. And within that context, you saw some of those mega cap technology names start to reclaim some territory. They were the most beaten down, and therefore investors were thinking, oh, well, this one is super on sale. I'm going to buy it, and it'll go back up. The point of understanding trends is that this is a relief rally, right? Until proven otherwise, it's just a counter trend bounce within an overall downward trending market. Now, from a weekly basis, we can see it never left the no-go territory. So how would we think about trading that? Of course, if you want to capture that upside volatility on a very short-term basis, by all means. But we also know that we're going to have our risk management approach as tight as possible, because this is just a relief rally within an overall no-go trend. So Alex, let's talk about the shorter time frames. That this is an hourly chart. Let's talk about the life cycle of that trade on a short-term time frame.
Yeah, so we work with a lot of people that would be working with a trader, right? So you might have a portfolio manager working with the trader, and given that on the larger time frame bias, we're in a no-go. Over the last couple of weeks, we have been predominantly in a no-go on the daily as well. So this is just to illustrate that if you were then to look for a position entry, you might step down in time frame, and you would be probably trading in this direction of the no-go, which is prevails generally speaking. And so you can see that you get the smaller time frame no-go trades on an hourly chart. Now, you're also getting these short, really short go moves, but they haven't held. So you're looking now at this one currently. We're on a go on the short time frame, the hourly chart. We're on a week go on the daily. The larger time frame still tells us it's a no-go. So we need to see something constructive happen to flip us around to long-term go trends.
And when we first started Go No Go Charts, it was strictly for institutional investors. Alex and I work with a number of long short equity PMs. So certainly for all of you out there who trade in derivatives or who like to trade short in the markets, think about how you could use Go No Go Charts to your own advantage, right? You cover your shorts when we're in these shorter term go trend configurations, and then re-enter the short trade as it re-enters the no-go. So you're capturing all of this downside, covering or getting out during the go configuration and back in to the no-go. So these work in both directions. They work on any time frame. And of course, the next point is, well, what if you don't trade equities? What if you're a currency trader? What if you strictly trade the commodities, or you're an oil hedger on a commercial desk, or you only trade crypto assets? God bless you, right? We've studied with John Murphy, who's also a chartered market technician. We've also worked with Marcus Katsanos and others who've built upon his work to understand the correlation between asset classes. So Alex, let's do a quick round robin, just using Go No Go Trend to get a flavor of the overall market.
Yeah, and I love to do this because it just gives you that really quick idea of where we are. What are we looking at around the asset classes? And you can see that equities have entered a weak go. U.S. Treasuries are still in a strong no-go, and that's really been falling off for the last few months. Oil, these are using ETFs, of course, but oil is believed back into a strong go. That might be a typo on my part, but we've seen some strength in oil. Of course, oil was the trade of the year, right, for up till the summer, and then we saw a correction in the summer, and now back in a go trend for oil. Bitcoin is trying hard, but trying to get off the bottom, or trying to get off the floor here. So much support down at those levels where we see the basing happen, but now in a weak go, trying to see a go trend persist. And gold, interestingly, in a go fish. So, you know, a lot of people have been asking us, why isn't gold moving? Why isn't gold going higher? Because we're in this rising rate environment. Shouldn't it be a flight to safety? Well, you know, until the chart tells you it is, it isn't. And gold has not been that strong performer that people were looking for it to be. But we are seeing some amber go fish bars now as we rally off the lows. So we're going to keep an eye out on gold as well. And then, of course, the dollar on the right. Now, this is interesting because we are seeing some weakness in the dollar that we really haven't seen for a while. We've seen this strong correction coming off the highs, lots of weak aqua bars. And then look at that sort of clustering of amber go fish bars, and now a couple of bars in a row of no-go colors.
And, you know, I think the other point to be made with all of this is that we do a lot of top-down analysis of the markets. We have a subscription research that we'll talk about a little bit later. But for all of our institutional clients, the thing that they're using technical analysis for first and foremost is to understand the landscape. What environment are we in? Where is the regime right now? And what's been really helpful for us in 2021 and 2022 was to look across the landscape and see, oh my gosh, treasury bond prices falling through the floor, which means they move inverse to yields. We've seen this rising rate environment even before the Fed started making rate hikes. We saw oil outperform the XLE energy sector ETF of the S&P 500, highest performing sector, not in 2022, in all of 2021. So this oil trade, this is a very long-term breakout of a structural bear market in the energy sector, now really starting to take hold. This is what we would think of as a counter trend correction, intermediate or cyclical bear within a long-term bull market in energies. My point is that even if you are just an equities trader, understanding what's happening in the US dollar, in treasuries and other bond markets is really going to help you get a flavor for what sectors are going to work better, where you can be, as they say, fish where the fish are, right? You want to understand what sector groups are going to outperform, what kind of styles of equities are going to survive in this rising rate environment where we've got a really strong US dollar and rising oil prices. So that's why we would do all of this intermarket analysis, even if we are only trading in the equity space. All right, ladies and gentlemen, congratulations. You made it to the 50-yard line. We're halfway through today's presentation. I'm sure you've got a full notebook of all the things that we talk about not doing. What we're going to do in the second half of today's presentation is walk through the complete toolkit of Go No Go charts. So we've discussed the concept of trend and blending multiple indicators to get a really unique view, to remove analysis paralysis and understand the trend of any security over any time frame in any asset class. But what we're going to do in the second half is focus on the other ancillary or confirmatory indicators that we all need as technicians, right? So there's trend, but we immediately need to understand momentum. We also need to understand volume. And finally, we have to know about volatility of the trades that we're getting into to really help us optimize where our entries and exits are, to control risk, and to help keep our portfolio returns consistent over time. So Alex, let's discuss momentum just from a conceptual level first.
Yeah, and we will go through this fairly quickly so that we can get to the live charts at the end of the session. But momentum is so important, and I think anybody that's done any kind of study in technical analysis realizes that once you've tried to understand price, you're going to turn to momentum next, because it gives you that sense of sort of the velocity of price change. How quickly is price changing? And it gives you an idea of the strength of any kind of price move. And being a car guy, I always try to teach it in terms of acceleration. If you've heard this before, I apologize, but I think that it holds some value and it makes sense. If you are accelerating in a car, getting onto a highway, you're going to accelerate quickly. You're going to go from 10 to 20 to 30 to 40, at an increasing rate of speed and similar accelerations. But then when you get close to that highway speed limit, you're going to still get faster, but you're going to get faster less quickly. You're going to go to 45 to 48, and then you're going to pull onto the highway. And like I always say, unless you want to get thrown in jail for the night, or unless you want to get into an accident, the most likely scenarios are you either continue to drive at the speed limit, so you top out, or eventually you pull over to take an exit, so you slow down. So as that rate of acceleration, you see it decrease, that's going to lead to a flattening of speed and eventually a pulling off the highway and getting slower. And so that's what we think of when we talk about momentum. We want to understand whether or not a new high in price is happening as quickly with as much enthusiasm as perhaps it did before. So like with the go, no go trend, the idea became, let's take all of that information that's so valuable in a momentum standpoint and put it into one oscillator that we can put on our chart to not complicate it and not confuse it, because they give us valuable information. And imagine adding sort of 4 or 5 panels to the chart we already built at the beginning. Now you're really getting to the point where you've got a chart that becomes hard to read. So we didn't want to do that, and what we ended up with is the go, no go oscillator. And really quickly, this momentum tool can be used as would any good oscillator, in that you can identify areas of overbought and oversold conditions. So you'll see that peaks and troughs in the oscillator will line up with peaks and troughs in price. And you can also quite quickly find divergence. So lower high in the oscillator, higher high in price. That suggests weakening momentum, less enthusiasm on that second high in price. And of course, we want to throw volume in there as well. And in Metastock, the way we've implemented that is with that ribbon across the bottom. Whenever you see that dark blue, that tells us that there is heavy volume associated with the trading. So you imagine that with that momentum panel, you get a sense of volume, whether it's higher or lower than its average. But blending all of the tools together gives us another way to look at momentum, and that's the understanding that you can use momentum to help you when in trend. So we know that these oscillators were developed mostly in the 70s when markets were going sideways. So it was very easy to say buy when you're oversold, sell when you're overbought, right? Betting on mean reversion. But what about when a market is trending? Can we use momentum to give us an idea of how to stay with the trend? And yes, you can. And it comes from the fact that momentum tools will range when in trend. If you think about something like RSI, RSI will go overbought and it'll come back to neutral. It'll go overbought and it'll come back to neutral as the trend moves in those waves that Tyler was talking about before when he talked about Charles Dow. But it's very difficult to be objective with that kind of analysis because these momentum oscillators are very choppy. Are we finding support at 40 or 42 on an RSI? What if it goes to 38? Is that a break of support? So we didn't want to get into any kind of that confusion. So we calculate the go, no go oscillator in a way that when all of the blended inputs are in their neutral territory, the oscillator will fall or rise to the 0 line. And so that gives us an objective level that can be used as support in a go trend or resistance in a no-go trend. So you've got that objective level that it will keep bouncing off as long as the trend remains healthy. And that, hopefully you can see how that allows you to stay with the trend.
And that brings us right back to that expectancy formula at the beginning, right? If we want our winners to outpace our losers in terms of the risk-reward ratio, we need to be able to stick with this trend over time. And in 2020, and even in the first half of 2021, you've all heard this phrase, the TikTok traders, oh, just buy the dip, man. BTFD. It's so easy. Every time the market corrects, buyers step in, and we continue in this very strong, durable upward trend. The case has not been the same for broad indexes in 2022, but that same principle applies. Now, how do we do that objectively? We don't want to be the guy left holding the bag when we buy that dip and it turns out to be the one that really rolls over, right? Well, we can do that objectively by looking to this 0 line where we see momentum come to neutral. We know that that's a counter trend correction, but we have not seen enthusiastic selling, right? So negative momentum between 0 and -6 down here, we see that most likely in a no-go trend, right? And if we're seeing negative momentum in an uptrend, we know that there's a real threat to the longevity of that uptrend. All right, basic concepts. I know we're rushing through this, trying to keep everybody on time. But in order to help everyone even further, with data visualization, you can see a lot of information quickly. We can call things out on the chart without obscuring the all-important price action. So we've developed some icons that just call out these moments where momentum found support at 0 and came back in the direction of the trend. Those are the buying opportunities for a trend that maybe we weren't participating in at the beginning, or maybe we've been participating, but we want to pyramid into that position. We want to scale up our position size to take advantage of a trend that's really accelerating. So when we see a momentum resurgence in the direction of the trend, we're going to pull out these little green circles. These are go, no go trend continuation icons, little green circles under price. The other condition is actually going back to the original use case of momentum oscillators, which is when they reach an overbought extreme or an oversold extreme and they depart from there, we know that momentum is drying up, right? So the speed of rate of change is decelerating, right? Maybe we're still climbing, but we've reached that apex on momentum and it's starting to come back down to neutral. That signals to us these counter trend correction arrows, meaning that in the very short term, price may need to consolidate over time, move sideways for a bit, or even correct in price briefly before it can resurge. So we've lost our extreme overbought momentum, in this case, in a go trend, lost our extreme levels. We're coming back. For those who need to take profits, right? Life events come up. Your kid's getting married, or you got to buy a new car. You need to close out some positions, free up some capital, or even to free up capital from one trade to deploy it elsewhere on another security that's trending even stronger. This is an opportunity to exit a trade at a intermediate top. All right, Alex, last piece of the puzzle. Let's talk volatility.
So this was really the last bit for me when I needed to have an understanding of technical analysis to talk to anybody in the industry over any asset class. The last piece that I felt I needed was an understanding of volatility. And when we talk about volatility, it's very, very, people get scared of the word volatility. How are you surviving these volatile markets? Well, we look at volatility as an opportunity, right? We actually want volatile moves. That's how we make money when we get that fast move in the direction of a trend. So what we did with the go, no go squeeze was try to identify periods of reduced volatility. If you're on the call and you've heard of things like the Bollinger Band squeeze or the Keltner Band squeeze, those are ideas along those lines of trying to find periods of reduced volatility. And the way we do it, excuse me, the way we do it is we look at the go, no go oscillator, and when it is in its, all of the inputs are in their neutral territory for an extended period of time, it's going to get stuck at the 0 line. We know how important that 0 line is. When a trend is in place, it should come back to 0 when the inputs are in neutral territory, and it should find support. If they stay, all of those inputs to our momentum oscillator stay in neutral territory, then that oscillator is going to get stuck at the 0 line, and it's going to allow the grid of the go-no-go squeeze to climb to a max and stay there. So that is an extended period of reduced volatility. And we know that out of periods of reduced volatility can come periods of higher volatility, right? It's not going to continue to do nothing forever. I was always taught about, thinking about a tube of toothpaste, squeeze that toothpaste, and eventually the top blows off, right? So you know that those are situations where something significant might happen. And that's really what you're looking for. Those are your starts of new trends. Those are your continuations, strong continuations, or your reversals from prior trends. Those are the situations where price has started to consolidate, started to show reduced volatility. And then when we break out of that squeeze, that can be a significant move in any direction.
So if we jump in the way back time machine, 275 years ago, when candlesticks were first invented in the rice pits of Osaka, Japan, this gentleman, Mona Hisahoma, created price charting to capture the emotions of traders, right? We're trying to visualize behavior of investors. So stick with me for 1 second. If we move from the left side of this chart to the right, we are seeing a no-go trend is in place, right? We can tell that by the purple and the pink bars. That strong no-go gave way to a weaker no-go, and the range of price action becomes more and more compressed, right? Higher, lower, we're compressing the price action itself. And we've seen that the oscillator, which was in negative territory, go-no-go oscillator has been enthusiastically selling throughout this no-go trend. We came up to the 0 line, we got rejected multiple times. Now we're back at the 0 line, and we are stuck there. We have a compression of volatility in terms of the price range. We have a compression of volatility because momentum is stuck in neutral. That doesn't mean that there isn't volume. There's plenty of activity, right? We see heavy volume in this dark blue as the price range narrows ever tighter. And like a coiled spring, it's just waiting to break out, right? We would assume that in a no-go trend, if this is going to last, we're going to break to the downside. When it doesn't, when we break out of a go-no-go squeeze in the max squeeze formation, we know that we've got a high velocity move in the direction of the break ahead. So the break above the 0 line on the momentum oscillator, that's our leading indicator. Several bars before we actually strike the go trend, we know that we've got positive momentum and we're off to the races. This is what we would look at for a bottoming formation. And again, any time frame. These could be 5-minute bars. These could be weekly bars. That same investor behavior, that compression of volatility, the tug of war between buyers and sellers that happens in every security, that's just human nature. But we found a great way to visualize that. And so looking for these go-no-go squeeze conditions, embracing volatility, as Alex said, can really help you as a trader to find those high velocity breakout moves if that's the goal for your trading style. All right. So we have covered a lot in a very short amount of time. We've talked about the concept of trend, the weight of the evidence approach, lots of indicators, but no analysis paralysis on our charts. We talked about the confirmation of momentum, volume, and volatility. We've got that all in the complete go-no-go chart. Now that's a lot of information, but to use it is extremely simple. You only have to answer 3 questions. Where's the trend at? What value do we have on the oscillator, positive or negative? And is there anything interesting happening at the 0 line? So Alex, let's dive into some live charts. Let's talk about how we can do this in real time.
Absolutely. So we talked earlier in the presentation about how we do macro top-down research. So I wanted to throw in a couple of the charts that we look at on a larger time frame basis to sort of give us that perspective. One is, of course, looking at the dollar and using UUP, which is the ETF for the dollar fund. This is a weekly dollar chart and a very interesting inflection point at the moment. But let's do it together. Look how simple it is to get a complete technical view of the dollar on a weekly time frame. What's the trend? If you're at home, yell it out unless you don't want to scare the dogs or whatever else you've got in the house. But it's a weak go, right? It is still in a go trend. Look at that go trend that we've seen in place now since summer of 2021. That is a very durable, long go trend, but we are seeing weakness. We're seeing a counter trend correction arrow, and now we're seeing weaker aqua bars. Second question, where's the oscillator? The oscillator is at 0. So that leads us on to the third question. Is there anything interesting happening at the 0 line? Yes, the oscillator is testing the 0 level on heavy volume, right? So we want to see, will the oscillator find support again? Look at the length of that go trend and look at how the oscillator has found support at the 0 line, and look at all of those trend continuation opportunities that we've had for a year and a half to participate in this strength of the dollar. Well, we're back at 0 again now, and we saw that weakness on the daily chart earlier when we went around the asset classes. Well, let's look to this weekly chart for a long-term resolution. We're at 0. We're looking for support from momentum as the go trend weakens.
Absolutely. 2 quick questions that I wanted to address in the chat. Both Bill and James, thank you so much for tuning in. You're asking about the trading to the downside. So if you're trading short, using the no-go configuration can work to your advantage. So the same idea of these trend continuation icons, these green circles showing us momentum resurging, right? We have support of that underlying trend. You get the same thing in a no-go trend. Look at these red circles. That's the trend continuation when momentum has come back up to the 0 line, and the go-no-go oscillator is then rejected, right? Finds resistance at 0, continues to be tossed back in a negative direction. We can lean into those short trades, if you will, when we have that momentum confirmation of the trend. So Alex and I are not trying to dictate any one trading system, right? These are weekly charts. You might be trading 5 minutes. Your risk tolerance, that's really a personal decision, and how you trade and what instruments is up to you. But you can use this for a complete technical picture. Hopefully that answers the trend, answers the question about no-go trends. Let's do another one, Alex. A diversified agricultural commodity ETF, DBA.
Yeah, this is the commodity fund, the DBA fund, and what we're looking at here is an interesting moment because we've been in a no-go correction that's moved mostly sideways after that long-term go trend. But look at that oscillator now. It's been below 0 and it's now testing the 0 line. And we've seen a build of a go-no-go squeeze up to its max, and we're right back at 0. So that could be an early indication if we break into positive territory that go trend may return. So that's as simple as that. We're in a weak no-go. Oscillator is at 0. We're looking to see whether or not it finds resistance here or if it can break back into positive territory.
Absolutely. Pretty nice looking base on that recent few months. All right, we spoke a little bit earlier about our approach using technical analysis from a top-down perspective. I know not everybody's got all of the free time that Alex and I do. So for everybody who's interested, you can tune into Go No Go research right off of our website, gonogocharts.com, and you'll get that entire top-down approach. We publish twice a week in sort of a longer form newsletter. Flight Path goes out every Monday morning, looking at sort of the conditions of the overall market, but then diving down from those macro view, macro drivers into the sector groups of the equity space, and then into the individual names within those sectors. We do a lot of relative strength work. We don't have time to talk about all of that today, but for those of you who are interested in having us in your inbox every week, by all means, check that out. The other piece that's really been helpful to Alex and I, right? We do not anticipate the market. We don't try to postulate or predict sort of where things are headed. We simply react responsibly to what the market's telling us. But there's a very wide market out there, and there's a lot of charts to look through. So the other thing that we do for our institutional subscribers is a daily piece that just helps identify some of those trends as they are playing out with the most high probability go-no-go setup. So from there, we're going to look at a couple of real-time ideas that come out in those daily ideas. TIXT was one as we were alerting all of our subscribers to the end of that go trend into a max squeeze. And here's how that played out. Alex, I think you published that at the end of May, yeah?
No, it was 20th of September, that one. So right when we saw that new no-go, we'd seen the break below 0 a few weeks before the end of August. That was a threat to the go trend. Then we saw that max squeeze build and that new no-go. And then, of course, now we've been in a no-go ever since, with now resistance happening at the 0 line. So that to just follow up on those questions in the chat about what about shorting and all the rest of it, you can see this is an example of a no-go, which is the other side of the market, right? Go is the long, no-go is the short, and amber is that non-directional uncertainty. So this is just an example of that. Right now, we're at a strong no-go still. We're oversold on the oscillator, and we're on heavy volume.
And so for those mutual fund managers that we work with, the folks who are running large pools of capital on a long only basis, right? When we see a trend shift, when it's out of a go trend, right, and they're working very long term, when that trend comes to an end, even if it's a shakeout, right? So let's say we resume the go trend right here. This is scenario analysis in hindsight. The reason that we exit if we're in a long position in a go trend, the reason we would get out as soon as a no-go fires is that nobody knows what happens on the right side of the chart, right? So after this signal, right, we could be very short-lived, in which case we could buy back into that trade. It could also be a 50% downside move, right? So we just want to avoid all of those big losses. We're happy to take a small loss. We cannot afford the large losses. And for those who traded the short side, right, the signal into a no-go, that's where you put your short on, and you don't have to cover until we see the evidence that that trend is coming to an end. Right. A couple of unique features in Metastock. Jeff Gibby and the team, and I know we're coming up on time, have just done an incredible job with the implementation, right? As with any tool, it's great to have the creators just leaning over your shoulder, explaining every tick by tick that's on your chart. Alex, talk to us a little bit about the expert commentary that's built into Metastock. I
love the commentary. The commentary feature is fantastic. You can click on any bar and get that really quick interpretation that we were just telling you. All you need to know is where's the trend, where's the oscillator, are there any icons on the current bar, what's happening with the squeeze. That'll give you a complete view of the chart you're looking at from a technical analysis perspective, and it's right there in the expert commentary. And then, of course, the other thing that is unbelievably powerful is the exploration functionality in Metastock. You know, we are all busy people, and having the ability to search for all of the go, no go squeeze maxes, having the ability to search for new goes, having the ability to search for icons, that really helps allow you to get through your work in a much faster time frame. So, you know, the explorations and the commentary are the features that really set this apart and allow you to find all of those go no go criteria in Metastock.
Absolutely. All right, we've got a couple of more live examples. Jeff, if we've got time, we can keep going. Otherwise, feel free to jump in if we need to. Let's do this one. International Seaways. Alex. Oh, is that Jeff? Hey, buddy.
I mean, it is me. I was going to say there are two questions in YouTube. And Manala wants to know, do you recommend stops? And Ellis wants to know if it's good for short-term trades or short-term option trades.
Sure. So let's take the second question first. Anytime that you are working with derivatives, right, and there's a world of complexity there for understanding all the Greeks and having your own options trading strategy, you can get as complex as you want. The important point about any derivatives is that you have to understand the trend of the underlying, right? You cannot be a profitable options trader without understanding how the underlying is moving. So using go-no-go charts in that respect, I think would be imperative, maybe even more important to understand these trend concepts if you are in the options market. And the other side is we talked a lot about multiple time frames, and we do have clients who are trading very short term, high frequency, if not just slightly delayed 3-minute E-mini futures charts, and using go-no-go very successfully to still capture the trend, even though they're identifying those trends in a period of hours, not periods of weeks or months. But certainly the time frame is up to each individual investor, and we're agnostic. The thing that I will say about these charts is that when you're looking at longer periodicities, so a daily or a weekly chart, particularly in these weeks where we've had really strong up moves followed by some news or terrible crashes during the week. Let's say this is a weekly chart. The final bar is going to be forming in real time. So it might be a go trend on Monday, and in a sharp down moving week, actually leave trend and move into a go fish or even a no go condition. And that's going to form during the process of that bar. Once that period ends and we've got the weekly closing price on the bar, it's never altered, it's never restated. So I just wanted to point that out for folks who are longer term traders. If you're looking at a weekly or a monthly bar even, particularly when we've got this kind of volatility in the markets, you can see that changing throughout the period. But certainly for the very short term traders, that's much less of an issue. Any other questions, Jeff, for us?
No, that's it. That catches us up. And I do think, let's go ahead and talk about this option, and we do need to wrap it up a little bit.
Awesome. Yeah, I think the closing comment for all of you, and if you take one thing away, be sure to go check out the free Go No Go Trend template. Put that on your Metastock charts and just let us know how that's working. You can send us an email, info@gonogocharts.com. You can DM us on Twitter if you're a millennial like my kids. But the idea of simplifying your chart, simplifying your process, and just reacting responsibly to what the market is telling you, that's going to remove a lot of uncertainty and a lot of those behavioral biases that can trip us all up as investors. So thank you very much for having us, Jeff, and the Metastock team. Looking forward to working with everybody who's been on today over the months ahead.
Great to have you guys. I appreciate it. Thanks for coming in.
Thanks so much, Jeff. See you soon. Bye-bye.
Okay, let me go ahead and kind of get back here. All right, and let me go ahead and make me the presenter. Do that, show the screen. I will say with the Go No Go charts, they do a really good job of actually talking about how the commentary works well and kind of outlining all of the stuff that's available as part of it. We did get it reviewed in Stocks and Commodities. Barbara started a review for it earlier this year, and she loved it. It's also been very, very popular, very well received in our database. And they may say, go check out the free templates. I would agree with that. But what I would also recommend you do is actually try out the program. Let me kind of go in and let's just jump over to the slides here. They talked about trend identification, the oscillator, the icons, and the squeeze. And all of that is available as part of the full version of the program. Not only that, you've got the scanning, the ability to run explorations, all of that kind of stuff is just included as part of it. And it's only $1,495. Normally, it's $995 as part of the conference special. It's been a very, very well-received add-on. Again, highly reviewed in Stocks and Commodities. You should take a look at it. We're going to back it with a 30-day money-back guarantee. We're going to include some training with it. If you need Metastock, our award-winning Metastock platform, we're going to give that to you as part of a trial to run it. And you can do that all at metastock.com/conf promo. You can call us at 800-882-3040, or you can visit online at metastock.com/salespchat. So there you go. Let's say really quickly, thank you for Stocks and Commodities for sponsoring today's event. They've been great partners. It's a great magazine. If you buy Go No Go, they're going to give you 2 years for free, Stocks and Commodities. If you do one of our extended trial subscriptions, they will basically give you 5 months for free. And if you want to do that, you can get an extended trial of Metastock at metastock.com/comp promo. Bill, it's okay. We're going to get on to the next presenter. It's okay. We'll get there. We are running a little bit behind. Not terribly. We actually did start the last ones behind a little bit, 10 minutes late anyway. But I understand. We're getting there. Okay. Our next presenter is Jerry Allison. Jerry is a presenter from Traders Tax Accounting. Jerry, I always find Jerry really, really interesting in terms of talking about investors and traders' tax status. And I think you're going to find it very, very interesting as well. So, Jerry, let's go ahead and bring you on here. I'm sorry we're starting a little bit late.
That's all right. Let's get going. We've got a lot to talk about today.
Heck yeah. Let's go ahead and get you in here.
Okay. Okay, what are we showing on your screen?
I am seeing the presenter view.
Presenter. Okay. Let's try this again. I always mess that up. I don't know why.
If you click on the show screen, there's a little down arrow and you can switch the screen on the command console.
No one can see the screen now. Okay. And they're back again. Okay. You said down arrow?
Yeah. So if you see where it says show screen, there's a little down arrow under screen.
I don't see the down arrow. Oh, wait a minute. It says undock. Nope, that's not it. Okay. I'm having a technical problem here. Let's see.
I can show you how quickly to get it on the screen that we can see. If you want to click on display settings, there's a little swap button.
Okay.
You see what says display settings on your PowerPoint? At the very
yes,
top.
right there, right there.
Mhm.
Okay.
Swap presenter. Yeah.
There we go.
That's another way to do it. All right, you're good.
All right. Thanks for rescuing me, Jeff. I appreciate it.
We've had a little practice.
Yes, I imagine so. All right. All right. Thank you, sir. I appreciate it. For those of you who don't know me, I'm Dr. Jerry Allison. I am a CPA with Traders Accounting, and Jeff has us on periodically to talk about taxes. And we are in a very unique time period right now because we have the time right now to set up for 2023. And there's several things that can be done. And I've been talking to a lot of clients getting LLC set up and going so that we're all set up by 2023. And actually there's a strategy here to kind of, you can eliminate wash sales in your personal account while moving over to a mark-to-market in your business account and all that. And I'll cover that towards the end. But I want to talk about basically taxes today and how they affect traders because it's a very important topic that a lot of traders kind of slough off. They don't look at it seriously sometimes, and then they get bit. We had some issues at the end of last year. A lot of you will remember the AMC and GameStop stuff. And I'm sitting with clients in February of this year saying they made a ton of money in December, November and December of last year. And then all of a sudden they lost it all in January. And the problem was all those gains made back in 2021 had to have tax paid on that. And even though they lost it in 2022. And the point is they did not adequately tax plan through all this. So it's something that you really have to have in your back pocket and consider carefully. So before we get started, I do want to read through a disclaimer. To the best of our knowledge, this information is accurate as the date of the webinar, but tax changes do happen constantly, and we try to stay on top of them as much as possible, but you should always talk to a tax professional before implementing anything. This webinar does not establish a professional or confidential relationship between you, me, or Traders Accounting, and we are not a law firm, so our advice should not be construed as legal advice. So I just made the legal people really happy, so we've got that out of the way. I do want to give you a little bit of information about Traders Accounting before we move on into the presentation. There's a special web link there for you. I think Jeff is going to put that into the chat. I hope so, because I forgot to copy it. So if you can put that in there, I will have this up at the end of the presentation as well. Our phone number is 800-938-9513, and our email is learn@tradersaccounting.com. And I'll mention this again at the end. If you go to that web link, there is a free ebook that you'll be able to get that talks about a lot of what I'm going to be talking about today in terms of LLCs and how to trader tax status and mark-to-market and things like that. So let's get on with the information here. First of all, I always talk to people and say, what is the most important thing in a business? And they'll come back with all kinds of answers. But they come back with, well, you've got to have customers and you've got to have good employees and you've got to have other stuff like that. But in a trading business, customers aren't relevant because you don't have customers and you don't generally have employees and you don't have anything else that most businesses have. There's still a common link between all businesses, and it's this: cash flow. You have to have cash flow in your business in order to make it successful, period. I don't care what business it is. And you guys are taking all these training classes in order to increase the cash flow coming into the business. You're trying to make money. But there's some areas that we need to also look at. And so any business that if cash isn't coming in, the business is going to starve to death. Now I'm going to modify that slightly. If cash is not coming in, or if the cash is going out too quickly, the business is going to starve to death. There's two sides to this equation that we need to consider. And a lot of times traders will consider the income, the what's coming into the business or their trading business, and they forget or neglect the what's going out of their business. And we want to be able to plug some of those holes, particularly when it comes to taxation. So the points made in this webinar are either to generate cash flow or to protect your cash flow, either to help you bring money in or to keep it from going out. One of the problems business owners have in general, not traders specifically, but business owners in general, is they'll be making a lot of money, but they don't keep an eye on how it's going out, and they end up losing all the money they're making. I've got a client in Iowa, actually, and he's making tons of money, but he doesn't know where it's all going. And so that's a big problem. And I keep telling him to try to get a handle on that. So this is something we want to try to get a handle on today. One of the things that can help us in the tax arena is what's called trader tax status. Now, you may have heard these. Now, trader tax status and mark-to-market are two different things. They're often confused with one another, but they are two different things. Trader tax status deals with the expense side of a tax return, or expenses used in trading. And if you qualify for trader tax status, then you can deduct expenses on your personal return or on a business return if you have an LLC or something set up, like S Corporation or C Corporation set up. But you can deduct those trading expenses. Now, what are trading expenses? Well, some of those expenses might be your computer, would be subscription services for data feeds, short locate fees, any commissions that you pay, home office deductions, things like that. Anything that helps you trade or helps you trade better. Education classes, what you're sitting in, or training classes, what you're sitting in right now, that would become deductible if you meet the qualifications. So why is this important for cash flow? Well, one of the reasons, let's look at an example here. Suppose a trader with trader tax status deducts a $5,000 training course. Let's use a flat number there. If that trader's in the 32% tax bracket, the trader just increased their cash flow by $1,600 when they file their tax return. So they spent $5,000 in order to take a training course, but they got $1,600 off on their tax return, so they could take that $1,600 and put that back into trading. They've increased their cash flow. And so that is very helpful. As you guys know, as traders, you need that cash in there to either use margin or not use margin, but get it back in there so you can invest it and make it grow further. So the idea here is to be able to deduct expenses on your tax return, get the tax money back so you can put that money back into investing and make it grow. Now, there is a trap here, though. And it's this: it's unwise to spend money just to get a tax deduction. You always end up losing money as a result of that. Let me explain that. The $5,000 training course, you guys may be spending whatever it is you're spending for this course and whatever else you spend. Whenever you spend money for training or for expenses in your trading business, those should pay for themselves. So you're hoping that when you get done with this training course, that it pays for itself, because you're going to make a lot more money as a result of that. And that's a great idea. Unfortunately, what a lot of business owners get into, they only look at the tax side of things, and they want to buy some huge asset and say, I want to write this off on my taxes, but when I write it off on my taxes, I'm going to get this huge tax write-off. But they never realize that that thing is never going to pay for itself. It might be some machine or some piece of equipment they're never, ever going to use. So they spend $10,000 to get $3,000 back on their taxes, but they lost $10,000. So the net loss actually is $7,800 on something that's never going to pay for itself. So if you're going to make a decision to buy something and do it for a business, like a trading business, then it needs to pay for itself in the long run. It needs to help you increase that cash flow. So all decisions that you make in a business really need to help increase cash flow. Now, trader tax status sounds okay. You want to be able to deduct those expenses. So what are the qualifications? Well, let's look at the qualifications as the IRS puts them forward. Now, if you ever want to get a publication from the IRS that talks about investing, publication 550 is that publication. I would wholeheartedly recommend that you download it, maybe keep the different copy, the changed copy that comes out each year. The new copy for 2022 should be coming out here in the next couple months. And I'll be looking for it and reading through it to make sure there's no significant changes, but it is a good reference to have. And it does talk about trader tax status in there. However, here's the qualifications according to the IRS publication. First of all, you have to seek profit from daily movements in the prices of securities or commodities. And you're not doing it for the dividends or the interest or capital appreciation. Those can be side benefits, but the purpose is making profit from daily movements. In other words, day trading, swing trading, very rapid, fairly rapid trading. We'll talk about time period here in a little bit. But this is kind of a general rule here, not quite specific. Well, here's the second qualification in the IRS publication. It's your activity must be substantial. Now, this is very typical in the IRS jargon, is to make a statement and then not define it. What does substantial mean? We don't know. We really don't know. And the third qualification is you must carry on the activity with continuity and regularity. Okay, well, some continuity, does that mean I have to do it all the time? I can't take a break, I can't take a vacation, or what does that mean? And of course, the IRS regs never ever define this. And so as is very common, unfortunately, in the IRS regs, is these are qualifications are extremely vague. And so we have to look further into court cases, because what happens is the IRS will write this stuff up and a taxpayer will say, hey, I meet those qualifications, I'm going to do this. And an IRS agent comes in and says, no, you don't. And so they clash. And somebody eventually takes it to court. And so we end up with some more solid definitions out of the court cases. So here's what the court cases have to say. There's actually 3 of them that I want to look at. And the first one, Endicott versus Commissioner, said that the holding period, most of the holding period, is short-term, less than 31 days. So if you're trading things and you're holding them less than 31 days, you can meet this requirement right here. So obviously day traders, swing traders. And by the way, we're not just talking about stocks and options here. We're talking about FOREX. We're talking about anything, cryptocurrency, whatever it is, you can qualify for this. So less than 31 days. Now, this one is the big one. From Poppy versus Commissioner, this is the one we try to make sure all our clients fall into to make sure that they don't run into any trouble. The trading, they have to be trading 75 to 80% of the trading days per year. Okay, so you're not expected to trade 100% of the trading days per year. You can take some time off, take a vacation or whatever. But 75% of the trading days per year, you need to have some type of trading going on. Now, we add to that, there need to be at least 700 trades per year. Now, for some people, that's not a whole lot, and some people get that in a month. Other people, that can be quite substantial, and they have trouble meeting that. Now, what constitutes a trade? Really, you buy one security, and that's a trade. And then you sell it, that's another trade. So 700 per year, you know, we're talking maybe a couple of 2-3 a day trading days per year. And then 500 hours of trading activity. Now that includes not just trading, but it also includes education, and it includes research. So there's a lot of things. As long as you're doing it for your trading, then you can utilize that. So this is the important criteria actually that we try to make sure we hold everybody to. Now that 500 hours per year of trading, that breaks down to about 4 to 6 hours a day doing trading and research, if you want to break it down between the trading days per year. The third one is the intent is to make a living, either solely or as a trader or supplementary to other income. The K versus Commissioner, this court case, went through and found that the intent was to actually supplement the income the taxpayer was already having. So one qualification is you've got to have somewhere in there that you're going to live on this, or you're going to supplement your existing income, one or the other, which is usually not too difficult to prove. Now, you say, okay, well, these are our conditions for trader tax status. How do we prove it, though? Well, your best proof as a trader is your 1099-B, quite frankly. Your 1099-B and your monthly statements will show the number of trades that you have per year. They'll also show the holding period, less than 31 days. They'll show that you've been trading 75% of the trading days per year. And so they'll show that you're actively. And the idea really behind publication 550, if we read through publication 550, is the IRS wants you to treat this like a business. So, if you were to start up like a restaurant or a mechanic shop or something like that, you're not going to take a month vacation and then work 2 weeks and then do another month and a half vacation or something like that. You're going to put yourself into it about 75 to 80% of the days per year. You might still take a vacation, but you're going to pour yourself into it. And you do that in order to make money for your family or whatever purposes. And that's really, you can prove this with the 1099-B. Pretty much. The only thing that we suggest to our clients is you can't really prove the 500 hours of trading activity because it doesn't measure how much you are actually online. The 1099-B doesn't show your research. It doesn't show your training. So what we do is we suggest you keep a log, just a simple log book of what you're doing each day, how much time you spend on it. If you've got some type of like a time program that you would use for a job or something that's on your computer, you could actually do that too, and just assign it to a specific category. But we recommend that you keep evidence of this so that you can actually prove that you have trader tax status. Now, trader tax status, let me talk about that for a second, is not something that you elect with the IRS. It's just something you do on your return. So this is something that all of you, if you meet these criteria, you can do it for 2022. Now we're getting ready to go into tax season here in a couple months. And if you meet these criteria, you have the ability to deduct the expenses that you incurred through trading on the Schedule C of your tax return. And it's really that simple. It's just you do it, period. And then if the IRS ever questions it, then you've got the backup data to show that you actually meet the qualifications. I would always make sure that you keep that backup data there. Okay, so that's trader tax status. That allows you to deduct expenses on your tax return, get money back from the government. This could be federal, certainly, possibly state, and then reinvest that money into your trading. So are there other additional ways to increase the cash flow? Well, there are, and you may have read about these, form a trading business. I've been talking about this as a business. Even if you do a sole proprietorship, which is just basically a one-person business, and do that on your tax return, you still have a business. And I think it's very important that traders think of this as a business, whether you form an LLC or not, because you really need to understand all the components here. You need to look at both sides of revenue generation, but you also need to look at the expense side of things. And so a lot of times we will recommend to our clients that you form an LLC where all the trading and expenses can be reported. Now, let me talk about this for a second. With LLCs, there's a fee, usually in every state, not quite every state, but every year you have to pay a fee for the LLC. And certainly that's a decrease in cash flow. However, the IRS is less likely to scrutinize a legitimately formed business where trader tax status is not as big of an issue. So for example, if you form a partnership, an LLC partnership, or also called a multi-member LLC, that forms, you file a partnership return every year, and that looks like a standalone business, and the IRS doesn't seem to bother it as much. And when it goes over to your tax return, then it's much, much cleaner. Matter of fact, your personal tax return almost becomes audit proof, depending on what you have, but it certainly decreases the audit risk. And the reason we do this is the cost of IRS scrutiny can far exceed the cost of maintaining the LLC. I've had clients tell me, oh, my return is audit proof. I can prove every number on there. Great. That's not a problem. That's not the question. The question is, if the IRS audits you, can you take out 10, 20 hours out of your week to justify all the numbers on your tax return? That's where the costs come in, because you're having to utilize that time, and time is money. Even if your return is perfect, if the IRS comes in and says, okay, we need answers to all this stuff, you have to take time out to actually do all that. So we can look at this as a little bit like insurance, getting that stuff off your personal tax return, and just a little bit of insurance to avoid the cost of IRS scrutiny. Well, let's look at this in a little bit more detail. How should we do this? Well, what type of LLC? Well, there's actually two different types of LLCs. There's a single member LLC and there's a multiple member LLC. Single member LLC, one person owns it. Could be anybody, any person. There's also multiple member LLCs where two or more entities go in together. It could be 2, 3, 4, 5 people. It could be partners. It could be partnerships. It could be corporations. It could be a mix of anything that come in and own this. Now, the fees are generally the same in the state, depending upon which state you happen to be in. Now, as I mentioned, because the LLC is actually a state creation. It is not an IRS creation. And that's something a lot of people don't realize. So the states are actually the ones that recognize the LLC. And then what we have to do is we have to fit it into the IRS tax code somewhere. And so you may have heard of disenfranchised entities or other things. And actually LLCs are quite flexible because you can choose how they're going to be taxed. But let's look at these LLCs here a little bit closer. A single member LLC or a sole proprietorship, a single member business, is generally taxed on the Schedule C of the personal return, but can elect to be taxed as an S corporation or a C corporation. So you form a single member LLC. By default, the default is it goes on your personal tax return. The expenses go on a Schedule C. The income, which are gains and losses, dividends and interest, those go on Schedule D and Schedule B. They never show up on a Schedule C. Now, that's a bit of a problem, actually, because the Schedule C is actually what creates the IRS scrutiny. So you're deducting all your expenses on the Schedule C. You got your income separated in another place on a Schedule D and a Schedule B, but that's how it works. And quite frankly, a single member LLC does not do anything for a trader. You can just set up a sole proprietorship. You just start using the Schedule C for your trading expenses and do the revenue or the income like you've been doing it, and you don't even need the LLC. So we generally do not recommend a single member LLC unless the person already plans to elect to be treated as an S corporation or a C corporation. And I'll deal with those here in a little bit. A multiple member LLC, in other words, you got multiple partners there, is generally taxed as a partnership. But that LLC can also elect to be taxed as an S corporation or C corporation. Now, here's the beauty of LLCs. Because we have to pigeonhole these things into the IRS tax code, you get to elect how you're going to be taxed. You can also go backwards. So let's say you form a multi-member LLC and you go through as a partnership 1 year and you decide, hey, next year, I want to be treated like an S corporation. You can file an election with the IRS and be treated as an S corporation for the next year. And then the year after that, you can say, hey, I want to be treated like a C corporation. You can go file an election with the IRS and be treated like a C corporation. Then the next year, you can say, hey, I just want to go back to a single member or multiple member LLC. You can do that as well and revoke both of them. So it's very flexible. I don't recommend doing that a lot, but as tax laws change, this LLC concept gives you the flexibility to change how you're going to be taxed. Right now, C corporations are taxed at a flat 21%. I estimate that once Congress starts monkeying around with the tax code, that's going to skyrocket. And so all these C corps then, if it's an LLC, they can elect to go back to a multi-member LLC, or they can go back to S corporation or whatever. So it's really flexible on how you can be taxed. However, I do want to make this point. The number one most audited business is a single member LLC or Schedule C. If you're trying to avoid IRS scrutiny, not that you've got anything bad on your tax return, but you just want to avoid them looking into your return, then you want to avoid the Schedule C on your tax return. So doing an LLC generally can help with that. Now, something about S Corps and C Corps. S Corps and C Corps, even if they're elected, you start with an LLC and then you elect to be treated as an S Corp or C Corp, requires the officers to be paid a salary. So now if you go the S Corp route or the C Corp route, you are required to pay yourself a salary with payroll deductions, FICA taxes, unemployment taxes, the whole shebang. And you will need probably a payroll company to help you out to file the quarterly payroll reports and make sure the W-2s are done right and all that. That can be a hassle. Now, there are reasons for doing that. I'm not going to get into those reasons here. Well, just one reason would be 401ks or something like that. But that's why people would go to S Corp or C Corps. If you're just looking for a simple entity, we generally go with the multi-member LLC. So, matter of fact, I'm kind of jumping ahead of myself. What does Traders Accounting recommend? Well, depending on the situation, everybody's situation is different. We usually recommend forming a multi-member LLC to be taxed as a partnership first. And the reason for that, that is the simplest way of doing things. You say, well, I don't have another partner. If you've got a spouse, you've got a partner right there. Spouse doesn't have to do anything. Spouse can just be a silent partner, and as a pass-through entity, this all passes back through to your personal tax return where the tax is paid. And so you don't have to actually do anything. The spouse doesn't have to do anything significant. They don't have to trade. They don't have to do anything. We've got 50-50 spouses. We've got 99-1 spouses. I mean, you can set the percentages however you want. It all comes back on your personal tax return. So it really doesn't matter that much. Now, there are cases where we do recommend that that it's not be taxed as a partnership. But we always recommend that we start here. And the reason for starting here is, one, it's the simplest form. You can get money into it and money out of it very easily. It's not taxable. Anything you put in, anything you take out is not taxable. You're only going to be taxed on the gains or the losses or dividends and interest, as the case may be. So that'll be your taxation there. So you could put money in, take money out. Very simple to do. Other than that, you file the tax return. Everything is quite easy to do. Now, once you start actually saying, oh, I want to build this structure up, I want to start talking retirement accounts, or I want health insurance or life insurance or this or that, then we start saying, okay, that's a more complex structure. And then we can actually elect to go to be taxed as an S corporation or be taxed as a C corporation. But we always recommend that you start off with the simple stuff first to get the trading stuff secure. Once you've got consistent trading income and you know that's coming in, then we can start looking at more complex stuff such as retirement plans, because you have to have that consistent income first. And so we always keep it simple at the beginning. And once everything is established and everything's going perfectly, then we can elect to be taxed at as another entity and just go ahead and start adding things. So what this does then, it creates a trading business where your expenses can be deducted. So we're still talking expenses here. You can still deduct all those expenses. And by the way, the LLC fee every year is deductible on here. The tax return preparation fee, that is clearly deductible because it's not mixed up with your personal tax return anymore, because that gets questionable as to how much of your tax return preparation fee is personal and how much of it's business, yada, yada. This separates it very nicely. But the biggest benefit out of doing this is the Schedule C is eliminated from your individual return. It reduces the audit risk. So if your return consists of, let's say, just W-2s, maybe some 1099-Rs, a little bit of interest, a little bit of dividends, and you put this Schedule C on it, you are now looking at a possible, you're looking at an audit risk, because the only thing you're putting that Schedule C, the IRS looks at that as made up numbers until you can prove otherwise. And so they're coming at you saying, okay, you need to prove this, this, and this. However, if you go the multi-member LLC route, or S corporation for that matter, you will get a K-1 from that return. And that becomes very legitimate documentation for the IRS. So now your personal return may have W-2s and 1099-Rs and that on it, and it gets this K-1. Everything is provable by a document that has already been filed by the IRS. It almost makes your personal return audit proof. Now, certainly the LLC, the partnership, could be audited, but that's a risk that everybody's got to take. And quite frankly, once you start talking about standalone businesses like partnerships, S corporations, C corporations, the IRS doesn't seem to audit those as much. So we try to get rid of the Schedule C to make your return less auditable, and then put the burden onto a standalone business like a partnership, S corporation, or C corporation. Now, as I mentioned, the partners still claim their share of income on their personal returns as a share of a legitimate business. This is that K-1 I was talking about a little bit ago. When the partnership files its return, you get, each of the individuals get a K-1 from it, and you just slap those numbers on your return. And those go on a Schedule E, Schedule D, Schedule B, but they never ever create a Schedule C, which is the one that we want to eliminate. One other benefit here that we have noticed in the last couple of years is this one. If you file as an individual owner, as an individual investor or business, if you will, on your Schedule C, not only do you increase your audit risk, but you also you cannot really use the home office deduction. Now, why is that important? Well, the home office deduction, the IRS on the simplified method will give you $5 a square foot for your office, up to $300. So that's $1,500 you can write off without having to prove anything. However, when you file a Schedule C as a trader, the only thing that goes on the Schedule C are your expenses. None of the income goes on Schedule C. That goes on a Schedule D. So your Schedule C shows expenses, which means you always show a net loss. And when you have a net loss, you cannot use the home office deduction. It just carries forward indefinitely. So individual traders who are doing this on a Schedule C never really get the benefit of the home office deduction. That changes when you create another entity like a multi-member LLC or have S corporation. You can take that home office deduction then. And so now you have the ability to take that $1,500 or a percentage of your actual expenses and actually use those and deduct those on your tax return. So again, we come back to cash flow, using the tax return to create deductions for us so that we can actually get money back. So that is trader tax status, and those are LLCs. Now let's look at the mark-to-market election. This is the third thing we want to look at to help save you some money, if you will. Now, the mark-to-market election is an accounting method. And by the way, everything I've mentioned up to this point can be used by anybody. If you trade in FOREX, if you trade in cryptocurrency, futures, whatever, it all can be used by them. The mark-to-market election can only be used for stock and options traders and possibly cryptocurrency. There's some debate about that, but I've never got any feedback or any flack from the IRS on deducting cryptocurrency through this, so I don't have a problem doing it. But what the mark-to-market election? It's a different accounting method. That basically it values your account at the beginning of the year. It values the account at the end of the year. And if your account goes up, that's what you pay tax on. If your account goes down, that's what you write off. Now, why that's significant with ordinary accounting, normal cash basis accounting, if you want to call it that, you run into what are called wash sales. And wash sales are very problematic for traders because the IRS has set up a system where if you lose money on a sale and then you go back into the same ticker symbol, really, it doesn't matter whether it's the option has a different strike price or anything like that. If you go into and you buy it again, then that loss transfers to the second transaction. And so we have basically moving losses, and those losses can move over a tax year. And so you could end up, and I've seen it several times, you could end up paying taxes on an account where you actually lost money due to wash sales. That does not happen with mark-to-market. Another thing that happens with cash basis accounting, if you have a losing year, and we've had some in the past couple years, I mean, COVID has certainly taken its toll and the markets have just been crazy all over the place. People have lost money. With normal cash basis accounting, if you have a net loss after you add up all your gains and losses for the year, and you have more losses than what you have gains, then you can only write off $3,000. And the rest of those capital losses have to get carried forward to next year to be used up against other capital gains, or you take another $3,000. So that's another deferred loss. So you get the idea that IRS is trying to take these losses and push them off to the future so you can't take them, so you pay taxes now. The mark-to-market election does that as well. Gets around that $3,000 limit. So what happens is all your gains and losses under mark-to-market become ordinary gains and losses on the tax return, not capital gains and losses anymore. Why is that significant? Well, from an ordinary gain perspective, it's not. But from an ordinary loss, that is. Because then if you have a losing year, under ordinary losses, you can deduct that against W-2 income, 1099 income, etc. Whereas if you're under normal cash accounting and you have a capital loss, you can't deduct that against anything except another capital gain or the $3,000 per year. So it's very significant. Matter of fact, I mentioned this, the $3,000 limit on capital gain losses per year goes away under mark-to-market. I've had people during 2020 doing their 2021 taxes, been doing those this year. They've lost $200,000 and they've written it all off this year, and anything left over gets carried forward to next year, and they get to write it off there. So there's a lot of people I've done tax returns for that lost money in 2021 that didn't pay any taxes whatsoever because of the mark-to-market election. And then your trading account, as I mentioned, is already no longer subject to wash sale rules, and this increases your cash flow. So remember, under the loss side, you get to deduct as much as you have in losses, and so you get the cash, the refund, or the money back from the IRS. You can reinvest that. If you're not dealing with wash sales, you don't have any deferred losses anymore. And so you're paying tax on what you actually made in the account on the upside. And so you're not having to pay extra tax, if you will, and then try to get it back later. That's ridiculous. So as I mentioned, this is only best for those trading options and stocks. You cannot make this election on anything else. Now, this is an election. Unlike trader tax status, which you just do on your tax return, just as long as you meet the qualifications and can prove it, you're fine. With mark to market, this is an election that has to happen. So for individuals, if you make this election, it has to be made between January 1st and April 15th of the year you want it to start. So the first time somebody without mark to market could make it would be for 2023, and you'd have to let the IRS, you'd have to send the IRS the election between January and April 15th. For business, for pass-through entities like partnerships and S corporations, if you already have an existing one, that election has to be made between January 1st and March 15th. However, and this is kind of goes back to the tax tip I was talking about a little bit ago, at the very beginning. If you were to set up an LLC, a multi-member LLC this month, if any new entity has the ability to elect mark to market right away. And so if you set up, let's say an LLC here in November, let's say you get it set up by November 15th and you start trading in it, you can tell your broker you're making the mark to market election. And you can make that election with the IRS when you file that first tax return. But here's something else that's beneficial. Because if you take your short-term stuff that's trading in the personal account right now, and you move it over into the business trading account. And yes, you do have to have a brand new business trading account. So now you've moved everything over into your new business trading account under mark to market, and your personal account sits dormant for 30 days. All the wash sales that you've accumulated in 2022 become regular losses. And so you have really a unique time period right now so that you can create an entity, start the mark to market before the year ends, let your personal account go dormant, and get rid of all the wash sales that you've accumulated for 2022. And that's kind of a strategy that we're working with a lot of different clients on right now. So you can eliminate a lot of the deferred taxes. All right, well, let me go through this. Another disclaimer here. The paths recommended here are recommended paths. They're general paths, and they may not fit your particular situation. If you're looking for a one-size-fit-all plan, there's not one, because everybody's situation is unique. So what would happen is you really need to sit down and you need to talk to a tax advisor on what is best for me. And this strategy needs to be reviewed at least once a year, or should be reviewed once a year, because one, tax laws change, your needs change, or you may want to start off with this multi-member LLC and you realize, hey, everything's going great. Let's go ahead and go to the S corporation side of things so we can go ahead and do a salary and 401ks and stuff like that. So it really needs to be reviewed at least once a year, but there is no one size fits all plan for anybody. So let me talk about traders accounting here real quickly, and then we'll open it up to questions in a little bit. Traders accounting, we do provide entity creation and maintenance. For those LLCs, we do set those up in whatever state you're in. We have registered agents in every state, and we can maintain those for you. So we do provide that service. Also, for those of you who are looking at the multi-member LLC, you say, well, I don't have another person that can be a partner with me. Well, you can set up a family trust. You can own 99% of it, and this irrevocable trust can be set up for the benefit of family members. And you can put 1% of the profits in there. It's really just a paper thing until you pass away. But on paper, you put 1% of the saving or the money in there, and then that becomes beneficial to whatever, and the trust can be set up. We can do that as well to provide that second partner, if you will. We also provide bookkeeping for our trading businesses, whether you elect mark to market or not. Bookkeeping service is something where our bookkeeper goes through every month, provides a financial statement for the trading business. And at the end of the year, actually, it becomes pretty clean because we can prepare the tax return right from that. Very simple. It's kept up month to month, and there's actually minimal effort on your part. Of course, we do income tax preparation for all types of returns. I've done about 800 returns this year alone, over 800 actually, but they've included 1040s, investors who just want to be personal traders, the multi-member LLCs, the partnerships, S corporations, C corporations, we trusts. I even done a pension plan this year. So we can handle the tax returns that you've got. And I've been doing this for over 30 years. So rental property, whatever you've got, it doesn't scare me. So we've seen it all. And then the last thing, of course, is tax and entity consultation. If you just want to sit down and talk to us and figure out what your needs are and what structure would be best for you, we can certainly do that as well. So as I go to the last slide here, we do offer a free ebook. Jeff did put that link into the chat there. So please click on that. You can download that ebook. If you want to have a consultation with us, or you want to ask about pricing and things like that, please call the number 800-938-9513. We'll be happy to talk to you and let you know what's going on. So I'm going to ask Jeff to come back on here and find out, does anybody have any questions about anything?
We have quite a few questions. You ready to answer them fast?
Sure, let's go ahead.
All right. David wants to know, is crypto trading still exempt from wash sale rules?
Yes, it is. It does not, wash sale rules do not apply to crypto at this point.
All right, thank you for the question, David. Michael wants to know, does this have to be for a company like LLC, or can an individual claim this?
No, an individual can do all this. The only issue with individuals doing this mark-to-market is you still, if you have mark-to-market as an individual, you have to have trader tax status. And if you have trader tax status, and you've got that Schedule C on your individual return. So that's the only issue there.
All right, Bill wants to know, I thought you had to send a letter to the IRS when you elect to use trader tax status.
No, not trader tax status. That's when you do mark-to-market that you have to send the letter to the IRS. Trader tax status is just something you do whenever you want.
Don asks, was that wash sale protection resulting of transferring 100% of a personal account over to an LLC account, open positions out, and the zero balance personal account dormant for 30 days?
Yeah, basically what happens, and I know with options and stuff like that, you have multiple positions and you can start transferring it over in piecemeal. But if you don't go buy anything else in your personal account for 30 days, then those wash sales will automatically become regular losses.
Cool. Bill says, I guess my question about a letter that I mentioned above was for mark-to-market accounting, okay, and not trader's tax status. Does that change the answer?
Yes, and if you're interested in that, the publication 550 does talk about the language of that letter as well.
Oh, 550 is my favorite publication. Always, it's a page turner. Last question, actually. I've always followed as a sole proprietary. Let's get the details of an LLC. What about being able to contribute to an IRA?
Here's where we run into a snag over all of this. Trading income, investment income, whether it's interest, dividends, capital gains or losses, ordinary gains or losses, none of that can be used for pension or retirement, whether IRA or 401ks or anything. You have to have earned income, basically W-2 income. So this is why we start talking about S corporations, because you have to pay yourself a salary. And once you get that salary, then we can start talking about some type of pension plan. But you can make $5 million a year in investment income, and you can't put a dime of that into any retirement plan.
Sure, you just got through all of the questions. Oh, wait, one more. Jess wants to know, if cash is transferred out of the LLC, is that subtracted from the beginning of the year value?
No, actually, that's a great question. When we go through, I gave a very simplistic view on that. But when you go through and value the account, you also have to adjust for money put in as well as money put out, taken out, interest and dividends, other things, like expenses and stuff like that. So the calculation is a little bit more complex, but the idea is very simple. We try to figure out what you actually gained, and that's exactly what you pay tax on. But we do adjust for those contributions and distributions.
Okay. All right. Get your ebook. We just have put the link in both the YouTube chat and the GoToWebinar chat, so it should be there for you. Questions, give them a call at 800-938-9513. Jerry, thanks for bringing us back into time.
Well, thanks, Jeff. I appreciate you having me again.
Also, thanks for being illuminating on taxes. It's always nice to have a little. You did a great job. We appreciate it.
All right, thanks. Take care.
All right. Thank you. All right.
Bye-bye.
Bye. Okay. Yes. Okay. I'm going to go ahead and change the presenter to me real quick. And we'll go ahead and show my screen. And we'll go ahead and go over to the slideshow. Again, I hope you enjoyed that. Jerry does a really good job. Very, very Don saying excellent. Jerry says, fantastic, thank you. Good job, Jerry. We appreciate that. Frederick says he just joined. He's going to watch the recording for everything that he missed. Jerry, I'm going to go ahead and post the thing into the chat in just a minute. But first, let me talk about our sponsor, Stocks and Commodities Magazine. They've been supporting us for a number of years. If you do a subscription to Metastock today, they're going to give you 5 months. If you do if you spend $300 with us, you're going to get a 2-year subscription for free. Stocks and Commodities Magazine has been great. And one of the things I always think about trading is there's always something you can be learning. And you obviously agree because you're here today and you're watching the class and you're looking to learn more stuff. One of the things I like about Stocks and Commodities is for the last 20 plus years, every month I come in and there's a new magazine on my desk that has great articles that talk about trading and things like that. I'd recommend you do it. Just as that, thanks, Jerry. It was excellent to set the foundation. I'll follow it further. Bill says that was excellent. So we really appreciate all of the great presenters that come in, and we appreciate Stocks and Commodities Magazine. Kelly, let's quickly give away a prize, if you don't mind. The prize that we're going to give away, we're going to do this real quickly because I want to stay kind of more in time this time, is a 30-minute strategy call with market taker mentoring success coach Dan Passarelli. He usually charges $500. It's a one-on-one appointment with him. We're going to give that away right now. So Kelly, if you could give me a number between 1 and we're at 10,515 right now.
Okay, let's go with 1,002.
Okay. Every time I get that number really quickly, I remember when I used to be like scrolling and scrolling and scrolling. Congratulations, HT Wen. You won. We'll have them reach out to you with Dan. We'll have Dan reach out to you and kind of help you get set up for that strategy call. Congratulations. All right. And thank you, Kelly, very much for the support and the assist to that.
As always.
All right. And we're Metastock. We've been talking about our scanning and our testing and our forecasting and kind of like all the great tools that we offer. The special that we're offering is you can try our software. It's been rated #1 29 years straight. If you pay for a month, if you're in the US, it'll cost you $69 for our DC version. You can get the second month and the third month for free. We call it an extended trial. That's $23 a month. We'll help you set it up. We'll have somebody call you and walk you through the program. We call that white glove support. If you ever have questions, we actually keep more people in support than we do in sales and marketing put together, and you can call them and talk to them. So you can set that up at metastock.com/conf promo. You can call us at 800-882-3040, and you can visit us online at metastock.com/sales chat. So, and our next presenter today, wow. Something got a little bit messy here. Hold on just a second. Something got incredibly messy, and I'm wondering if I can kind of fit. Okay, there we go. Let's start here.
It's me.
There you go. Todd Horwitz is our next presenter. I we affectionately call him Bubba. I think that's his nickname. You can see it right there on his badge. Bubba, welcome to this conference. It's going very, very well.
I listened. I've been hanging out and listening all day, so it's good. I'm very impressive as always to be involved in this.
Yeah, we love. Oh well, it's only as good as the speakers, and that's why we love having you here. Let me go ahead and make you the presenter.
All right, and I got. This is always. Wait, I don't want to share this screen. What is it? I got to figure out which screen I want to share. Okay, hold on.
The one that you're showing right now looks like it's a brokerage platform.
Yeah, that's my area. I think that's what I want. There you go. Is that good? Is that my presentation? Got it.
You're all good.
If you guys want to see what I look like here, I'll give you a quick view because otherwise I have to look at another way. This is what I use for when I'm on TV. But what's up, everybody? All right, let's rock and roll. I know that we ran over a little bit, so let me turn on my camera so I can focus here. And anyways, what's up, everybody? Welcome aboard. It's election day, and of course, who knows what's going to happen? The markets appear to think that there's going to be some change, so we'll see. But our futures portfolios models work in all markets. They work on a regular basis, and of course, it's all mechanical. There's no subjective thinking. There's no, well, maybe everything is automatic. Okay, and I think that's one thing that you want to remember. That is in the trading world, the more you can take your mind out of it and your psychology out of it and become automatic, typically the better off you're going to be. And I think that's important to understand as a investor, trader, whatever you're trying to do, because I've done this for a couple of weeks and I'll give you my background in a couple of seconds there. In the meantime, I'm sure you've seen this all day long, the disclaimers, and past performance is never indicative of the future. I can only tell you I will show you and share with you live results of our stuff through Saturday. And I can tell you that I've been doing this for a week or two, so you'll see. And I have been doing this for 43 years. I am Todd Horwitz. I am still currently a member of the Board of Trade. Okay, but I'm a regular contributor to media, and every trade that leaves my office, I am also involved in. So again, you're not getting a recommendation, you're getting something that I'm going to trade myself at the same time as you. So today, I will talk about what are our objectives, what are managed futures. We talk about it's the math, big numbers guy, our different portfolios that we're offering, how you can take advantage, and of course, any questions that you have regarding anything. If you want to talk about sports, you want to talk about the election, well, I'll answer anything. So in the meantime, always ask, are you tired? Are you tired of? And again, are you tired of the false hope, the false promises, and the real emotions? And that's, again, the world of trading can create a lot of interesting dynamics inside your mind, okay? But if you always remember that your worst enemy is the person that you look in the mirror, you can get away from that because there are so many things out there that like winning the lottery. There was one lottery ticket sold for $2.4 billion in California after they had trouble drawing the numbers. There ain't nothing for free, and nobody's handing out $100 bills on the street corner. You have to learn and understand what you're trying to do, and part of that comes in the forms of what we call drawdowns. Now, if you traded for any period of time, you know exactly what I'm talking about. Drawdowns are a part of the business. Okay, you cannot avoid the drawdown basis. Okay, it's going to happen. There is nothing that's going to be 100%, but there are ways to use that drawdown to your advantage. And if you can establish your win rate and your percentages and things like that, then you have the right idea of when you can press that portfolio, when you can increase your size. But one of the things we always encourage is never increase by adding more money. You want to increase by using profits that you've made. In other words, we want to create organic growth. Okay, we're not looking to continue to add money. We're looking to grow and build from within, and that's exactly what we try to do at all times. Because if we don't do that, then we do not actually press our portfolios. And if you've heard of the turtle traders, Richard Dennis, who's a friend of mine, and of course Richard and I actually traded together on the floor of the CBOE in the 80s, okay, a good trend following system will keep you in the market until there's an evidence that the trend has changed. Now, if you watch markets and you read charts, you know that for the last, I don't know, 6 or 7 months, we really haven't had a real trend. It's been pretty choppy, which makes trading tougher, okay? The worst pattern in any market is the pattern of consolidation, because it keeps fooling you. It breaks one way and it thinks it's going to go up, and then it breaks the other way and it needs to go down. In the meantime, it stays in the time of greatest uncertainty, which is known as consolidation. But good, solid trends will keep you in. And there are times we've been in the same product for 48 weeks out of a year. So again, it's understanding that you have to deal with the good and the bad, knowing that the markets go through these different phases. Okay, and what we're using is our own proprietary algorithm. Okay, and that algorithm is based on math, it's based on volatility, it's based on the phases of the market, it's based on everything that we have put together over the years of trading. Okay, that we use. Myself as a floor trader, which is how I started. I was a floor trader for 30 years. I didn't have the advantage of looking at a chart. I had the advantage of having to be the fastest to make a decision to get an order. Okay, we were trading the order flow. We didn't have time to look at charts, but now we can use an algorithm that will determine what the algorithm is calculating as a trend. Okay, and that trend will exist as long as it exists. And there is, just like there's no determining how long a market will be in consolidation, there's no determining how long a market will trend for. And that's very important to understand. We don't try to outguess or get out early, and you'll see all the rules that we go by. But what we're really doing now is we've gone from myself as a floor trader trading order flow to basically 100% mechanical trading. Okay. And in trading, the major reason traders lose money in the long run is because they miss trades, they let losses run, and they take profits far too early. Now, I'm sure none of you have done that, but that is something that is very important to understand in this world of trading, is that when you have a good trade, you got to let it run as long as it can. And you have to let it run until there's a consideration that says that the run is over. The market has to dictate to you that run is over, and that's what the algorithm does as well. It will stay in, and we're never going to buy a bottom. We're never going to sell the top, okay? Because we want to allow that market to run as long as it can run and not get out early, okay? We'd rather, just like I'd rather enter late and have more confirmation, I'd rather exit later knowing that the run is over, okay? And of course, we use regular mini futures, but we also use micros. And the beautiful thing about micros is, of course, they're much less expensive. They take much less margin, and they allow you to create a much more diversified portfolio. Okay, their fees and commissions are lower. And of course, the best thing about futures is there's no FINRA day trading rule. Now, if you've never traded futures before, just remember that not only are futures better and cleaner markets for trading, but they also offer better tax advantages. And I know you just listened to a tax advisor. They're taxed at a lower rate. They're taxed at 60/40 instead of the normal rate of what other option classes are priced at. So it gives you many advantages there. And of course, they've been very popular, and that's what makes a great blend into our portfolios, is that it allows us to trade many, many different products and build bigger portfolios of more products, because something will trend at one time and one thing will be in consolidation. So we get an opportunity to build these bigger portfolios with more products that gives us a greater edge to the market. Now, we all know that everybody's got the magic sauce, the secrets. There ain't no magic. Okay, but let's be clear. Okay, trading is work. Trading is understanding markets. Trading is about being prepared to lose, okay, to being prepared to not let the markets get emotional, okay? So you have to remember that no matter what is promised to you out there, there is nothing that is going to guarantee you a profit in the next week, month, or day. I mean, again, any of you who thinks you're going to take 5,000 and turn it into 500,000 tomorrow, it shouldn't be involved in the markets, period, because that is not what markets are. It may happen in gambling, but it doesn't happen in markets. Okay, you have to understand all the different factors that take place in markets. Okay, and if you want to know the secret, okay, or the holy grail, okay, it's understanding market probability. Okay, you know, I've often given many webinars, and I've been, you know, I've only been teaching, other than people that work for me, for 10 years out of the 44 I've been in this business. And you know, it's the whole business is about probability, and it's like playing games. And if any of you play any games like poker, gin, backgammon, or bridge, those are mathematical games that the better player is going to win. Okay? They may not win every day, and they won't, but they will win over time. Trading is the exact same thing. You will win over time if you play and set up the probabilities. Okay, you cannot put yourself in a position or force yourself that you have to make money today. Okay, because there's no guarantee you're going to make money today. Okay, you can't set that as part of your game plan. If you do, you're going to be very disappointed. Okay, you have to allow the markets to settle out. You have to allow the markets to trade. And if you've been watching today at all, for example, I know you're on these webinars. If you've been watching today, the NASDAQ was up 150, then it was down about 80, and now it's back higher again. So again, there's certain markets that are just much more challenging. And this election market has been extremely challenging because they've been stuck in a range. But if you understand the probability, you are putting yourself in the best position at all times, which gives you the best chance to make profits. And by managing your money properly and not being over leveraged to the market, you are using probability to its best. Now, you know, again, I get lots of notes, but here's one. Very impressive market analysis, uses the best in the world, most consistent and methodology, most rigorous. Drop the emotions, don't listen to the pundits who comment on casualty-based and reading the news. That's from a professor at Cornell, okay, Cornell University. The market may not always be rational, but the market is always right. Okay, you can't argue with the price action. If a trade goes against you, exit the position and move on. You know, too many of us think that we know what's going to happen next in markets. Maybe you listen to TV. Now, me personally, although I'm on the news and I do a lot of media, I never watch the news. I actually watch VSiN Sports and Information Network all day. But the market's always right, because at the end of the day, when they mark your portfolio, okay, it either made money or didn't make money. And you can't come to me and say, well, the market was wrong. In fact, when I had guys working for me, because when I'd hire clerks, their goal wasn't to be a clerk. Their goal was to be a trader and have me back them. So they had to start as a clerk. And everyone who ever came back and said the market's wrong and that's why they lost money, I said, well, you're fired, because the market is never wrong. That's the first lesson in trading. Okay, is the market is always right. Why professional traders use rule-based trading system? Because listen, you have to have a plan, which is part of setting the rules. Okay, if you don't set rules and parameters, then you're basically playing wild. Okay, everything has to be done with discipline and patience and money management. That it all comes back down to that. Your whole setup has to be pre-planned from the moment you enter trading in general, not just a position, but trading in general. Know how you're exiting, okay? And you should always know that you have an exit point. Okay, now we have an exit point which is created automatically as it trades. But if you're trading on your own, a trade you enter must have an exit. And for example, I do live day trading with my members every morning, where I trade my own money with them. Okay, and we know exactly where we're setting our exit when we enter a trade. Okay, and I think that's important for all of you, whether you become a member of mine or not. I want you to be aware of that and be ready for that, because that will make you more successful immediately. Now, the rules that you must follow to win with algorithmic mechanical trading, you must have no opinions about the markets. Now, do I have an opinion? Of course I have an opinion, but I do not trade my opinion. I have an opinion because I have to for my media spots, but other than that, I'm not going to trade for my opinion because I know better. And listen, everything I talk to you about, I've already experienced the bad side myself. Okay. If you violate rule number 1, you will lose money. A trend is the basis of all profit. If you don't understand this, you should not be trading. If you pay attention to the news, you will lose money trading. Okay. Now remember, the news is old. By the time you hear it, it's already been priced into the market. Okay. And I would bet you that the market result, the election results that we're going to get tomorrow or late tonight, have already been priced into the markets. Okay. If for 1 minute you think you know more than the market, price is too high or too low, the market will take your money. It will always punish traders with such hubris. We never sell at the top, nor do we buy at bottoms. That is for fools who insist on being right as opposed to making money. If the market is going higher and you are short, the market is right and you are wrong. And if you're long and the market is going down, you are wrong. Okay? Again, it's that simple. Okay. The objective in mechanical trading is to mirror the market. You want to always be doing what it is doing. And if you do, you will put high probabilities on your side. And trend mechanical trading gives you a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term profitability. And that's what everything we do is about. It's about gaining the edge to the market. And just another note, this is much longer, but basically it says, I violated your rules and finally realized that if I left it alone, I would be fine. And of course, I'm still a member for now about 10 years. But again, it's about following the rules and not trying to outsmart yourself. Okay. Now, what are our objectives? Well, make money is the first objective. I mean, life comes down to 2 things. One is money. Okay. The other one is your choice, but one always is money. We try to keep the variances small. And again, it's not always possible, but it is an objective that we have. We like to have our portfolios to be somewhat balanced. Okay. And of course, we like to keep the drawdown small. Those are all things that are important. Now, again, nothing can be guaranteed that will happen, but that's why we use the rest of the things that we do while we're trading to keep ourselves in the game so that we're prepared and dressed for the party when it takes place. Manage futures with algorithmic trend trading. Successful traders always follow the line of least resistance. Follow the trend. A trend is your friend. You've all heard of Jesse Livermore, I'm sure. A great trader. Of course, he had his own issues like others, and I think that's what we have to try to avoid, right? It's the emotional, it's the psychology, it's the mental side of markets that cause people the greatest amount of grief. Now, I like to call this my family office, right? Now, if you know what a family office is, typically only the very wealthy get invited into family offices because they get special deals, they get special things. And I think that's what we try to offer, because my members, I really try to take care of as if they were family. I try to take, again, I want everybody to make money. I'm not here, to do anything but help people make money. That's what I like to do. Because again, I could just simply do nothing and just trade, which is what I've done for 44 years. Okay, but I decided to, I put in a high school program into high schools and try to teach financial literacy, and my experience in the business has been obviously very long and extensive. So I want to help everybody that wants to be helped. That's what we try to do. Okay, but mechanical trading systems save you from yourself. Okay. Now, again, this is, I can give you 1,000 examples, but one quick one always is somebody goes in to make an investment on one item and they go to make a trade on another item, and the investment, which they were going to hold for a much longer term, pops and makes a little bit of money right away. And of course, the first reaction is to sell and take the profit, but the investment, the trade that they made is losing money. So they turn the trade into an investment, which is a dog, and it continues to go lower, while the item that they sold continues to go higher. Okay, so you want to save yourself from yourself. Okay, now being a poker player, okay, which I also play, and I played. I live part time in Vegas now. Okay, but in 1993, I lived at the Mars Hotel for a year and played poker. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. Okay. Now, we're talking about trend trading. That's all we're trying to do. You know, scalping, trying to take little bits and pieces of profit out of markets. It's too hard to do as a retail trader. And don't forget, you may think you're getting, buying the bid or selling the ask. You ain't. You're either, if you're selling the bid. Okay. You may think you got it, but believe me, you can't do that as a retail trader. And I'm a retail trader just like you. Price is everything. Ignore the news. Buy a future when it breaks out of a range. Sell a future when the trend changes. Don't get out before the trend changes direction and stick to the system. That's the biggest flaw in most is they forget to stick to the system and the methods that work. Now, of course, are you an amateur trader or you want to be a professional? Because amateur traders want to be right. Pros just want to make money. Okay, which are you? Do you want to make money or do you want to be, or do you want to try to guess the market and be right? Okay, I mean, that's the whole key. Right? The secret ingredient of profitable trading, okay, is this: knowing what your win rate is. Okay, and again, whether you're trading with me or on your own, understand what your win percentage is. Okay, because that will help you size the next trade properly. That will help you understand when to press a trade, because it'll come down to the equity curves, which you'll see as well. But our win percentage is about 66%. Okay, which means that, you know, out of every 100 trades you make, about 66 are going to be winners. Now, we are playing based on, of course, the law of large numbers as well. And that's also something that's very important for you to understand, is that, you know, even if your win rate is X, it takes time for that win rate to play out. And I'll go back and refer to my day trading with members in the morning. Okay, you know, we have a win rate there a little bit higher than 66 right now. But the problem is that we've had over the last week, because of the lousy action, we've only had 6 trades in 8 days. Okay, and we have the opportunity for 120 trades an hour. Okay, so you can see how slow the market's been, so it takes longer for those numbers to play out. But we are also extremely conservative when we're trading. The keys to success are consistency, discipline, patience. They cannot be bought. Just like you can't buy time, okay? You have to be prepared to wait for the right opportunities when you're trading, okay? It's very important to you as a trader, as an investor, to keep the emotion out and play the probabilities. That's what it is. And of course, if you remember Rocky, what you need is a manager, okay? Now, again, we're not looking to be manager, we're looking to help you move along. And just another note from somebody else: thanks for making the changes to 70K. You are so successful. You still take care of the little guy. You're always ahead of the game. I admire that. You are an inspiration to me, an example to follow. Thank you. And again, okay, I try to do everything I can for my members. Okay, so we have today, we're offering or showing you 3 different portfolios, 3 different sizes, from 350,000 down to 10,000. Now, there's a few in between there, but why make it confusing? This is the concept of we're using. And the portfolio that's 350,000, okay, is using 3 times margin. So the margin requirement is about 115,000. Okay, it takes 350 to open the account. Okay, if you want to do it properly. Now, people have tried to do it with less, and sometimes it works, sometimes it doesn't. Okay, you know, again, anytime you're dealing with margin, you're dealing with leverage. And when leverage gets out of control, you know, leverage is wonderful when you're making money. Okay. When it's going against you, it doesn't feel so good. Okay. And we have a 45,000 model, which takes 14,000 and change for margin, or a 10. Okay. Those are all basic, using the 350 uses 29 different markets, all the futures and commodity markets that are liquid. Okay, the 45 uses a combination of micros and minis, and the 10 is basically all micros. Okay, so again, you have your choice of where you want to go. You also have your choice of letter of direction trading. Okay, so if you don't want to make the trade yourself, we have a partnership with a broker that does it for a very reasonable rate. Okay, less than anywhere else you'll go. Okay, and in fact, they do all my trades, so I don't have to think about them because I'm in every portfolio. Okay, now to look at this year's returns, the 350 based on the 3 times margin, so based on 350, it's made 3.9% this year. And it's obviously been a pretty choppy year, as I said. The 45K has returned 22% this year, and the 10 has returned 25% this year. Now, if we look at these same portfolios just based on margin, okay, obviously the returns are a little bit bigger. But again, I'm not interested in selling you or convincing you on dreams. I'm trying to teach you something that's going to work for you forever. And these are all based on no pressing, no adding on, just straight trading. Okay, just straight, continue to grow one lot at a time. And of course, many of my portfolios have many more than one. And in fact, I think my biggest trader's got 50 contracts per future in the 350. So you can do the math, 50 times 350,000. Okay. Now, here's what the portfolios look like. This is the 350, and this is active. This is from Saturday. Okay. The yellow highlights are just either positions that we're going to change direction or they're going to be rolled to a new expiration. Okay. But these were the current open positions. These were the dates that they were open. So what that means is that we don't trade during the day. We don't get caught in the whipsaw of things that can happen during the day, like the emotional part of this market that is just we've just been watching. If you were, like I said, if you were watching a little bit ago, I send out the trades at 3 o'clock in the morning or so. Okay. And again, if you trade them yourself, you're welcome to put them on anytime you want. If you trade them through our partner with Letter of Direction Trading, then you can, excuse me, then they make the executions at 7:30 Eastern time. Okay. But here's the 350, all the open positions, all the markets that we trade. Okay. And here is the equity curve of the 350 as well. Okay. You can see that it's been pretty much consolidating for almost a year or longer. But again, it still has managed to make profits. Okay. And this, just full disclosure, this started out as a 226. But of course, margin requirements have gone up. And now that the exchanges are using what they call span margin, okay, it changes on a daily basis. So we had to move it up to the 350 to keep up with the times. The 45K, okay, now here's the products that this trades. Okay, it trades from currencies to grains, crude oil, gold, and a couple of the indexes. Okay, and of course, those are the exact current positions as they sit. Okay, and of course, when you look at the results, of course, you can see that it has done nicely from lower left to upper right, and it's into a little bit of a drawdown. And of course, at this point, if you had the capital, you might be looking to add on to your positions on the next change. Okay, and of course, then there's a 10, which is all micros, okay, or minis, because the grain markets don't have micros, they have minis. Okay, but we also have Bitcoin in there. Okay, we have the Russell in there, but it's something that you can use. And again, it's a good starting point if you're afraid, if you've never traded futures, or if you want to test it out. It's a good method. If you want to build something that you can build on and grow into. So again, there's different choices and different reasons that people use different portfolios. Now, here's the equity curve for the 10K itself. Okay. And again, you can see lower left, upper right, and it had its drawdowns. Again, I don't ever hide from the facts. Okay. I am not interested in convincing. I want happy people that want to be members with me, that want to learn. Okay. Because that's what I do, is I teach. Okay. And I want you to understand how markets work, which is why we do training sessions for these as well. Now, again, the trading itself is automatic, but the understanding of what goes on in markets, when you look, like this is what I'm using when I'm trading every day, right? With my members. Okay, we're using 4-minute chart. We're using actually 4 minutes as a long term and 1 minute as a trigger point. But if you look at the longer term charts, you can see, and this is what I'm teaching from, so I can share with you and show you, why things are happening, even though it's done by the algorithm. I can also explain to you, what's going to happen, because I'm marking these up each and every week. So we do training along with this so that you have a good understanding of markets, which will help you in many other facets of your trading life if you're going to do more. Again, many who trade many different things. And I think one thing you have to remember is to hone down and make sure that everything you trade has a plan based around it. Okay. Now, I had some questions that are sent in to me, and I have a margin account at IB. Could I trade in this account, or would it be preferable to open a separate account for futures? Well, I mean, you could trade in an account that's already existing with other positions in it, but if the other positions could be in create grief for what you're trading now, you may want to have a separate account. And I would prefer you have a separate account so that you can see your actual results. Okay, I do send you the actual results every Saturday morning, but I would like you, again, I think it's easier to have a separate account, but that's up to you. Okay. If I open a separate account trading 128K, how much should I fund it with? And of course, you would fund it with $28,000. Okay, that is if it was a 28K, we're talking about the 45. So you'd either fund with 10, 45, or 350 is what I've showed you today. I'm Central Standard Time, not really a morning person. Well, I get up at 1:30 and go to the health club every morning. But so with your trailers coming out at 3 or 4 a.m., I wouldn't be making trades until 8 or 9. And of course, that's fine. It really doesn't matter. Remember, we're not trading for 5 minutes. We're hoping that these positions are on for months. I mean, the longer we're in a position, the more money we're making. Okay. So again, it's when you put it on, I could put mine on at 3 o'clock in the morning, and you could put yours on at 7:30 in the morning. You might get a better fill than I do. Okay. Again, this is not a rush. Okay. This is not, I got to be in now. This is simply, I send them out because that gives everybody in every time zone the same shot, because we don't want to front run markets. We want everybody to have the same opportunity. Okay. Which is why mine is all trade. I don't trade it. I let CTG do all my trading for me. Okay. I just send them the signals. If I decide to use CTG to automate trading, what is the cost? I think they're about $7 or $8 a side. Okay. They're very inexpensive for auto trading. And how do you get set with them? I will send you their information, and one of the owners will reach out. They are by far the best futures broker ever. And just a word of advice for all of you. If you do trade futures, I recommend you get a futures account somewhere and do not mix it in an equity with an equity broker, because equity brokers offer futures only as a courtesy. It is not their specialty. You do not get the same breaks, the same margins that you get from a futures broker. So again, that's up to you. If you start on a monthly plan, can I switch to annual later? Yeah, listen, I'm on your side. Okay, look, I just want you to be happy. I want everybody to sit around, have a good time, make money. I mean, my group's going out to Vegas on December 5th, 6, 7, 8 for class. December 5th is a cocktail party. We do a once a year seminar. So, can you advise me when you think it is a preferable time to initiate the positions? Would be, look, you get a change, you initiate the trade. If you're opening brand new, you open all the trades with the current signals as they are. I don't know how long the current signal is going to last, nor do I know when it's going to change. So I'm not going to wait. I want to get in, knowing that if I'm wrong, it's on the wrong side, it's going to reverse. Okay? That's what you want to remember. Again, this is not about timing, about timing the market. This is about being in a position that's going to be on for an extended period of time. Now, every day, every morning, you'll get something that'll tell you that there's an update. Okay, every morning, the futures gets emailed out about 1:30 a.m. Central Time. Okay, and all it does is it'll tell you if there is new trades, and if there isn't, it'll say no new trades. Okay, it's pretty simple, right? Pretty easy, nothing complicated, and it'll tell you exactly the trades that we want to make and the portfolio it goes into. Okay. Every week, every Saturday morning, about the same time, you will get a weekly report which has all the portfolios. It'll show you all the results, okay, for that week, because we want you to be apprised and be on top of it. And again, I want you to have the accurate results of what it is. So if you're doing it on your own, you can match up against it, and you will see that these are what you will get. Okay. You got to make it bigger. There's so much data because this particular one, the 350, which was a 226, goes back about 7 years right now. Okay, and it started with 226, and it's actually has over $1 million. Okay, or just under now. But again, these are every week you get the results. Okay, there's no and you see the results for an extended period of time. There's no, again, I don't hide from anything. That's not my job. Isn't to hide from you. My job is to help you. Okay, so when you look at markets, we want to make sure that you are very well equipped to move on and move forward. Okay, we want you to be in a position to get to that 350 if you don't want to start there. And I understand that not everybody's got 350,000 laying around. Okay, but we want you to be able to grow into that. I mean, that is our overall objective. Is again, my job is to educate you and help you become better at what you're doing. And that because I can help you across all of your trading and your investing. Because again, when you learn the things that we deal with, you will find that it is much better, and you'll be much more equipped when you learn how to plan yourself and plan your capital. Okay, so at the end of the day, again, it's all about following the trend. And if you look again, we go back and look here. I mean, we really have in this point pretty much a trendless market. Okay, you've had some whipsaws, but you've had very little action. And I would suspect, volumes continue to drop as well. And I would suspect that, I knew that the election was a big point, right? I mean, it's been a big talking point. And, we had the Fed last week who continues to hike into a recession, which makes absolutely no sense, but who am I to talk? You had the jobs number, but those had very little effect on the markets. Why? Because I think that everybody was waiting for this election to take place. And it doesn't mean that tomorrow, all of a sudden, that things are going to change and we're going to get busy again, because Thursday you got CPI. Okay, so but I think within the next 5 to 10 days, you will start to see business resume, and the markets resume, and their longer term trend really start to define itself. Okay, which is all we really want. We want the trend to be defined. Okay, we want the trend either up or down. To me, I could care less. Okay. Up or down, just give me an extended period of time where that market is going in that same direction, and I'm going to be a hell of a lot happier than when the market is consolidated. Okay. Now, if you want to become a member, okay, with me, and you want to take advantage now, every day you get a daily text and an email, which gives you the updates. Okay. You get weekly, you get all the portfolios with the different profit and losses. Okay. You get trading sessions that are live and recorded. We have letter of direction trading with Capital Trading Group, which is out of Chicago. Okay, and I've known these people for 30 years. The two owners, they have the best customer service in the industry. Okay, and today, those who come on today, you'll get a free 6-session option course, which I've done. Okay, even though it's about futures. I've written 2 books on options, but again, the concepts are the same, which is why I want you to have them. Okay, one is a longer term trader and one is a short term trading, but you'll get them both on PDF. Okay, and not mentioned here is anybody who signs up today I will give you 30 days free of trading live with me every morning. We trade 9 to 10 Eastern time every day, with the exception of Jobs Friday, which we trade live from 8:30 to 9 or 8:30 to 9:30, depending on what's going on. Okay, so in the meantime, you can get all this, and if you want to become a member today, all you got to do is go to BubbaTrading.com/futures. It's either $99 a month or $1,000 annually. Okay, and you get the 6-session option course, you get the books, and you get 1 month trading live with me. And if you want to stay there, you can do that as well. We'll figure something out. But again, this is about purely mechanical trading, trend trading, and takes all your decision making out. And if you have any questions, please feel fire away. But it's BubbaTrading.com/futures. I'm here to help you. And again, I want to be able to educate you. If you have any questions now on anything, it can be about what we're doing now or any other trading question, or if you want to know why I bet last night, whatever you want, it's all good. So I'm here to answer questions. I know I finished a little quicker, but I can't help myself. So I don't know. Let's see. Can I see the questions here, Jeffrey? Yeah, I think I can. Let's see here. So okay, this is not. These aren't. Let's see here.
Hey. Sorry about that. I wasn't quite ready for you to quit.
Well, I didn't quit. I left room for questions, and I was showing some markets, and I got plenty of material. I just, I like to always get plenty of time for questions in case there is any. And if there's not, I got stuff I can cover.
For sure. So we've got BubbaTrading.com/futures, $99 per month.
Yep.
$1,000 a year. Let's go ahead and knock that out there. Do you think, here's just a kind of a generic question for you. Do you think today's election is going to have any impact on the markets tomorrow?
I think it may. I think a lot of it is pricing in a changeover of the House, which is why we've had the rally. I think that if there's a shock and the House doesn't turn over, this is not a political opinion. This is a historical fact that almost every midterm in history, the House has turned to the other side, whichever side it is. Okay.
That's always true. Yeah, there's always usually a change.
I think that if the House doesn't turn, I think that the markets will be in big trouble tomorrow morning. I think there'll be a big sell-off. In fact, I think that if the results come out early enough, which is always questionable, but if the results come out early enough, you could see a down limit. You can see the futures down limit tonight. Okay. Now again, I'm not predicting that, but that would be my opinion. But my opinion is the markets assume that there's going to be a change in the House, and they've rallied accordingly based on that change. They still don't look great, and none of the economic situations have changed in the country. So there's a lot of reasons to be concerned about markets. But again, remember, the market is always right. But I still think it'll probably be pretty quiet tomorrow unless there's a definitive answer tonight, one way or the other. If there's a definitive answer, you could see a little bit of a pop with a changeover. You could see a sell-off without it. But I would suspect that will be still fairly flat because you do have CPI coming out on Thursday. And I think that these markets are going to start to pick up some liquidity and some action. But I think it's going to be, probably in 4 or 5 days as it kind of gains some momentum in one direction or the other.
All right. Another question that we have coming in is for stock traders. Is this something that would be applicable to stock traders? How about indexes, ETFs? Is it just futures or what instruments would be applicable?
Well, actually, we use the model I'm showing today is just futures, but I do have a similar model in equities, okay, that uses options, okay? And we create, if you understand options, we create risk reversals, okay, which is basically creating synthetic stock so that you can, carry a large position, okay, in a stock without having to put up all the capital. And so, yes, we have the same algorithm that does use that uses equities, and it uses the spiders, the Qs, the diamonds, Apple, Amazon, and many of all liquid stocks, whatever we can find that's we won't put anything that's there that is not liquid. Okay, you have to be able to execute the trade. And believe it or not, we also have that set up with one of our retail, our equity broker partners, where it can be auto traded by our software at no charge. So you can have that. And if anybody has that question and wants further information, they can certainly just email me at bubba@bubbatrading.com, and I'll be happy to send you the portfolios. You can take a look at them. Okay, we've got 4 or 5 different ones there as well that basically go from 5,000 to 96,000.
All right. Last question. Do you want to help me give away a prize?
Do I want to give away a prize? Of course.
No,
I
can give you. What do you need? Let's see. Okay. Let's see. If you would help me pick out a number between 1 and 10,515.
I'll pick out 1,313.
1313. I like it. Okay. So the person that's going to win the prize. Let's see, 1313. I've been told not to stop doxing people on the internet. So it's Joseph G with a Gmail account. So if your first name is Joseph, you have a last name that starts with a G, and you have a Gmail account, probably just won a prize.
I'm Joseph G. I got a Gmail account.
Very good. So BubbaTrading.com/futures for the $99 per month. Give it a go. See how you like it. And you can also do that annually for $1,000. Bubba, thanks for joining us today. I really appreciate it. And I will, Joseph, I'll figure out what prize you want in just a second. Thank you. Thank you very much, Bubba.
I appreciate it, man. Have a great day. Thanks, everybody.
All right. Thank you. Okay, let me do this. Okay, and we'll just go ahead and change the presenter over to me. We do have a minute or two. Let's see, make me the presenter. I'm going to go ahead and show the screen. We're going to be talking about the Fulgent chart pattern engine, but we do have a little bit of extra time. So let's talk about the valuable prize that we just gave away. Let me take a look here at my slide. Again, we've already given the prize away. It's going to Joseph G. I'm just going to go ahead and make a note of that. Trying to keep this well organized so that we can make sure everybody that gets a prize gets a prize. And in terms of the prize that we're giving, we're actually going to give you, Joseph G, a copy of Dan Passarelli's popular trading book called Trading Option Greeks, How Time, Volatility, and Other Pricing Factors Drive Profits. It's $90 if you go buy it on Amazon right now. You might be able to get it a little bit cheaper. The list price is $90, but this is Dan's very popular book, How to Trade Options and How Trading Option Greeks. So congratulations to the winner. Yay. All right. Let's go ahead and kind of go a little bit back in here. And we'll back up just a little bit here. Go ahead and hit here. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the events that we've done. They've been great partners of Metastock over the years. They've done 17,000 different trading articles over the years. They've been publishing continuously, since 1982, and they have 1.3 million subscribers. So if you do the Metastock extended trial today, we will give you a 5-month subscription. Actually, Stocks and Commodities will give you a free subscription to Stocks and Commodities for 5 months. If you do, if you spend $300, like you buy any of the add-ons that we're talking about, you'll actually get a 2-year subscription as part of that. So a big thanks to Stocks and Commodities for helping us support these events over the years. So in addition, since we do have a little bit of extra time, we'll talk about the CMT Association. CMT's been a sponsor of the conferences here for about a year and the summits that we do. They can talk about risk management, quantitative systems development, portfolio management, and applied behavioral finance. They run an accreditation program. You can find out more about it about cmtassociation.org. We're going to have Tyler, he was speaking a little bit earlier, come in and talk about the benefits of an accreditation, especially if you're working and you trade as a business. You have accounts under management, stuff like that. A CMT accreditation can be actually really, really good for that. And he will talk a lot more about that when he speaks later this week. Let's talk a little bit about the schedule that we've got coming up. So our next presenter now coming in at the top of the hour is Ed Downs. He always does a really good job. He's logging in right now. He's going to talk about chart patterns, very, very classic chart patterns and kind of how they work and that kind of stuff. After that, we have Peter Dalal. Peter's going to talk about his trading patterns and how to use them for the best potential profits. And then after that, we'll have Silas Peters, and he's going to show his 3-point price action, another classic pattern. So going to get back into the technical analysis. It's going to be a lot of fun. I was also looking at the lineup that we've had for tomorrow. And man, we've got another really good lineup for tomorrow. We're going to start out the day with Mintzvora. We're going to move on to Rahul Mohinder. I'm going to talk a little bit about some of the hidden things in Metastock that might be really helpful for you. We're going to have John Osborn in again tomorrow. Larry McMillan is coming. Anne-Marie Bain, Dan Passarelli, Steve Primo, John Savelle. So quite a lineup of really, really good speakers, both today, tomorrow, and through the end of the week. I do want to spend a second to just say thank you to all the speakers that have participated. Thank you for all of you. We've had great attendance all day. These things are successful because we get people into them. And thank you for, I hope you're enjoying it. I hope you're enjoying the classes, all that kind of good stuff. It helps a great deal. If you're watching us on YouTube, make sure to hit that like and subscribe. That does also help a really good deal. Kelly Clement is going to put up a link right now under the Metastock name with how you can register for today's conference and be eligible to win some of the prizes that we have. So I'm just going to go ahead and do that. Of course, we're Metastock. Let me go ahead and move this out of the way. We will be doing, what we're doing here is an extended trial. Our software has been rated #1 in its price category 29 years in a row. It can help you scan the markets. It can help you test trading ideas. It has a forecaster, which allows you to forecast price opportunities. Of course, it's going to give you real-time commentary, alerts, and signals. All the pricing for Metastock just starts at $69 per month. And what you can do, what we're offering here at the event, the conference, is if you buy a month, we're going to give you the second and the third month for free. I will tell you this. There's a reason Metastock's been rated #1 29 years in a row. I love the tools that it offers. So I would recommend you get your extended trial. For about, if you do the end-of-day program and you're here in the US, it's going to cost you $69 for the end-of-day version of Metastock. That's $23 per month. As part of that $23 per month, you're going to get unlimited access to our support team. We're going to throw in some training that will help you. We're actually also going to give you a white glove installation, and with that, we'll have somebody help you with the program. They'll help you install it. If you need help with that, they'll answer any questions and they can kind of show you how to run scans, how to run tests, how to run anything in the program that you want. We started doing that white glove installation support appointment a couple of years ago, and it's been extremely popular with our guys. So make sure you take advantage of that when you sign up. You can sign up at metastock.com/conf promo. You can call us at 800-882-3040, or you can visit us online at metastock.com/sales-chat. So a big thanks again to everybody that's participated in the event. We certainly appreciate it. It's been great. I think it's gone really well so far. I hope you agree. Why don't you let me know in the comments and stuff. In any case, our next presenter is Ed Downs. Ed has been a partner in Metastock for a number of years. A few years ago, he called me and he wanted to put his new AI engine into Metastock. And I was like, yeah, let's do it. One of the things that I wanted him to put into Metastock, because I knew how popular they were, was chart patterns. Like with chart patterns, they can be, unlike a lot of the stuff we're talking about, they can be a little bit subjective when you're looking for head and shoulders or double tops or double bottoms, saucers and stuff like that. And I knew he had developed a really, really good technology around kind of identifying chart patterns in his Fulgent products. And I was like, you need to bring this over to Metastock because I'd love to see it in Metastock. And he did just that. So what he's going to show you today is that chart pattern engine, kind of how it works, how it can help you identify and find these classic patterns that have been so popular over the years. So, Ed, we're going to start you about a minute early. Is that okay with you?
Oh, I love it.
Yeah, all right, very cool. Because I got out of things to start with. We gave away a prize. I talked about all the great sponsors. I talked about how cool Metastock was. So it's
Awesome.
time. I'm going to go ahead and make the present. I can see you. I can hear you really well. I'm going to
Awesome.
make you the presenter so we can see your screen. And I'll let you know when we can.
All right, we're working that right now. And no,
Okay.
not the right one. Hold on. Let's see here. Oh, yes, there it is. Okay. Took me a few seconds, but I finally got it, I think. See if you see the right one now. There you go. Okay.
Looks
Awesome.
great. It's all you. I'm out of the way.
Oh, yeah. No, I want you around for a while. This is
Oh, I can hang out. Well, I'm going to be right here if you need me.
Okay. Well, I do appreciate the tech support earlier. That was awesome.
Cool. You're welcome. I'll send you an invoice.
Huh?
I'll send you an invoice.
Okay, that's fine. Please do. Please
Just
do.
kidding. We never charge
Put
for
it on my
support
tab.
here at Metastock.
Yeah, I called him during the webinar. Said, "Hey Jeff, I need help something." And He knew it right away. So that was good. Well, gosh, folks, good afternoon. And wow, thanks for attending this summit. It is so fantastic. I love coming to these things and presenting because there's so many great speakers with so many nuggets. I get something every time I watch them. And I've been doing this for like 38 years or something, long time. And so you're at the right place. And I know you know that, but I just want to reiterate, these guys do such a great job. This is one of the favorite things of mine that they do, these summits and things like that, where they have a lot of speakers come in and talk about what they know and what they've learned. So awesome. Now, for my part, I would like to say a little, like maybe 1 minute about our relationship, because I've known this guy for a really long time. I hate to tell you, I'm not going to put a year on it, but it's been, I don't know, about 25 years, long time. And so what basically happened was I was an engineer and was trading part-time, and I kind of, became interested in an area of software which has to do with automating things. I was actually a design automation engineer on chips, making ICs, integrated circuits. And I thought, I should be able to apply this stuff to trading. And so I started a company called Nirvana Systems. And that's really what I focused on from the very beginning, going back to 1987. And the first thing we did was write these utilities that would drive other software from the outside. And the first program I automated from the outside was Metastock for DOS. That goes way back there. The company was called Equus International. And anyway, I came to Salt Lake City, met Steve Akalis, the founder, and it was just so great. Everything about it was great. And I said, look, I've got these utilities that can run Metastock to do certain things, like run a bunch of systems and all this stuff. And he said, yeah, let's get that out to our customers. So we did. And then we started selling our products, each other's products. And Jeffrey was part of that at that time. So yeah, it was awesome. So we did that. And then after DOS kind of went away, I had to change. And so we started making Windows products, and OmniTrader was one of those. But we've kept up through the years, and I've stayed with this automation theme. It's just what I've always worked on, how to automate things around trading. And so back in the 90s, I guess around 95, around there, I got interested in artificial intelligence, started studying it, and decided to build some applications that use classic AI, neural networks, genetic algorithms, and things like that. And so we started down that path and have been working on that ever since and using it for trading. Well, about 3 years ago, I decided that it was time to make our stuff more public, get it out to the world. And so we decided to build another company called Fulgent, which means brilliant, Fulgent Technologies. And the website is fulgent.ai. And that company's charge is to take our AI out to the world and put it on good software. And of course, the first one I picked was Metastock. So I called up Jeff and said, hey, I've got this new thing. I can add AI to Metastock with a module. It'll be real seamless and cool. And he said, well, sure, let's do it. Pretty much just like that. And so we did. And so we've been doing it now for 3 years, and it's been an awesome thing. So glad we did. And in that time, we've developed other products for Metastock. The one we're going to talk about today is our chart pattern engine, which does use AI and some very specific algorithms. It's been around for a long time. We've improved it 15 years. We've improved it continuously. So this version is really powerful. And I'm going to show it to you. Of course, I'm a software guy. I'm going to show you my stuff. That's what I do. But my objective, I also like teaching. I really enjoy that. I've taught everything I've ever done. In fact, I fly airplanes, and I love taking kids up on the weekends and showing them how to fly. I can make a pilot out of a kid in about 30 minutes. It's fun. So I really like doing that and helping people. And so today, what I want to do is show you some things about chart patterns that you may not know that are really powerful. They really work. And so just watching this webinar without, don't worry about the software. I'll show you what it does. But I want you to get some really good information on these things because they are so predictive. And let's just dive right in and let's do it. I'm going to show you what we got here. Okay. So the very first thing is I'm going to be covering a lot of topics about these patterns, and there's rules and there's, profit targets and all this stuff. If you just watch it, you're going to forget all of it. So I've got a little book here, an ebook that has all the same information in it. And if you'll go to fulgent.ai, and there's multiple platforms on there, click on platforms, Metastock, and you go to this page, and all you want to do is click that little dude right there, and you can download that book. It's an ebook, and it's free and all that. So please do that if you'd like to. And like I said, I'll give you a heads up on the information. Fulgent.ai, platforms, Metastock. All right, let's do it. So what's a pattern? Well, you've probably used them if you've been around trading for a while. And this group is pretty savvy, so I think you have. But the thing I like to say about patterns is that they do two things. They show you what the psychology of the market is. That's the first thing. That's what everybody kind of thinks about patterns. They also determine the behavior of the market. It's kind of a symbiotic relationship. Let's just take a support level. You know, you've got support. Everybody knows what that is, right? You go in like this. That support level, people know when you approach that line, that invisible line, that you're likely to reverse off of it because there's support there. Well, what if you break through it? What happens is, well, you know, what happens is that people go, my goodness, we broke a support level and we're going down like this recent market, you know, so they start selling. So their behavior is actually determined by the pattern. And so that's just a real interesting phenomena. And it's so true in all of these patterns that we're going to be talking about today. Now, the other thing about chart patterns is I was studying them in college way back, taking a finance class, and the professor goes, well, that's just hocus pocus stuff. You know, it doesn't really work or anything. And so I didn't think that was right. But I finally found this paper these guys at the Wharton School did, and MIT, these two dudes, Craig and Andrew, and they did a paper on actually measuring if price movement after a pattern was valid. This is back in, you know, a long time ago, 2000. And so, you know, they says using price charts between 62 and 96, they focused on indicators that are controversial among economists, like head and shoulders and triangles and things like that. And what they determined was that these patterns and the results occurred far more frequently than if they were truly random. And so, you know, the patterns contain useful information about what the price is going to do. And that is so true. So that is, if you want to look that up, again, that's, you know, McKinley and Lowe, McKinley and Lowe, you can find it and see their paper. It was really great. I finally saw somebody vindicate technical analysis, yes, and especially chart patterns. Okay, so this chart is one of the S&P 500 that I just marked up by hand, all the patterns I could see with my eyeball looking at it. And they all, you know, you see little arrows after each one. They're all very predictive consolidations, you know, support breaks. We're going to go through all these today, but they're just, you know, really useful. And so this is typically what you would do is just go through and mark charts. And you can do it. And I'm going to show you how to do that today, how to identify really great patterns and use them. But if you just pick any chart, you'll see these things everywhere once you start using them, especially. Now, back in, I think it was around 97 or so, I decided to write a little book on chart patterns and got more in depth into them and determined that there were really 7 patterns that are the patterns. There are derivatives of these 7, like more patterns, but they're pretty much all going to be, you know, pieces that like the same patterns connected together somehow. So let's talk about this. And I did publish this little book back in 97, 98, the 7 chart patterns that consistently make money. It's very short, like 30 pages. And I cover these 7 patterns. And that's what we're going to be going through today. And if you note here, the little TLB, TLR, those are the acronyms that I use in the software to say what they are. That's why I have those on here. But you got, you know, trend lines, support, resistance, consolidations. Each one of these is very, very important. Now, if you keep going beyond that to like tops and bottoms and cup and handle, you know, patterns and head and shoulders, those are really all combinations of these. You look at a cup and handle, for example, what that actually is a saucer followed by a consolidation. That's a cup and handle. So if you know the 7, you pretty much are set. You can do stuff. Okay. So let's dive right in without any further ado or introductions and talk about the very first one, which is trend lines. And I've got 2 little pictures here. I've got these for each of the patterns. And there's 2 kinds of trend line patterns. There's breaks and reversals. A break is when you see this invisible but very clear line across peaks and you break it. Usually you'll come back and touch it, not always, but that happens a lot. When it does, oh my goodness, that's a good signal. And so, you know, so that's a break. They're very, very powerful. And like I was talking about support resistance, you break support, everybody goes, oh my God, sell, sell. Same thing. You see, people see these lines. So the thing about all of these is you've got to ask yourself, how visible is this pattern to the market? Do they really see it? Because that's how the psychology happens. If it's just kind of, well, there's sort of a peak there and a peak there, and maybe not really too much volatility. No, it's got to be clear. So the second one is the reversal. So a reversal, same thing. You have a trend line, and you come down and you touch it and turn off of it. That's a reversal. Those are also very good for swing trading and channels. So trend line reversals are also very powerful. Now, at this point, what I would normally do is whip out my slides, the other 50 or 60 I have, and start showing you pictures of patterns, going through examples across lots of charts, right? Well, we have something better today because I actually have the chart pattern engine installed in Metastock, and I'm going to ask it to help me do this by just going through each pattern and finding them for me. So let's go ahead and go to Metastock here. And this is, I've got, let's see, what is it? Apple is loaded. And what I want to do is take that first pattern, which is a trend line break and reversal, and put it on here. And of course, I could get the drawing tool, and go over here and go, let's see, we got, there's a good one right there. Oh yeah. And there's your break. Well, I don't want to do that. I want it to do it. So let's bring it up. And this is a Fulgent AI platform. It's running in the background in the system tray. The only interface is just this guy right here. And you can see these other products. These are other products that we have for Metastock. We're going to be talking about AI on Friday at 3 o'clock. So that's good. But we're going to be looking at the patterns product today. So if I double click that, this is the interface for it. And you can see all these patterns over here. And they each have a number in front of them. And the number is used by the software to tell which pattern it is, because we give that back to Metastock from our Fulgent AI application that's running in the background. So that's why they're numbered. But let's go back here. Let's go up here to trend line breaks and trend line reversals. I'm going to turn those two on. And there's some other things I can do over here, but we're going to leave all those defaults and just say, okay, and refresh the chart, please, if you will. And if everything works right, bingo, we have them show up on the chart. Now, one of the things that we did, the guys over there, I just can't, William, of course, we were talking Jeff, Jeff's awesome. William has helped me do this, and he gave me the way to color code the bars of a chart in making these add-ons. And it's very useful for patterns because we can't actually draw the patterns in the chart. There's no way to draw lines from another program, but I can color code what bars led up to the pattern. So if I look at this right here, that's a TLB is what that says. I'm gonna have to read them to you. They're pretty small, but that's a TLB right there. And if let me see, maybe if I zoom in a little bit, let me try that. Zoom in so that's a little better. Yeah, there we go. So if I take a trend line over here and draw it across that, there's where it is right there. It just kind of found it. Okay. So TLB, look at this one. This is a TLR, right? No, that's also TLB. This TLB is looking at this little thing right here. And like I said, this one isn't real obvious. Again, you want to trade the obvious ones. So a lot of this, you find these patterns, you want to do the things I'm telling you. Just because it says there's a pattern there, you want to look at it and confirm it. Because what the software is doing is it is finding every place that it thinks there's one of those patterns. Okay. Now we do have a way to limit them so you only see the really good ones. Okay. Right now we're seeing all of them. Now I'm gonna that's my teaser. You got to watch the whole webinar to see the really good ones at the end. But there is a way to do it. There's a little setting you can do. But right now we're just gonna have them all turned on. And so what you do, and even when you're seeing the really good ones, you want to confirm, that's the word, confirm the pattern with important things. Like these are nice swings, those peaks are very clear. We broke that line with force and maybe a little volume. I'm not showing volume here. Actually, let me see if I can add volume. This is where inner window, new, test my Metastock skill here. And let's do add indicator. Let's see, Jeff, can you tell me real quick how to get this to the bottom of the screen? Is that easy? I just forgot to plot it before I started.
For sure. Actually, there's a couple steps though, because it doesn't have an inner window. If you right click on it and go to inner window properties, you can give it a title bar.
Okay.
Inner window properties.
Oh.
Show title bar. Okay. Click OK.
Okay.
It looks like it's already applied. Go ahead and drag just that blank area at the top to the bottom. So you see, yeah, like that.
Awesome.
Good job. You did it.
Now volume, add indicator, right?
Yeah, you can, if you want to do volume, just drag and drop it into that window.
I got it. I woke up. Thank you.
No worries. I'm here to
We're
help.
good.
It's my job.
Yeah, I know. You did so great. Okay, so we're looking for a little volume encouragement here. We got a nice little peak right there. That's good. We need the volume anyway for the other patterns, so that's good. Thank you, Jeff. But so that's, you know, really what you're doing. Let's look. Here's a TLR right here. Well, you can clearly see if I draw this trend line across here that is a reversal of that trend line. Boom. Here's a TLB, and that's off the same line coming down, going up. Here's a TLR. You can just see, I mean, these things are all over the place, and most of them are really, really good. I mean, here's a reversal here, reversal here. Now, they're not all going to work out. There's one that thinks that's reversing because it sees this line, and it sees it kind of backing up there. So again, it's going to show you every one that it sees that is potentially that pattern. The beauty of this is that you can just look at them and go, nope, nope, nope. Ooh, look at this one. Oh yeah, baby cakes. I like it. So like this trend line break over here on the right, you know, is good. I mean, there's your trend line. Boom. That did whatever it was, it looks like about 10% right there, and not too long. So good deal. Okay, we've got 7 of these to go through. So I'm going to stop on this one. Let me delete the lines real quick and move on to the next one, because we want to look at all 7 and make sure that you have all the information about them. So I don't want to run out of time here. And you probably have some questions at the end. So that's trend line break and reversal. Let's move right along here and go to bring up my Fulgent tool again, double click patterns, and let's turn those guys off. Now, some of you are probably thinking, why don't you just turn them all on? Let's see what it looks like. No, there's too many. So you have to focus on the ones that you know, that we're doing one at a time. So let's go ahead and go back to this and move to pattern number 2, which is support or resistance breaks and reversals, just like a trend line. You know, I like to say a trend line is a sloped support or resistance line, which it really is, or a support line is a horizontal trend line. Take your pick. They're the same psychology. Except that support breaks are really, really good for shorting or buying puts. Resistance breaks, you got to be careful because you can get overbought and then pull back into it real easy. So, but you're basically breaking through a support level. These are SRBs, all these guys, or reversing off a support level and a resistance level. So once again, moving right along, let's go back into here and let's turn those guys on. Support, resistance, bingo, refresh chart, and let's see what we got. And I'd love to go through a bunch of charts, but we're probably just have time to go through 1 or 2 here. We'll see. If I don't see any patterns, I'll do a few others by using the right arrow down here. So here's an SRB right here. And let me just get the line. So you can see that very clear moving up hard. Here's another one here, just a little below it, actually, right about there. So it's seeing these valleys down here and saying, you're breaking right there. Here's a reversal. It's looking at and seeing across to the left here. Here's a break here, also a very nice one. Look at that right there. Okay, so that is your support resistance break reversal. And I'm going to do one more chart here just to see if I see some more examples of it that are good. Here's a reversal right here. It looks really great. Here's a reversal, and this is looking very short term at those pivots right there. And here's a great one here, reversal. Here's another one here. And they don't all, like I said, you've got to confirm each pattern. They don't all work, but lots of really, really good examples in just these 2 charts. Go back to Apple and get rid of that level. Let's move on to the next pattern. But this is just something you want to watch for. And we've got some good examples in today's market that I'll show you a little bit here. Okay, so moving right along to the next one. And I'm going to go ahead and douse my face so you can see more screen. All right, there you go. Let's move on to the next one, which is one of my favorite patterns, and it is so uncanny how these things happen. You have a very smooth transition from going down to going up, or the other way, which is called a rounded top, if it's like going up and then going down. But you see where those little peaks are. It's kind of like it's a very smooth curve right through there. Okay, and so what you're expecting is that it'll make about 50% of this prior move is the kind of the target for it. But what you want to do is break that last pivot right there, and you're moving up, and that's where you fire the signal. Or in your head, you say, okay, that's a good place to do it. Sometimes you see saucers that are really clear, like they're just clear. Those don't fail very often. They can. I'll tell you what, if they do fail, like if you bought after one of those and it goes through the bottom here, you probably want to be looking at buying puts because that's so unusual. that there's something going on that chart, some news or something driving it that they didn't know about over here. So just telling you, it's big deal. So it's very reliable. Let's go ahead and go into the software and have it find some for us. And so we'll bring up Fulgent again and patterns. So you guys will be old hat at this after I get done. Turn those off and turn on the saucers. They're way down there. And let's see. Now this pattern, we're pretty liberal on what we call a saucer. It's any curvature of any kind, but it is very effective. Just look at some of these. So here's a short right there. Here's a long. Oh my goodness. There's one that didn't work out. Look at this one. Look at this one up to there. This one down, 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 up. And there's a pink shading here of the bars that say where it was calculated from. Because we're calculating pivots in here to drive this. And pretty much every signal in this chart has profit except for that one. Pretty much every one. So it's just effective. Let's go to the next chart and just see if we can get another example here. I think we're doing okay on time, I think. And there you go. I mean, so, you get alerted to these things and you look at them and go, yeah, that was going up nicely and it's turning. We got a little bar there. You think, I think it's going to go lower. Or this is a really nice one here. Look at this one. Oh man, it's just formed. That's beautiful. That kind of pattern is what you're looking for. And then we're breaking that last pivot. Oh yeah. And set your stop. Now the whole stop setting is a whole nother topic, but you generally want to use the near pivots to set stops like right here, maybe the start of the pattern, start of the gap in this case, but pretty close because it's a good pattern. You confirmed it. If it doesn't work out, like here's one that didn't, you get stopped out pretty quick. And otherwise works. So there you go. That pattern's probably worth the whole thing right there. Okay, I'm sorry, I get carried away sometimes. But anyway, I just really like the saucer pattern. It's extremely reliable and great for finding trades out there in the market. Okay, so let's move on to the next one, which is also a very favorite pattern of mine, Fibonacci retracements. And people have just noticed that charts tend to retrace about halfway a lot of times, or from this move here going this way like a 38% retracement, or then this move is 62% back up to here. And I don't think anybody really knows why this happens. There's lots of theories about it, but I think it's just a human psychology thing that, well, that's enough. That's pulled back enough. It's going to go the other way now. And it's just a common brain thing. And people then react to that and they'll buy or sell, which is the whole, self-fulfilling prophecy thing. It just happens that way. So the pattern shows you the psychology. It also determines it. All right. So having done that, we're cooking now. So here we go. We'll go back to Fulgent and look at that one. Fulgent patterns. Turn off the saucers, down off the saucers, add the fibs, and boom. Let's do it. Okay, I'm going to go back to Apple here, and we'll refresh this chart. Oh, it already did it itself. Okay, good. All right, now this one, though, doesn't have very many. It's got a couple of really good ones. It's seeing this one as a 62, probably, to here. I just realized something I didn't do. And I really should have done it on the very first time I got into here. And that is show you the advisor, because the advisor gives you a lot of really good information. Like if I click in this chart here, it'll tell you what the pattern is. It's a Fibonacci retracement. It also shows that picture that I was showing and talks about how to trade it down here. So any signal in here, I can just click right after it and it'll say that. Okay, so here's a 38 that did not fulfill. And here's looks like about a 50, maybe a 38 also that did not. Let's go to the next chart. So again, you're finding them, and then these are beautiful. So this is a 62, boom. Here's a 50, boom. There's a let's see, what is that? That's about a 38, boom. I like the sound effects, sorry. That's a 50% right there. So those are all great. And again, what you want to do, if you're whether using this software or just looking at charts, is just train your eye to find those. There we go. To find those patterns as they set up. These are harder to see. It's kind of hard to visualize that retracement percentage, but after a while you can't pick it up from a chart. And it's not. This isn't going to find all of them. There's one right here that's about a 50% retracement right there. Is very nice. Here is about a 62 to there. So, but it will tend to find most of them. There's another aspect to the chart pattern tool that we have time frames, short, medium, and long, and that this time frame may not be included in the defaults. We'll see in a minute. But that's the Fibonacci retracement. Okay. Next one is price gaps. Also, you don't want to say this, right? Also very powerful. So we've got 3 left. Price gaps is number 5. And there are basically 3 kinds of gaps. And I'm not talking about charts where there's gaps everywhere. You got to avoid those if you're trading gaps. It's the ones where they're fairly rare. So you have, first off, the breakaway gap. So the chart was kind of down low like this, down here somewhere, and it suddenly forms a noticeable gap that's bigger than either anything else in the chart that you can see or similar to a few others. No, not a lot of them. So you go up here, and this is going to be the first of what we call the measured move patterns. So you have a gap in the middle of a run, and that's either going to be a measured gap or an exhaustion gap. And we're going to get to that in a second. In a measured gap, the price will continue to go. And what happens is it almost always will go twice this distance. So you go down to the low down here, go halfway. And if you project up about twice that distance, that's pretty much where they go. Now, you don't know right when that forms if it's going to do that or if it's going to turn around and fail. That's why you don't know which one it is until it moves some. Once it moves away from the gap, pretty sure it's a measured gap. If it turns around and goes the other way, it's an exhaustion gap. And typically on exhaustions, you'll have a lot of volume right at that sell-off right there that you'll see. Okay, so let's go back into Mr. Fulgen here. And it went back in the tray, so I got to get it out of the tray. All right, there we go. And let's turn off the fibs and turn on the gaps right there. Okay. All right. Oh, and I just noticed fibs don't have my short-term time frame turned on. There's a reason, but that's why it missed some of them. Okay. So gaps, turn that on, and let's go. Refresh the chart. Let's see that mean an apple, but we'll see some. So here is a breakaway gap right here, breakaway gap here, a breakaway gap here, and an exhaustion gap here. And again, you wait a few bars and see what happens. This one looks like a breakaway to me, but it could be exhaustion. It's kind of floundering right there at the end of that chart. We'll go and do our usual next chart in the list here. What is it? Amgen, yeah. So there's a measured gap right there. Look, it was here. Boom, it went exactly twice that distance. Here's an exhaustion gap. There you go. Let's do one more for fun. Go to the right. Hit me. American Express. Oh yeah, we got some in here. Now there's more gaps in this chart, so you got to be a little more careful because they need to be unusual. But here's a breakaway. Here's a breakaway. Here is a measured move right here in the middle of that move. So anyway, you'll be able to, when you look at them, you'll be able to tell pretty quickly what they are. Okay, hold on a second here. Okay. Yep. All right, there we go. Very, very good pattern. And if we went through a lot of charts, you would just see these awesome monsters where you go, whoa. So you find the pattern and look at the psychology around it. Is there a lot of volume? Let me see if I can find one of those guys real quick here. Yeah, look at this one. So this one, boom, gaps, goes down like that. Look at all that volume right there. Oh yeah, that's the end of it right there. That's a exhaustion because of all that volume. Okay. I'll go back to Apple here. Yeah. Yeah, I love how fast this thing is. All of it. I love Metastock 18. It's fantastic. Okay, so let's go ahead and move on then to pattern number, I think it's 6. Yep. Also a favorite pattern. Can't help it. This is volume, climax, and trend. And I think I discovered this pattern about 20 years ago, I think. I didn't see it written up anywhere, but let me just, it's okay, it doesn't matter. But let me just show you what it does. So price is screaming down, screaming down. Volume is rising to meet it in like a little half of a hat formation. And then price turns around and the volume retreats. And what's happened here is that everybody's selling the stock because it's going down hard, or futures, whatever it is. And so volume's increasing. You have buyers, of course, too, because you have both sides of the transaction, but it's mainly the sellers are coming and selling. That's what's driving it down, right? Imbalance of buyers to sellers. But then, it doesn't take much energy to go up because everybody who wanted to transact has. See, everybody, but the majority of players in this market who wanted to own that have bought it from the people who wanted to sell it. And so it takes no pressure, no volume for it to go up like this. Here's one to the upside. So it's going up, 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 a lot of volume. Okay, everybody who wants to own it owns it. Everybody who wanted to sell at this price is sold. So it takes nothing to drive it down, and it drives down. The volume trend is a very interesting pattern. It is the same thing, but it's in the middle of a move, and it is another measured move pattern. When you see a volume trend, which is volume rising, prices coming down, volume backs off, prices still going down, that's a volume trend. And it occurs about halfway, typically, about halfway of the move. So it's our second measured move pattern. There's three. So first is the measured gap, then the volume trend. Okay, so let's go back to mental stock and Fulgent down here. All right, dude. Let's see. We don't want the gaps anymore. What are we looking for? We're looking for volume climax right there. Number 512. Okay, and refresh. These are a little more rare, so we'll see what we got. But ooh, looking pretty good. Okay, so you know, here's at the bottom. There's that volume coming up there, right there. Here's a pretty nice volume climax. Let me see the cursor. Yeah, so you can kind of see right there. We had volume rising, high volume, and it didn't really go anywhere. So you'd be getting out of this trade right about there. See if let's find a really great one here. Look at this one. This is classic, straight down, hard, hard, hard. Volume's coming up. You see it down there. It's rising like crazy, and right there it backs off, and we've got several bars of very strong up right there. Here's a really great one here. Another good one here that actually kept going after the initial signal. But there's your volume coming in, and then it backs off. So not that many great examples here, but and again, if I click in here, if I click anywhere where the pattern is, that is, it'll tell you what it is, volume climax and all that. Okay, let me go ahead and turn this off for a second. And let's go back, let's go to their chart, see if we can see some more examples of this. Yeah, so here's a really nice one here. Came straight down, volume rises. This one's a little early. That one did not work out. This is great, and worked out for a little while. So again, you're looking for the ones that are very, very clear, very strong. None of these really have that classic hat pattern where it's just like rising like this. Oh, wait, ooh, there's one. Yeah, okay, right there. You see it? See it? Rising up and it backs off. That's great. Look at this one right here. Extreme spike right at that last part, and then it backs off, and that thing is just going up. Look at this one. Same thing. I need the cursor again. Dang it. All right, there you go. Look at that. Volume's kind of low, and then whoa, it's coming down, and it turns around, and that's what you're looking for, is that turns around right there, and that's your indication that it's worth placing a bet on the trade, most likely. But again, you're looking for the best ones. This software is going to tell you everywhere it sees a volume increase at a reversal, but you can do better with your eyeball just looking at it and saying, was there capitulation like this, and yeah, you look at a few of them, and you'll start to get the feel for the good ones, for the predictive ones. But this thing will find all of them for you. All right. So, and again, with your eyeball, if you're just using you're looking at charts, you're going to be zoomed in a little more like this, and you're gonna see that pattern forming right there. So, okay. Here's a volume trend right here. It says down, but it's actually there's a lot of volume in the middle of a move, and it continues up. Okay, go back a couple charts here to Apple, and we've only got, I think, one more. That was volume climax and volume trend, and now the granddaddy of them all, which is the consolidation. And there's all kinds of consolidations. People will say, well, a flag is not the same pattern as a wedge. Well, really, yes, it's shaped differently, but it's the same thing psychologically. It's a battle between buyers and sellers in a range. You get the top of the range, the sellers win. You get the bottom of the range, the buyers win. So you get this back and forth. When you break the range, especially in the same direction as where you came from, we see our third measured move pattern: gaps, volume trend, and consolidation. Because typically, I've got these labeled A, B, C, D, because typically AB will equal BC. So when you see a well-formed consolidation break out, it's most likely going to that point. And each of these kind of has that. So BD is equal to DC. Those are down here. And then CE equal to EF. C, yeah, C, there's no E on here. I need to fix that. It'd be CH equals HF is what that should say. Okay, I think I had an E there at one point. I did. How did it get to be H? I don't know. So anyway, it's a really powerful pattern. Now, again, our software, we're going to go and look at here, will find anything that looks like a range. It sees a range and it just flags it. So there's some pretty strange looking ones, but every now and then you'll see a really well-formed one, and that's, of course, what you're looking for. So let's go ahead and go back into Fulgent and do this one. So this is consolidation, which is right there. Okay, and refresh. See what we got. Okay, so, and it'll also flag like failed consolidation signals. So here's a failed one. This chart would go up, up, up like this, and it breaks through the bottom. That's a failed. Here's another failed because it came from here. Logically, that range would break out to the downside, but it fails. Failed consolidations are good signals. Here's a normal one. We came up here, we went sideways and broke out the top, and it went much further than twice the distance. But that's just, a good example of that. Let's go to the next chart here and see what we've got. Looking for a really well-formed one is looking at these. So see, they're kind of like, some of them are like sideways ranges. This one, yeah. Or this is more like a saucer there, but it sees it as a range also. So anyway, generally speaking, so down and then an up signal on that little range right there, which is good. So no real clear, great consolidation candidates in these stocks we've looked at. There's a good one. So it came up sideways, 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 broke out, and no other really well-formed ones. These are all they're fine. There's a range and you break it, but not what we're looking for. So that's pretty good right there. But you want to know where it thinks there's one, and then you just look at it and say, yeah, that's a really clear triangle. Oh, that's and so if you can find them across the entire stock market, that's what this does. We're going to show you that in a minute when we get to the exploration part. But it's designed to give you the pattern, and you look at it and say, yep, we do have the strength thing for the better ones. So we're going to show you. Hang in there. Okay. So that is pattern number 7 is consolidation. So those 7 patterns will really, really help you. And I hope I've given you enough rules. And like I said, that book, I'll show the URL again at the end. We'll go over the rules that I've talked about, including the measured move patterns and some, textbook examples that are captured from tons of charts. So that'll help you. But I hope I have given you something you didn't know already. I really, really hope that. So looking at this tool then, going back to the chart pattern engine that we've been looking at, we have, of course, you saw the expert commentary. You click anywhere in here and it tells you what the pattern is and kind of how to trade it. You have the annotations with the colored zone of where the pattern came from, and you can configure. And that's we're gonna spend a little time on that. Let's see. Yeah, we're good on time right now. So we're going to talk about the configurability. Let me go ahead and bring Fulgent up here. Go into here. Actually, before I do that, I did want to show you this. I'm just going to enable all the patterns, and let's see what this looks like. Close your eyes. Don't look. Whoa. Yes, they're everywhere. Okay, so this is like all the patterns known to man, known to Apple, and they're just firing every place. They're great, support reversals. You can see, lots of really good ones firing all over the place. Fibonacci retracement, fantastic. Gap. Anyway, they're all over. We've gone through all these guys. I did turn on 3 more that are hybrids in here that we didn't have on at all, and that's head and shoulders, tops and bottoms. That may be it. Yeah, those 2 additional ones. So they're all turned on, and you can trade like this. The thing is, we have this thing in here called the strength rating. What we did is we analyzed thousands of charts, thousands, over many years, 20 years. We collected the data and we calculated the pivots on each one, like where the reversals are, because that's how you make a pattern, is from the pivots. And we looked at things about them, like how far are they apart on a trend line, for example. How far are those peaks apart? What is the angle? What is this? The force of the break? You know, how many AT average true range is the break? There's about, I think, 15 different things that we measured on the patterns. And then we analyzed it and said, okay, the ones that have these characteristics are really good, generally. And the ones that don't have them or have these are not so good. And so that's where this thing down here comes in. All you do is say, all right, I want to see the 70 or better patterns, refresh it, and you'll see some go away. And pretty much every pattern I see here is profitable. That one probably not, but the rest of them, yep. And you can go bonkers with this. I mean, I can go up to, shoot, let's go to, I think 80, you'll still see some. We can clamp them off too much, but isn't that nice? You just click that, that's it. And then you can get the better pattern. So as you use it, you'll sort of decide, you know, which ones do you want more opportunities where you look at them, or do you want it to kind of be biased and find the really good ones? And that's what that does. So each person's gonna be different. I tend to want to look for more of them. You know, nice. That one didn't work out. They still won't all work out, but you'll tend to get much better patterns if you use this. Yeah. So there you go. It's great right there. Okay, so that is superpower number 1, is that you can set that strength rating to whatever you're comfortable with, and you'll play with it and figure out where you want it. The next thing, besides strength rating, is that you have configurability in here. So I can do just longs, just shorts, or, you know, up patterns, down patterns. But then there's also the term. So short term is a very special case. They're patterns that last, you know, they go 3 or 4 bars. Medium term is about 1 to 2 weeks, and then long term is like a month. So you can see I have very few long term selected, just gaps and trendline breaks, and very few short term, just saucers and volume climax. And the reason is I went through and looked at them on lots and lots of charts and said, well, really the best patterns are these guys, the ones that I've checked here. And if I check other ones, like do this, I just set defaults, you know, store defaults. Yep. And you'll get back to what I selected. But let's do something fun. Let's just pick all the short terms and turn off the medium terms and the long terms. Bye-bye. Just short term. Let's see what this does. Now we got short term and high strength rating. So but very short little patterns. Although actually these went longer than just a little while, but it's looking for a very short, tiny number of little pivots, like little short-term pivots. That's how they're calculated. But let me go ahead and take my strength rating back to where it shows all of them, and then, you know, be a little better. Okay, where is it? Refresh. Yeah. So there's all the short-term patterns. We can do the same thing with the long terms and the medium terms, but these look really good. I mean, you'll determine, you know, which one you like better, or just do all the time frames. You can just turn them all on and see what that looks like. So it's kind of a personal thing. It's just highly configurable. That's how it was designed. You have as many opportunities as possible, and where you can get what you want out of it. So let's go back to defaults. Well, let's see. Let's go ahead and do one more just for fun. I'll turn off the short terms, turn on the medium terms, and these are also quite good. So I've still got enough time to wrap up here and take some questions. So these are more of the medium term pivots. So you can see the pivots are kind of big. That's picking off, you know, consolidation there, support resistance, trendline break, support resistance. There's a gap down. There's a, what is that? A support resistance reversal coming off here down. What's that one? That's a gap down, you know, a Fibonacci up. They're good. So, you know, you'll know. But like I said, I spend a lot of time on it, trying to get the best ones. And so if you agree with me, restore defaults, and bingo, you're back to the factory settings, as it were. Okay, factory reset. Okay, so let's see. A couple more things to tell you about here. The big one, the one that you're really going to want to use if you have this, is the good old, we just talked about that. The strength rating is the good old Metastock Explorer. And I want to show you that real quick because it is so cool with this. It's like I get goosebumps when I run it. It's just so cool. So I'm going to go to the power console, go to exploration. Wait, first off, I need to make sure I've got turned on what I want. So hold on a second. I've got the mediums. Oh, we got defaults now. That's right. Defaults. I went back to defaults. I forget things real quick. So nope. Restore defaults. Yes. Thank you. Okay, good. Okay. Actually, you know what I'm going to do? I'm going to isolate one because I did this earlier and I found some amazing stuff. So let me go ahead. I'm going to disable, because we're going to see tons of patterns. If I turn them all on, I'm just going to do trend line breaks. That's all. Just trend line breaks. And it can find all of them. That's your homework. But trend line breaks, let's just do those and go back here to the, and of course, if I refresh this, you're going to see that that's what it sees. Oop, there they are, all the TLBs, all those. And let's go back to the exploration thing. So, okay, right there. And I'm going to pick the Fulgent patterns exploration for all patterns. I could just pick. So here we actually give you a separate exploration for every individual pattern, but I'm just going to do all of them because I have specifically limited what it's going to see to that one pattern. And let's get down here and let's pick the S&P 500. So I want to find those patterns across the entire S&P 500. I think I already have it checked. Yep, it's already checked. Okay, so that's good. And let's go ahead and load. We only don't need that many bars to find the patterns. Actually, 100 is probably enough, but I'll do 250. And let's run the exploration. Now, normally you wouldn't want to do something like this in a demo because it takes a long time, right? You got patterns across 500 stocks, you know, a year of data. But you can see how fast it is. It's going to be done by the time I finish this sentence. And if you do all patterns, it goes maybe a third as fast as this. It still would be done within a minute if I did every pattern on the S&P 500. So once you get this, you're going to go over here and let me zoom in a little bit. Okay, there we are. And a little more. And let me show you how you use this. So I've got long, shorts, and then we're going to talk about the rest of them. Let's go and look at our new long signals. I've got three trend line breaks to look at. All right. Boom. Look at that. TLB. There's the line right there. Can you see it? That's looking pretty good. Of course, this is not trading advice. I'm just saying it looks good to me. Here's the next one. Same kind of thing. Trend line break across that line right there going up. And this one, so very easy to find these candidates. That's a really short little trend line going across right there. Kind of like this here. So, and we're at lows, you know, we look at the volume and that went away for some reason, but we look at that and there's a lot of volume at this bottom. That means it was a capitulation. So we're going up from here, those kinds of things. But what I want to show you in this is that you don't just you have to look at the new ones, because what we do is we keep the pattern around for about 4 bars. Why? Because sometimes they don't really confirm for a little while. You may want to go, you know, a couple days and then they kick in, they start breaking through the highs to move. And so if I go over here to bars and I see these are 4 bars in, okay? So that pattern right there on Mitch group is 4 bars long. Let's look at it real quick here. All right. And that's a trend line break. It's just kind of going sideways right after it detected it, but it's been in trade for 4 bars. Let's look at another one here. Phillips 66. Yep. There's a trend line break to the downside. Interesting. Yeah, because you got a trend line across those lows right there. And it is kind of starting down right there. It's pulled back a little bit, but that's a pretty good candidate. And let's see, we got one more that's been in trade for 4 bars. And that's the granddaddy right there. So this one has just, you know, it's going down big time. So, you know, let's see, let's look at one more here. This is in 3 bars. So again, trend line break. Oh yeah, look at that trend line break. And here it is way up here. So it's just very easy, any pattern. And then the pattern number is this number right here. And you know, there's a little, you can see it in the book. We have the numbers, but you can also see it in the product. So 501 is a trend line break. So that's it. Just search that one pattern and we're good. Okay. Coming to the end here, then we'll have some time for questions. I've got 4 trading tips for you using patterns. And these are things that I've taught about for a long time because they really do help. They help with any trading, but especially trading patterns. The first is these are the three patterns that I like the best. If you're going to trade just a few, the support resistance breaks are really, really good. Reversals, the saucers, the red, and we saw how many of those took off after the saucer was formed. It was like almost every one of them. So that was great. And the volume climaxes, the better formed they are, the better. But it's that pattern. So these are the ones that I see them and I kind of get excited and want to trade them. So they're very, very good for trading. Next thing is that you really want to avoid volatility, because obviously if the chart's doing all this stuff, it's going to be hard for a pattern to really resolve, for the psychology to be clear, which it has to be. It's pretty good right there, but this is much better. You got that very clear trend line, you break it. Very clear support level, you break it hard. So that's one thing. Also, your stops are going to be tighter in this chart than in this chart because volatility is less. And let's see, number 3. Oh yeah, or is this number 4? No, number 3 is look at the market. I had this chart before. If you trade in the direction of the market, that's always better. So look for consolidation in the market. Look for a support level being broken. Anything like that. And you could, of course, use this tool on the S&P and see what it finds. But your eye is really good enough to looking at one chart to tell, what's happening. What is the psychology of the chart? Trade in the direction of the market is a very, very profitable habit. And the last thing, and this really is sort of the icing on the cake about this thing, is that you probably have other experts you use. There's so many good ones out there, gosh, great stuff. And so just run that and then put your chart patterns on top of it. This is a RSI 14 buy signal down here going through the 30 level and back up is where they're marked. And at every single one of those, we have significant patterns generated and they all went up. So you just put the patterns on and you got a signal, just turn on that expert, get your signal, or you have two charts, one here and then here, and just use your cursor and see is there a pattern at that point. And this is with all of them turned on, probably strength 70, I'm guessing. I don't remember what I did with this, but so that is sort of the last little tidbit. It's usable with anything you're trading with. It's going to help you figure out which ones to do. Okay, so that is the conclusion, and I do have one last thing to show you before Jeff comes on. As you can get that ebook off our site, and it's Fulgent.ai, platforms, Metastock, and you'll find it right there. You can get it. Okay, Jeff, we're a little early even.
All right, very cool. We have a bunch of questions. Are you ready?
Fire away.
All right. I just some really good questions. And a lot of them you have answered, but I promised I'd ask them anyway. Ellis was looking, there's a lot of choices when you're applying indicators to Apple. Do I need to test all the stocks to find the best fit? And I was like, well, that sounds like a perfect answer for the rating system.
Yeah, so the first part, I didn't quite hear you. Okay. Internet, I think, but can you say that?
Yeah, for sure. He's all. This was back when you were showing the Apple and before you showed the rating system, and he was like, "There's a lot of different options. Do I have to test them all to find the best fits?"
Okay.
And I think he probably. I would just set the rating to where it looks good. So, yeah. But I'll let you answer it.
No, that's what you do.
Okay.
It really, the question is, what is best? Because, if you're me, I tend to go to show all of them because I just want to go to the Explorer and just click through the ones that it found and say, oh, there's a good one. Because your eye looks at the other stuff around that pattern, you can see which ones are really going to go, usually. I mean, it's pretty effective. So if you're a little unsure about that, then you can go up to like the 75, 80 rating, and they will be significantly better on the whole, but you'll miss some good ones.
Here's a good question from Kenneth.
Yeah.
He wants to know, does institutional buying and volume affect or distort patterns?
Well, they certainly are a big player. When you see the huge volume climaxes, that's typically what that is. But we've got still a lot of retail trading going on out there. I mean, it's a big market. You've got people in other countries. And so, definitely if there's some news that comes into the market, like I said, if you have a saucer pattern, they're usually like 90% effective, 95. And if there's news on the day the saucer breaks out and turns it around, well, that's because, hey, something bad happened. It just happens. But typically it's going to be something where all the institutions are saying, get out of this stock right now. So yeah, they are the big dog for sure. I like to think of us as motorcycles. We can move around the bus real easily. They can't.
I've heard that same analogy, but one's a cruise ship and you're a small boat. But yeah, it's a great analogy. Let's see. Yeah, exactly. James wants to know, these are all daily charts. Does this work on shorter time charts, like 15 minutes and 5 minutes?
Absolutely. And I wish we had time to go through real-time charts, but absolutely even more effective, especially trend line breaks, especially.
Yeah. Oh, yeah. How about futures E-minis? Brian would like to know.
Yeah. I mean, any freely traded market is going to exhibit these patterns. Now, you could argue that an E-mini is really a collection of a whole lot of stocks. So how could patterns form? But they do. I don't understand it. I spent about 4 years marking the Dow for a newsletter I did, and just time after time after time, a consolidation break would just culminate in this great big move. And so I've seen it firsthand. I mean, those index charts definitely are susceptible to patterns.
Oh, very cool. That I thought we wouldn't run. I didn't think we'd have enough time to answer all those questions. Ed, thank you so much. Appreciate it. I appreciate you putting this into Metastock. I'm going to reiterate a couple of things that I really like the fact that you show the perfect example in the commentary and that kind of stuff. But before I let you go, thanks for coming in.
Very welcome, Jeff. Love being here. Thank you for asking me.
Of course. And we'll see you again a little bit later in the week. Thanks.
That's right. Friday. Okay. Take care.
All right. Let me go ahead and do this.
And thanks, folks.
And let me see. Let me make me the presenter. Show my screen. And one of the questions was, will this work on an intraday chart? And this one was from Brian, so I thought I'd just pull up the intraday E-mini charts. This is ESC1. Here you had a saucer a little bit. This is on November 4th. This is a 30-minute chart. So you can apply this. Basically, I looked at all the patterns that came in with a 70% or higher rating. So here you had a bit of a saucer bottom. Here you had a SRR. Here you had a bit of a saucer. And again, those are identified for you. The ranking that I showed was 70+%. So you could go up to 80, 85 if you wanted to. I just love the way he designed this, though. Again, with the commentary, you can come in here. If I go into the expert commentary and I click on this saucer pattern that we had right here, it's going to give you, I'll just pop this out real quick. It's going to give you an exact definition of what he's looking for the saucer or the rounded top. It's going to show you exactly how many bars. This one took about 8 bars to form, and it's going to give you a definition of that. So I think he did a great job with the development, the design. I love the fact that you can go in and say, I want that confidence rating to be 70 or 80%. I mean, no, we got 2 more great sessions today, and I'll talk to you about that in just a second. So, yeah, there you go. Great add-on, very, very well received. Let me go ahead and talk a little bit about kind of what's in there. So here's a chart of Apple. Again, to just talk about what it incorporates and what it includes. It's going to include the consolidations, the cup and handles, the Fibonacci retracements, gaps, head and shoulders, saucers, SR breaks, support and resistance reversals, tops and bottoms, trendline breaks, the volume climax, trendline reversals. So many different patterns, the ability to set whether it's looking for the long term, the medium term, or the short term, and then that confidence rating. With this particular add-on, it's got a full 13 explorations in there. The expert advisor, you can run scans, very comprehensive manual. And Ed and I sat down with, back when this was released, and we did actually a boot camp. It's a 64-minute boot camp that is designed to get you up and running, even if you have no experience with Metastock. How to run the scans, how to run the explorations, how everything puts together. So this particular add-on's awesome. Normally we sell it for $14.95. Here at the conference today, we're going to do $9.95. We're going to back it with a 30-day money-back guarantee. You can try it. If it's helpful, you can keep it. You'll love it. You'll thank me. Otherwise, there's a refund, so you have a really good risk-reward to try it out. If you don't have Metastock, I'll just remind you, Metastock is awesome. It's been rated #1 29 years straight. I can. We'll give you a free trial to Metastock. We'll give you all the data you need to run it. And again, that 30-day money-back guarantee. So you can order that. You can give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. You can also order that on metastock.com/conf-promo. So great job, Ed, for creating that. And we really, really appreciate that. Great job. You should try that out. I'm going to talk a little bit about CMT. Thank you, CMT, for sponsoring the event today and Task. CMT has been sponsoring our events for about a year, and they're a nonprofit organization that helps do, gosh, I need to find a good adjective to, they help you get an accreditation. That's what, I should write that down. I keep forgetting that word. He's going to come in, Tyler Wood is going to come in a little bit later in the week. He's going to talk about how an accreditation can be particularly helpful for you if you manage money or if you want to manage money for a living. It's really, really eye-opening to see the statistics. So I hope you make it for that class. And of course, we're Metastock. With Metastock, we can help you scan markets. We can help you test trading ideas. 29 years in a row. Like I just said, you can forecast with our patented forecaster. You get real-time alerts, the commentary. All starts at $59 a month, $69 if you're in the US. You can get an extended trial of that. Again, the link is metastock.com/conf-promo. Kelly's going to type that into the YouTube for me. I'm going to type it right here for you. It also has all of the discounts that we're talking about today. Before we get on to our next speaker, I'm going to give away a prize. Kelly, are you going to help me with that? Oh, actually, I am not ready. My computer did a reboot. We're not going to do a prize this time. I need to pull the list again. So we will give.
I was so ready to give you a number.
Oh yeah, I don't have one. I forgot. Like I did it did a mandatory reboot, and I don't have a list ready. So that's okay. We will give away another prize after our next presenter, and I will get all ready to do that. So let me go ahead and do that. Okay. Thank you for the suggestion, Dinesh. I really appreciate that. We will. That's not too bad to do. Our next presenter is Peter Dalal. Peter has been a great partner of Metastock for, I'm going to say, a couple decades now, like at least 15 years. He released a program that was called FOREX Traders Advantage. It was extremely popular and actually a huge seller in the Metastock catalog. He's been working with us to kind of create some more methodologies, and what he's been working on and what he's put 15 years of work into is a product called the Magic Trading product. So he's a good friend of mine. We're going to let him talk. I'm going to get out of the way. Let's go ahead and get Peter in here, though. Hey, Peter, how you doing?
All right. Can you hear me?
I can hear you. You sound good.
All right. We should test the screen. Can you see my screen? Or we? Okay.
Not yet. I just sent the screen share over to you. So I will hang out until I can see it.
All right. Can you see it?
Perfect. We got the right screen. We got it on the first try. Good job.
All right. No problem. Now, the voice is okay?
You sound good. Yeah.
All right. Thank you very much for having me today. Thank you very much to everybody around the world to come this long day. Right. So we're going to get started, and we won't stuck somewhere too long. So this way everybody is happy. So before we start, because we are registered and it is better to have full disclosures. So don't get intimidated, but this is what the lawyers wants us to do it. I'll be speeding up. The disclaimers are available through Metastock. They are available on our site, which is themagictrader.com. And you could reach out to Jeff if you do want to have all copies of disclaimer, because it's impractical to read every single line. So I will be talking about important points and details you could read through the disclaimer whenever you have a time, because it will be recorded. So before we read the disclaimer, I want to tell you that we're going to be talking about certain subjects here, which are here. So we really want to stay focused in a way that you understand. It's very simple to understand what it takes to do trading. So we have come up with the 5 basic patterns on a bull side as well as bearish side, and that makes easier for trader to make trading decisions. So all the topics are related to that matter, and we're going to talk about some of the examples. If we have time, we're going to do Q&A. Also, we're going to go on a live chat right in between or whenever it's appropriate. So I'm going to get started with the disclaimers so we don't use much time. So basically, there is disclosure. I'm not an investment advisor, neither I'm a CPA or a lawyer, right? So everything we do or we're going to talk today or even in recorded form, it will be only for education purpose only. We do not give anybody buy, sell or hold recommendations. According to us, whether we talk about instrument or securities or market vehicle is all same categories, and they all involve substantial risk, and you could lose a lot of money, and some strategy in trading will make more losses than your capital. So trading is risky. There is no free ride. If somebody telling you a lot of money you could make it, no, it is not true. You could make some money, you could lose money. So you got to learn the risk management side. Is not about learning trading practically. Trading is very easy to manage it. Manage the money you're going to be using it is more important than trading itself. So we want you to know that only genuine risk fund you should be using to trade. No kind of money which you borrow and you're going to be trading with that. That's against the principle of investing. Also, there is no safe trading system ever been devised, and we never claim and we will never claim. Every trading systems are risky, and we cannot guarantee anybody any kind of profits or losses. Now we are registered, so this is the best disclaimer they want you to read, right? So basically, what it says in a nutshell that everything is hypothetical or is simulated program. So including Magic Trader, everything in a Magic Trader, all these signals you see, all the symbols, they are falling into hypothetical category. And there are lack of liquidity in the market, bid and ask prices you could see varies, especially on option side, right? So basically that tells you the story that you cannot predict the same results. And it is also true. I do live trading, as people see me trading, but I cannot do the same thing. Suppose I made 10 bucks today on a stock, I cannot do the same thing 2 hours later. That's the name of this trading. So please try to expect things reasonably. And we are not making any presentation here that you're going to make a lot of money. We cannot. We do have options. We're going to talk about it. Magic Trader has built-in expert for options, so we have least amount of work to do. However, you should go and read this supplement disclosures, and a supplement is here. It came out in March 22, and that will tell you what is involved in option. You can't just go and blind trading options. You got to understand. And lately we've been teaching all these people what I learned in the institution side, gamma and delta. That become the major part in this particular negative gamma environment, right? And there are delta zero situation, what market makers or dealers do it, and we have instrument for that to show you in a real time, right? So at least that is the one of the breakthrough happened last year. So we are giving those information in our alert room. Now, my company, Saved Our Enterprises, does not function here, even though it's registered as an investment advisory firm. We have agreed with the regulators. We're going to be educating people only. I did manage people money. I'm not doing because I got to focus on what I committed with Metastock. So there will be a time to do so. So I have an active license, and we're going to show you the number so you could check whatever you want to check it. So if you want to look for buy and sell recommendation, consult your own advisor. we do have a lot of patents, many countries. We have trademarks, we have service mark, and all kind of stuff, registered trademark or whatever you want to say. It all falls under intellectual property. So please do respect our intellectual property. This came out in the last administration, self-explanation, right? Now streaming data, you can't just copy and use it for any purpose. So please do not violate, because the consequences are bad. I'm not an attorney. I'm not a regulator to punish somebody, but this you stay away from trouble. Now, this is our registration number 352991. We required by law to read it to you, so that's why it is. But long story short, we are not doing any recommendation here, including tonight. People ask me, but you are at your own, you consult your advisor. Time to time, I disclose my positions to trading room. Here, if I'm in trade, then I'm going to tell you, but we are not guaranteed, because I also still have a traditional way doing the business, because I have so much going on. So I have money managers, right? According to Magic Trader guidelines, they're pulling triggers for me, right? And I don't know until it comes back, all the reports. So they pull the trigger. I don't know. I don't talk to them every second. I have an idea what they should be buying or selling, right? So please try to understand. So we will try to be as transparent as we can. Now, general matter, testimonials, we tell everybody, don't promise everybody, don't tell people you could make $1 million. It is not possible, right? Because these results are all hypothetical. So we don't need to go and promise people anything. If people like the product, then they will keep it. And we have a lot of people holding down to the product and alert room for a long, long time. In fact, they have yearly contracts with us and a quarterly contract with us. So basically, we growing organically, but very quietly, and try to do right thing for the traders to make them kind of institutional traders. That's what our commitments are with them. Now, before that, there was when I skip it, earning disclaimer, we do get royalties because I have patents on a Magic Trader and all other things. So we disclosing that, yes, we do get the money. Well, Metastock does the marketing. And it is required by law that we have to disclose that. Now, we have developed the scalp swing over the last 16, 17 years, as Jeff mentioned, and that creates, right, a lot of trade. If you don't want to do it, it's fine. But what we do, we create the money while we're waiting for the right setup. And Magic Trader allows you to enter into low risk and low drawdown, or we cannot guarantee, but most of the people know zero drawdowns possible and has been orchestrated many times, because we call this as switches. And those switches are the point. It just takes off. And we educate people how to do it, but it requires you to talk to your accountant. It's a long-term, short-term, whatever it is. I'm not an accountant, so please do so. So let's talk about the goals of this webinar. It's a very simple goal. I want you to understand how we trade, right? And how you could use this software, because this software is huge. When we were telling in the beginning, it's an ocean plus galaxy kind of feeling. It's 1,000+ inventions in there, right? My daughter and I put so much efforts into that. And there are 10,000 items in there. You don't see it, but it is behind the scene. So basically, you don't need to learn all. You pick up certain points and be happy, make money, then you could adopt different strategy. Including this morning, I even told, reminded some people who've been with us for a long time, I conservatively told them Magic Trader has 500 different strategies. People don't believe all these things. Now we are up to 800 of them, because as I'm teaching them, they're understanding what I'm talking about. And you could trade any market, any given time. We have 200-300 opportunity at any given time. Trust me, it is true. And there are so many Explorer. Metastock was nice enough to put it in there. 39 Explorer, plus I have my own 800 Explorers. So we have a wide variety of things we could offer. Again, we make it simple. You don't have to learn all over the period of time, right? You're going to learn like everybody else is learning. Now, the best opportunity in minutes, and thanks to Metastock, excellent exploration, and Metastock 18 solved my lot of time problem. What is used to take 20 minutes, it takes 6 minutes, 7 minutes. So I could do more exploring. So that really helped us and all the traders around me. So you could find pinpoint entries with the list drawdown in matter of minutes. And what happens once you get educated with these 5 patterns we're going to talk about it, you're going to get more confidence to pull the trigger, right? So basically, we are not against technical. I came from technical analysis. I used to teach people around the world, right? Going with the Jeff, Kelly, and more other people or writers. But I realized that I need to do something else so I could use those analytical time into making money or doing other businesses which I have been involved for years. So this software allowed me to do so, right? So we're going to talk a little later about how I get to that point. So let's talk about what is involved in this whole thing. Basically, we divide this picture or charting into 2 major parts. So basically, this is what we call as a health window, which is representing the health of a security. Because I have some health issues, so I was there, right? They do EKG, cardiogram or whatever. So I said, wow, we are human, right? Can have this problem inside until this cardiogram don't show us or EKG. We don't know. So how can we recognize what are the problems inside any security in real time? So this took me a long time to do it, and it took 14 months for Metastock to reprogram it according to DLL kind of things, right? So basically, this is not 14, 4 months it took it, and then DLL timing later. So basically, this looks simple, but it has a miles of long formulas in there. So let's give you just background, and we're going to discuss all the details about this in a few minutes. Now, this is what we call as a spectrum. So that's where all the magic happens. And I assure you, you have not seen this many colors, and this software candlestick has many colors. They represent different stories. It was always my problem. Traditional way, buy and sell arrow. That's what we were taught, right? But there's more into that. So every step of the day, instead of you having heart attack, and try to figure out what trend lines and what this, you don't need to do all these things. I don't even want trend lines or regular traditional head and shoulder, but we have technical traders, so I will go and help them to do transition into the new era of trading. That's what I'm trying to do. But I could go back and teach them technical analysis if I need to. But I'm not using for myself because I have enough, right? And I don't need it. This color bar tells me the story. So I know I'm going to go long. And this is a pullback. So I will take a profit if I had to, right? So if it's a weekly chart, the whole week you have to take profit, right? Things like that. So basically, this is a spectrum with the different color of the candles, and they have a different purposes. It tells you a real story, what is happening with the institution, what kind of institutions coming. And this is the first time when we got the pattern that I dissected buy and sell in a major 7 different what do you call sectors. So sector is not the one you are used to, or I dissected them in 7 different parts. So buying is not just buying. There are 3 major types of buying. Then when it's transition, it's go either way, right? It's another one, and 2 more for selling side. So basically, That's about it. And this is the pure health. So we did it before the release. So somebody said, all right, I don't want to do all this thing. So one shot, you could understand the health is good or not. So this is purified, not every single thing it includes, but tells you whether the health in a quick format. So if you are busy thinking about it, at least this will tell you, yeah, we are okay with that. So that's how it works. Right. So basically, I'm going to go into details of these things. And this is not what you see on all add-ons, my Metastock give. This is based on the time sensitivity of the risk. And that's how we design that. And this is a neutral zone. This is a bearish zone. And this is based on believeness. This is what I was struggling on Wall Street. I wanted to know where is the line of the sand and where on one side everything is people believe to buy it, they feel comfortable to stay in the trade, and I want to know on the other side. So that's how these lines were created. And these are not your traditional whatever the lines you're using. I don't know even what lines I should be even talking about, but these are done according to the time frame. They are not traditional lines. No way it can be, because every time frame has their own those magic lines. Weekly is different, monthly is different. There is a scientific reason. So you can't take one thing and try to use on all. People can do it. I'm not against that. I was one of them. But what I learned in our research and development side isn't not accurate until you do this way. You don't have to believe or agree with me, right? So business goes on, but we are not using them and we have no plan to use them. Now, let's talk about the 5 different patterns. What are these? It's the same chart, but I'm going to explain to you one by one. So this one vertical green line, it is the direction of the trade or direction of the security where it's going. It's a green, so we all went to school at least, so we know green color is green. We go long. So that's what this line represents. So once it is there, I feel comfortable to go long. So you don't need to go and become rocket scientist to figure it all out. Now, second ingredient or second pattern, what we see, the same chart in the spectrum, right? So this has value 4, this has a value 1, and this is the dotted line has 0. So bottom line is these 2 lines has to be above 0 line and they should be parallel. That's about it. Then it is safe to go into the trade in bullish direction. So this 3 lines combination 410, that's how you could remember the value. It's easy to remember, and in a simplest form, 2 lines are parallel, this one going nowhere, 0 line. It is like a line in a sand. Above, we going long. Below, short, things like that. So in this case, we are saying above it, and they are parallel, we are good to go. Third pattern is the spike. This is not the spike what comes with Metastock all add-ons. This is a specially designed, and there is a supplement. When you get into this thing, you will get a copy of few pages how this thing to interpret it, right? And basically, long story short, it is a green color. It is an entry for the bullish believers. So we go long. That's it. And the base is the most important. So that's where it gets anchored. So that's what is the first time it's confirmation that we are good. But if the lines are not parallel, we could wait for this one. Right? People who are experienced, it is a catalyst, so it's okay. And the spike is anchored, so we go. And this spike comes halfway. So you have enough notice. Suppose I was short here. As soon as this thing comes in, I'm out. I'm no longer short. Or this is a turquoise bar that stops the bleeding going down. So I will short cover here also. If I missed it, I could short cover here using half of this spike. That's how we trading practically. And you could get in a scanning same way. Number 4 pattern. This is that little line in this case it's a green color. We call it a pure magic hell. And when it is up and you match with this, and obviously it is here. So we're good to go to pull a trigger. Not a big deal. So in this case, what is happening, there are 5 major ingredients. You don't even have to count anymore. Metastock is working. This is a little bit upscale model, right? Because we try to be ahead of the game. So within few months, other than that, you could still do it traditional way, right? Because we have few experts. It won't be telling you number 4. So you have to still learn to eyeball it parallel. And this is there. Okay, we're good to go. Or you could physically count. If you don't want to count it, and for simple people, number 4, that means 4 out of 5 ingredients are matching. So we are going in. Here, it's only 2 matching. Little risky, but catalyst was there. So the system is designed for many flexibility. So you don't miss the opportunity. That's what is the bottom line. So that's why you come here, and you could also trade with as low as 2 ingredients. And that's how the system is designed flexible, and you do not miss the opportunity. And if you really think about it, you see number 2 and a black candle, right? You're good to go. How much technical analysis did you do? In less than 1 minute, if you have practice, you know what to do. You don't need to worry too much, like higher highs and lows and whatever. It is good thing. Technical analysis is not bad, but a lot of time consumption is taken out of the equation. And that's what I really was struggling. And this software was designed for me, an institution, not a retail side. Kelly and Jeff was nice enough to talk to me. I went to see them, and we decided to go and do the right thing for real guys. That's why we're giving all institutional product to you. Not all 100%, but institutions are always having superior product by design, I guess. But retail side, in a way, you could make few bucks, or you could lose too, because I cannot guarantee. So what we did, we put all these 5 different patterns in simple form in front of you. So this way now we could recap. So green magic direction line is this vertical line all the way on the top. Those are the 2 parallel lines to 0 line, 410. So that's the health lines. And this is the bullish entry spike. So these are, we call them as a spike. Somebody will tell triangle. I don't care what you say, but this gives you bullish entry, right? So that's what you need to pay attention to that. And this is the pure health of the health window of the pure health of the security. So that's what you have to have that. And if you don't have it, you could still go in the trade because the other ingredients are there, but you know that there will be a pullback and you could take advantage of it. Now, this is the ribbon, or we call them horizontal time risk, and this is also green color. So you can't miss these things, right? So as long as you have more than 2 and one of the catalysts, you're good to go. It's not necessary got to have all 5, right? Sometimes you're in a hurry, so you don't have time to make a super duper food. So you, all right, slap it up or make a quick sandwich and go. Still, you could also happy eating that. So you could pick up a couple of them, and the security will give you all this different combination, and you don't have control. So you don't want to lose the opportunity. So you have confidence which is going to have you pull the trigger. And risk management inside the trade is very important, rather than worrying about too much about all this technical stuff, because we don't even have MACD or stochastic. I don't know even how to use it anymore. I don't. People know that. I never even pull out those. I don't know. I taught people I could go and take a refreshing course from somebody, I guess, from Jeff. But I don't need to use that because I know the limitations. I spent more than 25 years in this business. So I know what works and what doesn't work. That doesn't mean they're all bad. They give you 60% efficiency, just like a boiler. You buy boiler, they're all boilers, right? But one give you 85% efficiency. So you have less money to lay it out, and it's more efficient. It kicks in quick. So that's what we're trying to do. Go on a more accuracy side and do not use our time in analysis paralysis time. Only I do care about these colors. That's it. And that's what it was designed with. So how we did green side, I mean bullish side, same thing applies here. If you have a red vertical line, that means we're going south or short, or we're going to buy some put options. This one is opposite to other one. So zero line is still there, and underneath that is a blue line with a -1 value, and this line, purple line, has a -4. So they are parallel, we're good to go. Same thing, we talk about spike. Here is a red spike. So anybody can recognize this thing. That's what we're using. So it's easy to trade. And this one tells you bearish direction. So we are bearish. Here the health is internally no good, right? So we have a stomachache probably. So we're going short in this case. I'm just kidding. So, and this same way, all the risks which are time sensitive are demanding the bearishness or bearishness believeness. So that's what is represented here. It's a time sensitive. As you go along or you're going more and more time, there will be a time to take profits, right? So people with short cover, things like that. So you got to understand, more you go horizontal, it becomes more riskier. Now, this is the application, one of these chart we did it. So I want to go over with the same thing, but now a little bit different, right? So it is same philosophy. Vertical line is same. We number them. Bullish, magic, direction line, right? So these are the technical real name. So we were talking about direction line, right? But this is the real terminology we do use. So this is the direction line. These are the three lines, health lines, right? They're all parallel. These are two health lines. Third one is the entry spike, which is here. So bullish magic entry spike, bullish or health is here, and fifth is here. So now what do we do here? So in this case, I enlarge it. A bull here, it tells that 5 ingredients matching. So that's it. This is your analysis done. You don't need to worry about it. It tells you all 5 ingredients matching. Rest of them are the history. And these two lines, which are magic lines, green is above it. That's even better, right? As I told you, I always wanted to know where is this line in the sand where all the buyers are on one side. So they are all there. Look at this here. As it goes up, this line is moving same way. So as long as it's there, you could stay in there. If there is a PB, that you could take profit and go back here. It is flexible. Or you could get this color spike, which is actually going short, but in this case, magic lines are strong. So you don't need to short it, take the profit. Or if I were you, I take it here, and from my technical background, I see there is a problem here, right? One of the level on a magic zone lines, which we do have it, which I'm not going to represent here right now because it's not too much time here, but they tell you the levels. It hit that level and bounce back. So I know it's going to go and take some profit. So I will get the hell out of that, right? Just before the magic zone line. So you don't have to use Fibonacci with my, we don't even use, I don't know. I don't even plot it on. We develop patented technology. Those levels are flexible, adaptable, and they forecast future levels before it happens. And people in my room are witnessing day after day those levels. Sooner or later they hit it, right? So suppose we came in here and they will show this level right here, way before it. I know it's going to go where, and those are the beauty about this software. So everybody understand that this is the place we're going to be entering. It's as simple as that. So that's the entry. That doesn't mean you cannot take entries in between. If you miss the board, you could do that. But as I told you, where we go horizontal, risk is more. So you could go in and get out here. So there are so many opportunities. Look at here, number 3. Keep on going. So there are 3 ingredients matching. We don't need to count and Pure Health is there is one of them. And green ribbon, if you don't know, even number 3, so what? Green ribbon, this, and parallel line. 3, go. Right? We don't need to wait for a new trend line. It's already there in a place. So I always tell people, look at the left. If it is there, so you don't need to invent, just make it happen. And you could trade options with this software. We have expert, right? I took off the magic lines. So even with this expert, you just follow what he says. Again, 5 ingredients match, all 5, right? So right here, they match all. So you could see this parallel line, vertical line, this line, pure lines, and ribbon. All right, good to go. What? It tells you bear came in and it has a put plus plus. That means we could take a put position here. All right, so you guard in there and get out here, right? Because this is the another candle in between. So people take profits, Then again got set up here. Look at that here. And suppose I was in there and I know, and we have a lot of things to back it up, right? Because I'm constantly monitoring the dark pools, options, right? CBOE tape, and we compare the tape with that, what people are doing it, institutions are doing. Suppose somebody bought 10,000 contract. What that means? It's not Peter. Those days gone. I'm not in institution anymore. So those are the institutions shorting it here. So now we have this color and we have explanation and we have some kind of backup to show. And I've been doing for 17 years. I started with Bear Stern and many other people, and they will take positions. I say, oh, you take it. I know. How do you know? So my software. Look at here. So that's how we were testing in real time with the big institutions. One of the Reuters guys introduced me many good managers. So I had a lot of good years. Now they retire. I don't have to call. I know for sure what is happening. But we still keep a lot of documentation just in case, right? Including today, what I was doing this afternoon, documenting all the tips, right? And we have another plan after the tips, and we have a couple of people working for me, right, doing it, and we are going on a different levels. So that helps the trader. That's bottom line. This is a forecasting, so it tells you 4 minus 5. That means risk is there, but we are going down. It's forecasting. Then we again put guy came in. Then it's telling we going up, going down here. So now here it is number 5, and then it came in number 6 here. That means it's very risky. After 5, I'm putting tight stop. Where you put the tight stop? I always tell go a candle before which is higher than, put a stop there, or use magic zone lines. So, or you could use magic lines to put a stop, right? Depends upon your tolerance, right? So that's how simple it is. And you could scan this, put wherever you want. So for security, you scan those security and you will get this into the Explorer. So you don't have to even look for it. You just have to scan it. Thanks to Metastock for that. They allow me to do many things. I put it in there, recent example of Cardinal Health. And this came in our scanner. And I don't have much time, but I want to go. So like everybody's saying, oh, it's trending up and trending up. My way of looking, and it's not even sector, not, okay. I will read you the numbers because we don't have much time and I didn't prepare this slide, but I keep track of like this magic lines and this ribbon, right? If they are matching in a multiple time frame, that means they're going up. Simple logic. And a new version, they're going to get those scanners. Or we know how to do it, but we will be saving more time. That's what I'm trying to tell you. Say for instant, right? So on 11/7, let's talk about bullish because everybody's bullish. So there were 450 securities were having magic lines on what do you call bullish side, And on a 11.5, it was 364. So it jumped from 364 on a monthly to 450. That means everybody's betting, and these are very powerful lines. They don't just show up. Those magic lines takes forever to line up. So I knew from 11.5 there's a huge development going on a bullish side. Then when I filtered through, weekly was 210 versus previous week was on 11.5 was 180. So it increased. Then daily was 90, it went to 205. So 11.7, which was yesterday, everybody's going crazy. And I documented a lot of option buying was happening, and I had a good time, right? Today, look, listen to this. Today, same way against 450, today the monthly has 468 reading, weekly had 220 instead of 210, which was yesterday, and daily had 134 versus 205. That's where something doesn't add up. So I understand all these securities, right, not coming through fast enough on a daily magic line. So there is something did happen, right, during the trading. And if you look at the ES chart, they back off. They did back off, right? There was a time it went to all the way to 37.98 or 97. I was watching, and then it took off. And I do believe that they closed around 25, 26, 38, 26 or something like that. So basically, there is something did happen. So it gives me a sensation what is really happening. It is not about trading security. It is about all the big time frames going in your direction to push you up or not, or it stops me not taking much risk. And if you use little logic between 11.5 and that 3 days in a row, it go up and up and up. How long you can keep on going? And on a Thursday, there is a problem, right? The CPI number, anxiety. So market, right, could not go to 3,900. And when you learn from me in the future about gamma, right, accumulation, right, those gammas and positions they taking to hedge it tells you the story practically. So we even told before today, it isn't going more than 3,900. We even give the level in a room yesterday about where it's going to go. 3866. Yeah, 3866. That or 64, and it bounced right back off. So where this information coming from? Mr. Magic Trader, right? So we knew, but 3,900, there's a big option hedging going on, right? So they work as a resistance. So those are the things you got to learn beyond what you learned today, because it is not about equity anymore. It is about the hedging and the option gamma and delta whole day long. This is what institution doing, and for your knowledge, what I have seen since last 2-3 weeks, they're doing huge positions, day trading. They take position in the morning, after they get out and this is what you're facing. So you think the market is going up, but they also pulling the trigger back. So now this one is very unusual behavior of the market. So I just want to let you know what is going on really. So it's not just about, oh, everything going up. You got to be aware of those things, right? And I learned this thing been working in a hedging firm, and that's where my prop trading started. And then I went to institution side, a little bit better side, so I could see what games they're playing. Right? That's how I did it. So again, look at this here. Anytime this concept is the same, like vertical line, right? We're going to do quick. Then two lines parallel, plus is about 0. Good. Third is the spike. Good. Fourth is the pure health and ribbon. We're done. Oh, there is nothing there. You don't need nothing. You could do also basically counting. You could enter here, but Magic Trader is smart. It tell you here then we're going to go long. LG means long, and it's a counter cycle creating to this trend. So our traders are smart. They're even getting here because they got neutralized, right? All these sellers are neutralized. Excuse me. So now they will take the entry here. You don't need to. You could take here or here or here, doesn't matter. This is the forecasting. Just think about it. You went in open. What happened to you? Boom, boom. So trade the option, right? This is the weekly. Whole week you had it to play option play weekly or 15 days or whatever you like it, because it has a forecasting inbuilt feature. And this is very powerful feature. And you could exit here, all right? And then again, all these sellers got neutralized. All right, so basically, these are the neutral candle, neutral ribbon, and we good to go. And that's how it was forecasting here. Look at the, again, number 3, and it is telling we're going to go higher. We did. And these are advanced price perceptors, so risky, yeah, but these advanced price perceptor institutions are coming. What the hell I am? Nobody. I was one of them, but I will take without a fear entry. Look at here, once you enter, you keep on going. And then again, it came and tested our blue line and then keep on going. So I did this screenshot, I do believe yesterday or something like that. So this is fresh, but that doesn't mean you got to jump in there. I'm not recommending. Suppose I missed the boat, I will wait for a pullback. Then I'll see health is good, this good, then I'll go in there. And that's how I handle my entries and exit, right? So you don't need to be greedy. Now, how you find these things? There are 39 explorers there, and basically you find 5 ingredients this way. One is for bearish side and one is for bullish side, right? So basically you need to use them to find 5 ingredients. It's a simple setup, and you could find, and not necessarily you got to have everything. You could have 2 plus more and 1 catalyst. Catalyst is a black candle, turquoise candle, or yellow candle, and you're good to go. So let me talk a little bit about my daughter who put her childhood into that, or high school. She started getting involved, right, in a business. So the girl, every business I did, she got involved because we have an office here in New York, but we need somebody. 12 o'clock, I need to do something, so I need help. So I will have this girl help me, and I got her involved in a mutual fund, taking her to Smith Barney as a guest with me because I had to go and see all the big honchos. I was never working for them, but they like me, trust me, so I was part of a lot of acquisition behind the scene, and I started seeing what is happening really, how they're making money, because that's what I was interested in. So I helped them, I open up my contacts, do whatever you want to, but let me listen to all this, some secret things, so I could learn from there. That's how I learned Regulation D, how they raise capital, whatever, mergers and acquisition side. And then they allow me to go to that trading desk. Oh, that's cool. How they're moving the market, how they destroy securities. There's no mercy there, trust me. So they could do whatever they want. You cannot do nothing about it. Right? They follow the rules, right? They could short and short and short, and they destroy the stock if they want it, because they feel stock is not worthy. So my daughter was involved from day one, and it was good that she did help me to build this magic trader, which is complicated thing to make it. But in 2004 we started, 2006 we had a first real model which I traded with, right? And since then I'm using it, and then we add more and more and more and more stuff in there, right? Because every day I put my time into these things. So this girl Survi is my daughter, played a big role, and I really appreciate what she did for me, right? And and she has some licenses, 3 and 34, just like I have it now. and we both registered with CFTC. But I had, back in days when I was on a Wall Street 7, 6, and 63, I let it go because too much restriction, too much problems, right? So basically, too much problem with compliance. That doesn't mean I'm doing something wrong. I can't keep up with the compliance, right? We are a small company. We are like a small company, and it is too much. I can't do everything, and my health is not too good. And I just want to make no excuses. I just came out of this surgery on Wednesday. It's a major surgery, right? I'm not supposed to be even here, but I like to help traders. That's why I'm here. I'm not making any excuses, and that's me. And I've been like this all my life. It's a passion. It's not money. Trust me. We don't need to make money. We are okay, right? I work hard. Only thing why I wanted debt free, and that's what I accomplished many years ago. So it doesn't matter. It's now your time. I want to take my time before I retire, or probably I will never, right? And help traders. That's what I'm doing, but not whole world like I used to. Thousands of traders. I'm not well enough physically to address 30,000 traders. Few hundred is okay. So basically, I have a business background, right? And I like to do multiple businesses, multiple revenues upstream, right? And we built biggest construction company in New York, which is very popular. And we did very historical. The last one we participated, just want to go on a record, was Hudson Yard, all 5 buildings. We did a couple of trades there. If you understand and Google it, it's not a small. And I started with a company was almost supposed to be shut down, and I took responsibility and made a statement. We'll be doing bigger job. We'll be involved, bigger than Rockefeller in New York City. My partner said I'm crazy, but it came through 33 years later. So basically, you could accomplish anything you want. You don't need to be genius about it. Now, Magic Trader has a pinpoint entries, right? And it can be applicable to every single thing you do it. As long as Refinity gives us those data, we could plot every single thing. And we had done, the virus, we got hit in 2020, and I was pretty much confident isn't happening. What they're telling is going to be over in 2 months. Because of Magic Trader, we could see, we could forecast. And it's a sad thing to forecast, but this was the reality. And we're still suffering. So Magic lines were very instrumental in forecasting and putting myself on a chopping block based on a Magic Trader. So everybody who has a question with the works with the derivative currency, everything, it works with everything. Now, the whole software is based on a risk. So what I did it, I put all different kind of the components of the risk, what Magic Trader does. So it is a risk management software practically, right? Gives you right entry, pinpoint entry based on the risk, not based on a price. We don't care about price, right? You care about it. We do all. Really, it's cheaper or whatever, but I do care only if the risk is low. Otherwise, I let go. So basically, identification of risk, analyzing, assessing the risk, how to find that risk, right? Thanks to Magic Metastock software, pretty good things. They have highlights and symbol. This is like unbeatable. And sequentizing, which we have patterns on that, and those sequence of the risk, that's what it is. Magic Trader working like a charm because of that sequentizing. And Metastock had that inherited software capability. A lot of people don't know, but that's a hidden secret. Metastock has it. So don't underestimate that. I love it. And highlights are pretty good too. That's what all the color takes place. So control of the risk, right? Magic Trader does all inside. Reduce the risk, right? And forecasting, right? So the forecasting also has a risk categories 1 to 6. And transfer of the risk. This is my biggest problem was on a watch it. What is that timing and an event where buyers just buy from all they can from a seller, and all seller gets exhausted, right? And that's what came in a black candle and black ribbon, and a combination of those that are very powerful. So that's what some of the jams it has it. The inventions are already there. They've been working 17 years. You don't need to go crazy. So what it did to me, I never used to be here traveling and helping all these people. I never was home. Now I'm home more than ever. Right? It gives me freedom. So that's what we're trying to do. So you could spend time with the kids, right? All the happy stuff. We don't need to worry about it. Wasting time. Now, no disrespect. I'm the first one to admit here. I basically was a technical trader. Still, my brain is technical because I'm an engineer, right? But timing, I eliminated repeat things, right? But I don't use all the traditional stuff. Doji is there on a chart, but we don't need to trade. Oh, Doji came in, Doji is going to have. I don't care. My magic trader says what? That's what I follow. So MACD, Fibonacci, I don't use them. And I have so many eyewitnesses. I don't even pull it out. I don't know how to use them. I forgot because I want to focus on what I created. That doesn't mean they are all bad. Right? If you are happy, you make 60% accuracy, be my guest. We want more. So, and we want to save the time. That's what we do. So I could do other things, go to gym. So what I'm going to do, I'm going to have Jeff take it over, right? Few minutes and let him, go on. Jeff, go ahead. And anybody who wants free analysis, right, you take this number down, send me your name and last name, right, and a code. We could send you analysis for free, no string attached, no sales pitch there. All right, so Jeff, take it over, please.
You bet. Peter, one quick question.
Yes.
Michael wanted to know how well does Magic Trader work in a consolidation market?
Okay, this is the best thing. In consolidation, suppose it was supposed to go bullish, it will show me black candles and then yellow bar or turquoise bar. So that means I'm going in a bullish direction. So that is my best thing because my option prices are low at that time. So I could buy options, and an option expert tells me calls, buy calls. That's how we go from consolidation. So even the ascending triangle, every single thing, I have those jams or forecasting feature that is telling me to go up. So I know it's going to break out on the top, not at the bottom. So that's it works very well with the consolidation.
Okay. Perfect. Let me go ahead and I just had a chart I wanted to show and a few things to talk about.
Yeah, Peter, go ahead.
Thank you very much. Let me go ahead
and do this. Thank you very much, everybody.
Yeah. Okay. Let me do this. Yeah, let me do this. I was trying to kind of make sure I do everything so you can see everything I tend to show you. Want to actually just show you how this looks on a little bit of a chart. And Peter does a really good job of showing the indicators and the ingredients and everything that goes along with that. But I just want to show you this this is the DIA. I love the color coding and kind of the way that things put together. Right here, if you just kind of pay attention, yesterday we had, this is a daily chart. Yesterday we had a little bit of a yellow bar. Today has been a green bar. So far that's looking pretty good. If we go back in time a little bit, you kind of have this bearish to bullish switch. And then it went to bearish to bullish, but then you also obviously had a bit of a green trend that came in. I just love the way that things are color-coded because it does a very, very good job of kind of helping you understand where you're at in a market trend. Right here you had a little bit of an indigo blue cut bar. And as we've been talking about today, the Magic Traders, well, actually, we haven't been talking about the Magic Trader except for this hour, but the Magic Trader is fully customized and put into MetaStock. So it takes advantage of all the things MetaStock does very well. If I wanted to show you, I could come in here and show you the expert commentary. The expert commentary is going to display all this stuff on the chart and kind of give you a good explanation of what's going on. And I think Peter did, it takes a second to load because there's so much in there. Peter did a really, really good job of designing a commentary out. Right here, you've got the price, it gives the Dow. If I refresh this, it would actually show a value for this, but it's going to give you a summary of the ingredients right here. Your magic direction line is bullish, your health indicator is bullish, your spectrum spike is bullish, your pure health is bullish, and your horizontal time risk is bullish. Here it kind of goes into a lot of details. We just don't have time to read through it, but it is very, very specific, very significant. And this is a really big add-on. There's a lot of indicators, there's a lot of expert advisors, and that's okay. One of the things that I think about Metastock is it's a huge product, right? We've been working on it for 30 years. Peter's been working on this for 15 years. What's important is this is well laid out, it's well organized, and it's a product that's going to grow with you. The more you kind of figure out Magic Trader, the better it's going to work for you. But it is a very, very big product, and we've done a lot to actually help you with it. So as part of the product, you're going to have 58 indicators. You're going to have 47 different scans that you can run, 2 expert advisors, 35 different templates, a very, very big manual, a lot of symbols that show up. But one of the things that's included as part of Magic Trader that Peter and I sat down and we recorded a training session to help you get up to speed, and it was very, very extensive. So that also gets included. The Magic Trader Elite, the product price is normally about $199 per month. And he also does a very, very, let me say it this way, the people that are part of his educational consulting room absolutely love it. You can kind of see a lot of the topics that they're talking about in their educational consulting room. He goes in and talks about scanners, SPACs, Russia-related stock effects, volatility. And I'm not going to read all of these, it's just a huge, but it's a group meeting. They get together a couple times a week. In fact, I have the schedule right here. Tuesday, it's going to be 5:45 a.m. to 7:45 a.m. Eastern Time. Friday, same thing, 5:45 to 7:45 a.m. Eastern Time. In addition to part of that Elite Room service, you get WhatsApp messages 5 days a week. You can get messages about what's going on, and you'll even get messages on Sunday about what to work on. That consulting educational alert service is $299 per month. And what we're going to do as part of that, before I get there, also as part of that, you're going to have access to the community, the Facebook side, a huge glossary that's available on magictrader.com. But all of that, normally what we're going to do to kind of get you, we know that if you're going to start this, you're going to really, really like it. The retention on the consulting room and Magic Trader have been huge. So what we're going to do is, like I said, the Magic Trader Elite is normally $199 a month. The educational room is normally $299 per month. The access to the Magic Trader portal and the Facebook site, those are all free anyway. But the total value, if you paid for that for 3 months, it's actually $14.94. What we're going to do is we're going to do $500 for 3 months access. So $498 is the price you'll pay, the discounted price. Basically, what you're doing is the same thing we're offering with Metastock. If you buy a month, we'll give you the Peter will give you the 2nd and the 3rd month for free. That gives you well into 2023. Right now it's November, so you get December, January, February. You'd be good until February for about $498. And that basically is what we call an extended trial to help you get started. After your extended trial, you'll pay the normal monthly rate. And this offer is good until 11/15 or November 15th, 2022. So it's only good for a week. You want to do it right away. Today's special, again, is for if you buy 1 month, we'll give you the 2nd and the 3rd month for free. After that, you'll pay the normal rate. Now, one of the other things that Peter offers, and you'll see it right here, is the fundamental recorded trainings. I want to talk a little bit more about that because that is optional for you. You can, and I'm sure you'll be really happy if you just sign up for the $498 price. But Peter actually sat down and did a 20-hour worth of recordings of the fundamentals of Magic Trader. It's a retail price of normally $9.99, and it includes 4 modules. You can kind of see where he kind of goes into the fundamentals, the dimensions of risk, the basic layout. Again, I'm not going to read. There's so much that's in here. 20 plus hours of recording. Normally it sells for $9.99. And what you can do with that is if you want to add that to the $498 price, you'll pay $7.99 for that training. I'd recommend you do it. But if you just do one thing, make sure you do the extended trial for Magic Trader Elite. If you really want to get all of that 20 hours of recorded training, which was in depth, it was thorough, it offered all of the good stuff with it, it'll be $7.99. So you can take advantage of that. This is not an offer we've put online. You have to call in or chat in. Give us a call, 800-882-3040. You can visit us online at metastock.com/saleschat. So with that being said, I don't see any additional questions. We need to move on. Peter, thank you for your time. I really, really appreciate it. And we hope to see you again very, very soon. So again, that phone number though, 800-882-3040. So thanks again, Peter, for coming in. All right. Let's say thank you to Stocks and Commodities Magazine for the articles, the articles. I do actually appreciate all the articles that I've read over the years, but for the sponsorship of today's event, we really appreciate it. Thank you for doing that. Thank you for being such long-term partners. They've been literally supporting us for a decade now. If you do any subscription to Metastock, you're going to get at least 5 months free of Stocks and Commodities Magazine. If you do more than 2 years, you're going to get, or if you spend more than $300, you're going to get 2 years for free. Kelly, I promised a prize. Let's do it. You ready? All right, very cool. Let's see. Let's decide on a price. You know what? I'm going to give away the awesome price right now. You know what I'm going to do, Kelly? We're going to kind of shake it up just a little bit here. Have you heard of the product Metastock?
Ooh, it's a good product.
Yeah. It's been rated #1 in this price category for 29 years in a row. I'm going to give away 3 months of it. But that's not all. Guess what else I'm going to give away?
What are you going to give them? You're already giving the farm a little bit, but what are you going for?
I'm going to also give them Metastock Zenith. Have you heard about that?
Excellent data feed and news provider.
Yeah, they spent over $1 billion getting that ready.
That's
They're
a lot
probably
of money.
put another billion or so into it. So Zenith, I'll just kind of give a little bit of a spill on what Zenith is. Zenith is a product that Reuters put together back, I'd say about a decade ago. They spent $1 billion on it. It provides all of their news. Reuters later on became Refinitiv, and now it's owned by London Stock Exchange Group. But they built it as a competitive product to Bloomberg. If you're familiar with Reuters, they've got a huge reputation in the market. So does London Stock Exchange Group. And it's just a institutional quality platform to give you news, information about what's going on in the market. So we're going to throw that in as well, Kelly. In addition, we want to make sure that whoever gets this knows how to use it. So we're going to throw in 3 months of a website called learnmetastock.com, which features hundreds of videos on how to use Metastock and how to use all the nooks and crannies. So we're going to give away all 3 of those. Isn't that a great prize?
That's a pretty big value. I think you should also throw in Unleash the Metastock Power Bundle for that's a $99 value too. I'm just like feeling like you're giving stuff away, but we might as well give some more.
Hey, you can call me MetaClass. Why don't you tell them a little bit about Unleash the Power of Metastock?
Unleash the Power of Metastock is an ebook and collection of videos that's about 2 hours of videos that take you through the power of Metastock and really show you how to use those top tier tools.
All right, I think we've sold Metastock enough. Let's pick
give
out
it
a
away.
number between 1 and 10,691.
Well, we've been telling people on YouTube that they should register for prizes, so I'm going to go for one of those higher numbers, thinking it might be one of those people, and I'm going to go for 10,207.
Okay, I like it. Oliver L. And Oliver, I'm not going to dox you. I'll just say that you have a Yahoo email address. You're somewhere in the USA. And you're the proud new owner of a Metastock 3-month subscription. I'll contact you within the next week or so and kind of help you get that set up. If you want to get your own extended trial, hey, you can buy a month and we'll give you the second and third month for free. You can do that at metastock.com/conf-promo. You can do it at metastock.com/chat. You can give us a call at 800-882-3040. Thank you for the assist, Kelly. Let's move on. Our last speaker today is Silas Peters. Silas has been a trader for a number of years. He's done a number of classes with us. I like the pattern he's about to talk to you about, the technical pattern. We're going to bring him on here. Silas, how are you doing today?
Hey there, Mr. Gibby. How are you?
I'm doing well. Thank you. Welcome to the conference.
Yeah, thank you for having me back. I really appreciate it.
We'll have you every time you want to come. I just sent the presentation over to you, or the presenter, so it should be asking if you want to share your screen.
All right. Can you guys see my screen?
I can see it. You know, we're starting to be about 10 minutes late. You're the last presenter, so take whatever time you need.
Yeah, well, I appreciate that. Unfortunately, I'm going to have to leave close to the top of the hour. My girls are having soccer games this evening, so I've got to run out to the fields. But
okay.
So,
all right.
But I'm going to do my thing. I'm going to teach everybody a really high probability quality strategy, and hopefully I can take some questions and answers after that, and then I will have to depart. But I do appreciate you have me on, Jeffrey, and to the Metastock team. Many thanks. We ready to go?
It's on you. I'm out of your way.
All right. So welcome, everybody. I just like to do a quick audio visual, make sure everybody can hear me and see my screen before I begin. And want to make sure I'm not talking into a black hole. I think the sound and audio is good. Looks like folks are rolling in saying that everything is indeed that case. So we're going to go ahead and get started. So my name is Silas Peters. I'm the founder and head trader of Trades Trending. And again, I want to say thanks and shout out to Metastock. Always put on a great show. I know there's several days of high quality education speakers. So you guys are in for a treat. You've already been in for a treat. I guess here we're on the second day of the summit. So very honored and humbled to be presenting and speaking to you today. So let's get right to it. We must always take a quick moment to read this from our friends at the regulatory governing bodies and who our attorneys require us to share. We know that past performance is not necessarily indicative of future results or is substantial risk of loss associated with trading. Only risk capital should be used to trade. Now, that everybody understands that, we know trading is risky. Let's go ahead and I want to introduce myself once again so you know a little bit about me, who I am, maybe why you should listen to me. And I am, again, Silas Peters. I'm a proud husband, father. These are my beautiful blonde hair, blue-eyed beauties down on the bottom left. We're standing there in front of my alma mater at the University of Alabama. And 3 days after I graduated Alabama, I sold my car, packed up my small belongings, and I headed north. I headed north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was bitten by the trading bug and have never really looked back. While there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs. Been a part of building and managing several futures and equity brokerage firms, handling operations, trading, back office, sales, and support. We also worked as a private family office investment consultant. We managed about $2.5 billion doing a hodgepodge of all kinds of things, hold or have held these various futures and securities licenses. And then in 2016, I launched my publishing brand, Seasonal Swing Trader, which is now Trades Trending. But my journey was not always easy. There was a learning curve. In fact, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School cannot teach real life experience in the markets. In the beginning, I made money, a substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account, blew up several others, and what I like to call revenge trading. I'm sure several of you can attest to that. I finally went back to my roots, settled down, worked my process, and found overall consistency. But enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk like this? I sure hope not. And this is actually not my trading desk. This is a bad joke. I found this on the internet. Thought it was funny at the time because I feel it's a perception of what those on the outside looking in think this is what trading is about. Now, my desk did look like this in Chicago for obvious reasons, but my point is that none of this is necessary. All this does is harm your eyeballs. And what I'm going to do today is teach you how to rid yourself of paralysis analysis. Who here is or has been a victim of paralysis analysis? I'm raising my digital hand. I've been there, done that. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the research they thought they could? They've got their finger on the mouse, getting ready to pull the trigger, and then what happens? Some line crossed this line, or maybe somebody on CNBC said you should be buying instead of selling, yada, yada. And yeah, I see a lot of you, we've all been there, and it's no fun because it causes us to miss out on opportunities. So we're going to try and rid paralysis analysis today. I can almost guarantee it, but I can't guarantee you anything. And we're going to learn a simple and effective method together. Now, what is everybody trade? I appreciate your participation so far. I'd like to get an idea of who I'm talking about. Do you trade stocks, options, futures, FX, crypto? Let me know in the chat, what does everybody trade? I trade all these actively. Stocks, options, futures, FX. Do not trade crypto on an active basis. I am, quote unquote, invested, have accounts across the World Wide Web, but I view them as more of a lottery ticket. But these I do trade on an active basis with the method I'm about to teach you. So I see stocks, options, stocks and options, everything, futures, FX, futures and FX, FX only. So a pretty wide spectrum. And that's great. That's great. I appreciate that. And what I'm going to share with you today works in every one of those markets. It's highly accurate, works in all time frames, it's 99% mechanical, and most importantly, it is simple. We are not here to teach rocket surgery, folks. We're not here to make things complicated. We're going to keep things simple. In fact, I have a promise for you that we're going to learn a simple mechanical setup together that is repeatable regardless of the market or time frame. So I'm going to ask you at some point during the presentation, have I fulfilled my promise? I hope to see a lot of yeses. But I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. So what I'm going to show you are exact trade setups that you're seeing here. This trade setup in General Electric. This is a 36% move. This is a 26% move to the downside. I'm going to show you how to find trades like this in Barnes Group. You might not be looking at Barnes Group. I'm sure as hell not looking at Barnes Group, but with my tools and my setup, you're going to want to take these trades for a 21% move to the downside, followed by a 63% move to the upside. Bank of America, a 28% move to the downside, followed by a 60% move to the upside. I'm going to show you how to find these and how to execute these on a daily basis if you want that kind of action. Gold futures. This is a 4-hour chart of gold. Here we have an $1,800 per contract move to the upside, followed by a $900 per contract move to the downside. Day traders, scalpers, 5-minute chart of the E-mini S&P. We've got 8 points, 2.5 points, 6 points, 4 points. Almost $1,000 a contract in a single day. I think everybody's starting to see the potential here. And then FOREX traders. This is a daily chart of the Aussie yen. 150 pips, 440 pips, 160 pips. All going to target 1, target 2 projections, and some continue to even further. So with all of these examples I just showed you, can it be too simple? Well, we all know trading is not easy. It is not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff, and most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on price action, following one simple pattern, it all started clicking. So if you are sitting here as a new trader or a struggling trader or an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. And I'm telling you right here, right now, that this is a simple mechanical setup that anybody can learn. And you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we will be discussing today is, drum roll please, the 1, 2, 3 pattern. Who here has heard of the 1, 2, 3? Also referred to as a 1, 2, 3 top or bottom. See a lot of yeses, couple of no's. And this is one of the most fundamental technical patterns in the textbooks, but highly, and I mean highly, overlooked by most traders. So let's talk about this setup. The setup is price action based. The pattern is comprised of a low, a higher high, a higher low, and a break of the higher high in the instance that we're going long. Same rules apply, but inverse if short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. I will tell you that this strategy also works extremely well when the pattern sets up at significant areas of support and resistance, or what I call supply and demand, other high probability patterns, head and shoulders, tops, bottoms, double tops, double bottoms, and more. Let's take a look at the basic mechanics. Let's start with the 1, 2, 3 top. With the 1, 2, 3 top pattern, this is where we are bearish. We're looking to go short. Could be a stock, futures contract, currency market, crypto market. So point 1 is the highest peak when we find resistance, and then we start to move down. As we start moving down and stop making these higher lows and pull back, we get our number 2. Once we pull up and stop making the lower highs and retrace back, we get a number 3. 1, 2, 3. A 1, 2, 3 top trader is looking to go short on breaks or closes below the number 2. Let's look at the 1, 2, 3 bottom. Same rules apply, but to the inverse. So when we are looking for a 1, 2, 3 bottom, we're looking to go long. We are bullish. We're looking to buy stock. We're looking to buy call options, buy futures, currencies, crypto, whatever the market may be. So as we have the market moving down, once we stop making lower lows and pull back up, we get our number 1. As the market retraces higher and pulls back, we get our number 2. As the market comes down and stops making higher lows and pulls back, we get our number 3. 1, 2, 3. 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number 2. Let's look at some chart examples. We're going to start with the 1, 2, 3 top pattern, because seeing is believing. Now, this is a daily chart of the Australian dollar, the 6A futures. If you don't trade futures, you could look at FXA, the ETF. If you trade FOREX, you can look at Aussie USD pair in FOREX. It's the same pattern, okay? Now, this is a 52-week chart, or a daily chart of the Australian dollar. So in this example, we're looking for a 52-week high. It does not have to be a 52-week high. We'll talk about ways later we can dial it in a little bit tighter to find more opportunities. But for this example purposes, we're going to look at 52-week high. And that is what we get. This is the red one circled. That's a 52-week high. Market retraces lower, pulls back up. We get our 1, 2, 3 pattern. Now we know most of the setup, right? We know where we're looking to get short. We're looking to get short on breaks or closes below the number 2. But what about the other important ingredients of the recipe? Where's my risk or my stop? And where am I taking profits? Where are my limit orders? Well, our initial risk is going to be above the high of the number 1. Our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. That's about 225 ticks in this example. So you're going to see that off the bat, we have a 1-to-1 risk-reward ratio. And that's fine, but we can do better than that. It's very important to let the market begin to move and materialize in its anticipated direction. So as the market starts moving in our anticipated direction and taking out these swing lows, we can move our stop to the next logical area, which is where? Going to be above the number 3. So here you can see that we've quickly cut our risk down by 50, 60, maybe even 70%. All right. Let's look at another 1, 2, 3 top, this time in Walmart. Another daily chart. We're looking for a 52-week high. We get that. That's indicated by the red 1 circle. Here we can see our 1, 2, 3 top pattern. We know days, maybe weeks in advance, where most other traders are struggling. Where am I getting in? Where am I putting risk? Where am I taking profits? We know we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the high of the 1. We know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down, which is about $5 in this example. Okay. So you got a 1, 2, 3 bottom example. This is a 15-minute chart of the E-mini S&P. Now on an intraday chart, whether it's a tick chart, 1 minute, 15, 5, whatever, does it make sense to look for new 52-week highs or 52-week lows? No. So on an intraday chart, we're looking for what we call session highs or session lows. Simply put, that means that we're going back to the open of the Globex session. If you're not familiar with futures and Forex, they're trading virtually around the clock. So wherever you start your trading day, you're going to be looking for new highs or new lows of the day. So if that's at 3 a.m. in the European session, if that's at the 9:30 Eastern New York Cash Open, if that's the last hour of the day, you're looking for new highs or new lows. So here we have a new session low. That's why we have a red 1 circle. We have a new 1, 2, 3 bottom, and we're looking to go long on breaks or closes above the number 2. Now I'm going to pause and talk about a couple of entry methods. We have 2 different entry methods. We have what's called an aggressive entry method, where you're working a buy stop, a tick or 2 above the number 2 high, and you're triggered into the trade. An alternative entry method is to either A, wait for the market to come back and retest and bounce back up, or what I call a second pass or hook back to the upside. Now, this method right here will obviously get you into the trade. Sometimes it will zip off to first profit target, leave you at the train station. There's no need to get your feelings hurt. There's plenty of other opportunities. But with this method, when we allow for the market to confirm a second pass entry, sometimes we are able to filter false setups. Sometimes the market will come up, roll back down, roll back lower, and you'll get stopped out. By letting the market come back and confirm we want to go higher again, that can help filter false breakouts. Let's look at a weekly chart of Apple. Hell of a way to catch some longer-term position type moves. Here we have a multi-week low. We also have a double bottom. Market breaks out above the number 2 on this large bullish candle. We trade sideways for a few weeks. We come back, retest, come back, hook back above, retest. That's our confirmation to get long Apple. How do we do that? Buy Apple stock, buy call options, call debit spreads, sell bull put credit spreads. Whatever your flavor or style is, there's a way to capitalize on these opportunities. Let's talk about failed trades. hate to burst your bubble, they don't all work. Well, I know you're big boys and girls. There's no holy grail in trading or in life. It's part of the business. So this is a setup I probably took. New session high, market goes up. We have a 1, 2, 3. Remember, those aggressive traders may be getting short below the number 2. If you wait for the head fake and then the hook back down, second entry, there we are. You're up maybe 1 or 2 points. I'm not sure. If you exercise any type of money management, you're stopped out at the next risk level above the number 3. If you sat on your hands and didn't do anything, you stopped out at the initial risk level above the number 1. But what do we get? We get a new setup. Why? This high is higher than this high, so we get a new 1, 2, 3 setup. We're triggered into the trade. It ends up being a profitable setup. Now, this is what I call a no trigger or avoided trade. It's neither good, bad, nor ugly. It is what it is. And I'm going to tell you in a second why I like this setup. So here we have the market in a downtrend. We have a 1, 2, 3 bottom looking to go long here. But the market takes out these lows, so we start the count over. Here we have a 1, 2, 3 looking to get long here. Market takes out these lows, we start the count over. 1, 2, 3, finally able to get long in the third attempt, and we're into profit. What is likely happening in this situation? What is likely happening? We have price making lower lows, but our oscillator, could be a MACD, stochastics, RSI, whatever, is likely making higher lows. This is called divergence. And this is part of the secret sauce that we can add to this setup to even increase our probabilities on an already high probability setup. Let's talk about 1, 2, 3 trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a break or close below the 2 or B point for a short. Exit strategies. If you're only trading one contract, one stock share, one option contract, one futures contract, one lot in FOREX, whatever, I would say go for the distance between the 1 and the 2. So here we have our 1, 2, 3 setup. Here's our 1, 2, 3. It's uncanny how more often than not, it will go tag that off into a tick and then roll back over. Now, if you have the ability to scalp and you're trading multiple shares, multiple contracts, I would say, hey, take a third off here, half, 2/3 off of your position here, and then trail your position using whatever works for you. They come a dime a dozen. Trend lines, 2 to 3 bars back, moving averages, par SAR. I like to use good old-fashioned levels, good old-fashioned structure, but you figure out what works best for you. Now, I've showed you that this setup works in any market, whether it's pips and FOREX, Pepsi stock, potash or pot stocks, pork bellies, and the Polish zloty. I've also showed you that this setup works on any time frame, whether it's a tick chart, 5-minute, 10-minute, 30-minute, hourly, 4-hour, daily, weekly, monthly, and more, and on any trading style. Let me know in the chat, are you a position trader? Day trader, swing, scalp, tick trader? Let me know in the chat. What type of trading style do you employ now? All of it? Day, not trading yet. Swing, swing, swing and day. And that's awesome, because this is a question I get asked probably more often than not is, what type of trading style does this work on, and what markets does it work for? Well, the beauty is that it's a price action strategy, and it works in every trading style and every market. My point is that you've got to figure out or determine what your bread and butter is. There is no better or best time frame and no better or best style. For me, I like these time frames. I like the 2, 5, and 10. I like the hourly and 4-hour for intermediate swing positions through the week, and of course daily and weekly for position trading. Okay, so you've seen the proof. Let's look at some real trade examples. Not to say what we've been looking at were fake examples. They are very real by all means, but let's look at some real examples we've used in some of our services. Let's start off with crude. Everybody's familiar with crude oil, whether you trade crude futures, USO, some other energy stock or ETF, you're going to see the exact same thing. So you guys and gals can read all this text on the right. I'm going to look at the chart and work my way from left to right. So here we have a daily chart of crude oil futures. And we have a 52-week high. That's the number 1 point. We can see we've identified a 1, 2, 3 top. It's a smaller one, but still valid nonetheless. And we know everything we need to know in our setup. We know we're looking to get short on breaks or closes below the number 2. We know our initial risk is going above the number 1 high. We know our target is the distance between the high of the 1 measured to the low of the 2 measured down. We quickly meet our $3 or $3,000 per contract price objective. Then we go sideways. Silas, does this work in sideways or consolidating markets? It most certainly does. Here we have a 1, 2, 3 right here. Nice trade to the upside. I'm primarily interested in new highs or new lows. So I'm not trading this range-bound noise, but you can if you like. We get a new setup. Why? This high is greater than this high. We have a 1, 2, 3 top. We have a little trend line break. And why did I like this pattern so much? Because we're at a time of the year from a seasonal perspective where crude and energy markets in general tend to trade to the downside. So I got very excited about this setup. So we got our 1, 2, 3. We broke below the number 2. We had 4 or 5 days of possible re-entries here in case you missed the first one. We sell off, make our $4,000 per contract move, and then we trade to the even lower. This eventually went another $20,000 per contract. And all we do is we're waiting for a potential reversal or we get stopped out. What do I mean by reversal? A new 1, 2, 3 bottom. Here's a potential 1, 2, 3, but the market takes out the lows. Here's another one. I love this setup. Here we had a beautiful triangle pattern, 1, 2, 3, looking to get long above the break of the number 2. But what happens? Market decides to take out these lows. It voids this pattern, sells off another $10,000 per contract. We finally get our new low, 1, 2, 3. We're able to get long. It meets our $5 or $5,000 per contract price objective. Now, I want you to remember this chart in the subsequent charts because I'll show you something really special in the end. So one thing you may have noticed or not have noticed, the chart from 2018. Silas, does this still work? Is this still a valid strategy? Of course it is. This is price action. Recent setups here in crude oil. $5,800 move to the downside, $4,700 move to the downside. Let's look at gold. Everybody loves to talk about gold and make predictions. Who cares about predictions? Now, this is actually GLD, the ETF that tracks gold futures. I like to look at the futures chart because it's a lot cleaner, a lot more fluid without all the gaps. But if you want to trade the ETF, that's fine. So here we are again, new number 1 high. 1, 2, 3, market breaks below. We reach our $4 profit objective. Market trades lower. Here we have a 1, 2, 3 bottom, also double bottom. We break above. We get long, reaches our $2 profit objective. Then we go sideways. Well, isn't there a 1, 2, 3 here? Yeah, get long here. What about a 1, 2, 3 here? Yeah, there is. But I'm looking for new highs or new lows. We start getting these. All these lows right here are lower than these lows. So we're starting to get new 1 counts. 1, 2, 1, 2, 3. This bar right here takes out that 1 low. So this is our fresh count. 1, 2, 3. We gap higher 2 days in a row. We come back and retest, give a trend line retest, hook back up. That's our confirmation to get long gold. Buy gold futures, GLD, call options, sell bull put credit spreads, whatever it is you want to do. All right, again, 2019, Silas, show me something new. Here we are. $10,600 a contract and still moving to the downside in current market times. Delta Airlines. This is becoming redundant by now, just trying to hit home the fact of how often these happen day in, day out, rinse and repeat. Here we have a 1, 2, 3 long setup. We get long here, $4 profit objective. Here we have a 1, 2, 3 top. This one gaps below the number 2. I personally don't trade these. I've got many students and members that will be aggressively buying put options here. We get another chance. This high is greater than this high. New 1, 2, 3 top. We break below that number 2. We get a small retest here, makes an $8 move. Now we flip it to the long side. 1, 2, 3 bottom, break above, come back, retest, zips up higher, $8 plus per share. How about current market environments? Here we go. Long trade, long trade, long trade, short trade. 1, 2, 3. All right, look at CAD Swissy. FOREX traders, CAD, the Canadian dollar versus Swiss franc. 4-hour chart, multi-session low, 1, 2, 3. Remember, the aggressive traders are getting long on the initial break above the number 2. If you wait for the market to come down and hook back up, you're getting filled on your 70 pip profit objective. Now, what do we do? What do we do? Well, we're just waiting for the next short opportunity. Here's a potential 1, 2, nope. Potential 1, 2, nope. 1, 2, nope. 1, 2, nope. Finally get a 1, 2, 3 top over here. Break below. We come back, hook back down, reaches our 40 pip profit objective. How about current times? 80 pips, 70 pips, 35 pips, 70 pips, 55 pips. Day traders, 5-minute chart of the NASDAQ. 5-minute chart of the NASDAQ here. New session low, 1, 2, 3. We break above, we hook back up, we reach our 13-point profit objective. This is a new session high, 1, 2, 3. Market breaks below the number 2, might have to pop a Tums or 2. Finally breaks down, reaches our 20 pip profit objective. Here we have a 1, 2, 3. New session low of the day, 1, 2, 3. Break above. If you're lucky enough to get long on the retest, you're filled on your 30-point profit objective at about 2 bars. 5-minute chart of the NASDAQ. 137 ticks, 60 ticks, 91 ticks. Every single day, I use this across index futures, bonds, crude oil, gold, and currency futures. Why are you here? You're here to learn a mechanical done-for-you strategy for all markets and all time frames. This is the part where I ask you, have I fulfilled my promise? Have I shown you enough proof? I don't know if it gets any more mechanical, simpler, easier. There's really no guessing when to get in, no guessing where the market is likely headed, no guessing where to get out. If we had 100 traders looking at the same chart, we should see or should have 99 seeing the same thing, right? It's always one oddball that's going to overanalyze. I'm just kidding. But this is not rocket surgery. We're here to keep things simple. But wait, there's more. There's more. What if this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there's a pinning setup? Well, I don't know about you. I would say that would be pretty exciting. Well, you're in for a treat. Do you remember the recent case studies we went over? Crude, gold, Delta, NASDAQ, and so on. Here's that same chart of crude oil, but with a little secret sauce. Now, I know you're smart boys and girls. You probably figured this out. But the green arrow is your number 1. The red arrow is your number 2. The blue arrow is your number 3. 1, 2, 3. Now, these chevrons right here that you see, these are not buy signals. These are not sell signals. They're a visual aid waving to you saying, hey, we've broken below the number 2. We've broken above the number 2. It means we might have a potential setup. If and only if we break below the 2 or above the high of the 2, we get the chevron and we get these 4 beautiful lines plotted onto our chart. The red line is your risk, blue line is your breakout level or entry, lime green line is TP1, profit objective 1. The dark green line is TP2 or profit objective 2. Very simple. Now you might say, what the heck are all these green arrows? These are new lows. It's going to stop. It's going to keep printing new number 1 points as we're moving lower. Once we stop moving lower, we'll start to get our number 1, 2, 3. We never break above. We start to count over. Here we are again. Almost got long here, but the market decided otherwise. So no chevron, no pretty lines plotted onto our chart because we never took out the number 2. Here's the gold example. Here's our 1, 2, 3 bottom setup. We trigger above the number 2, so we get our plots, target 1, target 2. We don't get anything in here because we're looking for new highs or new lows. We're getting new green arrows. Why? Because these lows are lower than these lows. We finally get that last 1 low, 1, 2, 3, break above, come back, we get TP1, TP2. You can see we're working a new 1, 2, 3 top over there in the top right-hand corner. Here's the chart of Delta Airlines. Here's our long, short, short, long. Non-repainting. 5-minute NASDAQ. Here is a new session high right here. There's a 1, 2, 3. We break below. We hit target 1, target 2. Target 2 happens to be a new session low, so we start a new 1, 2, 3 bottom count. 1, 2, 3. Break above. We hook back above. Hit TP1. Didn't quite hit TP2, but it's close enough for government work. Shouldn't have lost any money on the trade. But then guess what? We make a new session low. This low is lower than these lows. 1, 2, 3. The market just nips its little head there above the number 2, which gives us our print. We hit TP1. Notice as we are waiting for TP2, we're starting to get new session highs. This clues us in that we may need to get ready to short the market. Well, we hit TP2, and then here we go. 1, 2, 3, market breaks below, comes up, hooks back down, hits TP1, hits TP2, and we get a new 1, 2, 3 bottom over here, likely at the end of this trading session. So is this training for you? Well, only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, paralysis analysis, you just want to simplify your process. Maybe you're already successful. Let's pat yourself on the back. Add another strategy to your toolbox. Or if you want a very specific step-by-step plan and want to avoid learning this on your own, this is something that anybody can do, even part-time. Now, let's look at some recent setups so you can get an idea of how this could change your trading. Look at this long setup here in Cardo. Another long setup here in Cardo. How about a short signal in Cardo? Giving you entry, your risk levels, your target 1 and target 2. Google, sell trade here, sell trade here. Who could have sold bear call spreads or bought put options or sold the stock outright if that's your thing? 4-hour chart of the Canadian dollar, long trade here, followed by short trade here. 233 tick chart of the E-mini. I love the 233 tick, and I love the 610 tick chart on the S&P and NASDAQ. Look at these moves. You can flip through multiple charts, time frames, put them side by side, depending on how much action you want. Now, why let technology do all the work? Or excuse me, why do we do all the work when we can let technology do the work for us? This is one of my scanners. I'm scanning for 1, 2, 3 tops across the Russell 1000. Only stocks that are optionable, $20 a share or greater. What would take me days, maybe weeks of markets to go through, I press the scan button and voila. I've got one monitor dedicated to multiple watch lists, scanning multiple markets in multiple time frames. This is what it looks like in TradeStation, your indicator component. NinjaTrader 8, there's your indicator and scanner component. Wealth Charts, your indicator and scanner component. MetaStock, Here is your indicator component. Look how clean and beautiful these charts are. Trading view, here's your indicator component. And then MetaTrader 4, indicator component, 4-hour chart of Euro Kiwi, long, short, short, long. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a daily process. I'm letting the platforms scan the markets for me, locating the setup. I go to my platform for entry, and I manage the trade through the exit. This becomes a rinse and repeat process every single day. And you can start to profiting from these predictable patterns with what I call the 3S code. So here is your offer you simply cannot refuse. For the first 25 people, we're opening up 3S code where you're going to get the 3S indicator and scanner, the 3S code optimizer, access to my weekly strategy and scan sessions, which are live and all recorded and archived for your viewing convenience, and access to my private Telegram room. I'm also including 3 bonuses: my 25 top option strategy guide, my chart pattern principal trading guide, and all of my quick start guides. You can get access today, first 25 folks, for a single one-time lifetime fee of $397. The offer link is metastock.com/code. I just put that into the chat window for you. And yes, you heard me right. You get access to multiple platforms and scanners. This is a lifetime access, including all updates. You can also call 800-882-3040 if you want to speak to a real live human being. Now, I want to cover again, make sure it's crystal clear. We do not limit this to a single license. You're going to get access to Metastock, TOS, TS, NTA, TV, MT4, and wealth charts if you wish to do so, if you wish to use multiple platforms. Now, my weekly strategy and scan sessions, this is where we go over my top setups for the week. We do a top-down analysis. We look at swing ideas. We look at intraday ideas, how to day, swing trade, using the 3S code, how to use options, trading minis, micros, ETFs, and much, much more. A lot of times we find live trade setups during these sessions. Now, the indicator and scanner, again, includes a visual plot of the 1, 2, 3 top and bottom reversal areas, the breakout level, your risk level, target 1, target 2. All the settings are customizable. If you want to change the color, you want to change the dot to a line, you can scan for setups only, or trigger only, or both. Scan for tops, bottoms, or both. Scan for intraday setups, swing setups, or both across multiple instruments and multiple time frames. You're also going to get the 3S optimizer. This is where you can now take the very mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests across different inputs and settings to find the best optimization parameters that fits your trading style. So here's what it looks like in Thinkorswim. We've got, I'm running optimizer here on crude oil. Here on TradingView, this is a 4-hour chart of the British pound. This is what it looks like in TradeStation with all of your results, and then NinjaTrader. This is a back tester's dream. You can add and edit variables such as EMA, crosses, trend EMAs, mess with the variables and settings. A really, really awesome tool for those that like to tinker. Bonus 1, you're going to get my chart pattern principle trading manual and guide. This will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade the 1, 2, 3 pattern. Bonus 2, my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so, and do so the right way using the 3S code strategy. Bonus 3, access to our private Telegram room channel. I'm covering stocks, ETFs, indices, futures, commodities, and currencies. intraday setups, daily setups, weekly setups, much, much more. You'll get private Telegram room access. The offer link is metastock.com/code. Now, these are some unsolicited testimonials. I don't ask for these. They come in all the time. But most importantly, it's about people taking action. The only way you'll get results is if you take action, and you can do so with the 3S code. So who here is ready to get started? Here is your final offer, guys. Final offer page with everything that you're going to get. You're going to get the 3S code indicator, the 3S code scanner, weekly strategy and scan sessions, plus my private Telegram room access, and all free bonuses. And I should mention, you also get white glove VIP service. We believe in taking care of our students and our members. We do not say, here you are, good luck, throw you out to the wolves, leave you high and blind. We will work with you until you get set up. My guys can log into your computer and do a remote session if need be. I will personally reply to you on market-related and indicator-related specifics. We are here every day helping students, trading the markets, and we're here to help make sure you have success. So I do have a couple of minutes here before I've got to scoot. I've got a responsibility of taking my daughter and getting her to her field on time. A lot of pressure on me. So let me just pause here for a minute. I'm going to scroll up and answer everybody's questions. Can I go over the targets again? Sure. So I think the best way is, let me pull up this chart here. Everybody should see the chart. And this is a daily chart of the S&P. It could be the SPY, SPX. And I will tell you, if you can't see this yourself, this is called major turning points this year. Now, it's 1, 2, 3, 4, 5 signals. 5 signals over what, 11 months? Well, it's a daily chart. If you want more action, you go down to a lower chart. You want to go down to a lower chart. We can go to a 5-minute chart. Yes, absolutely, it will work in the overnight session. So let's look at a 5-minute chart. Here we have the break of the number 2. The target is the distance between the low of the 1 measured to the high of the 2 measured up, 1 to 1. For a short, it's the distance between the high of the 1 measured to the low of the 2 measured down. You see we hit TP1 and TP2. Yes, you can use this on any markets. No, this is not a subscription. This is a one-time fee. One time, you own it for life. You download these indicators, these scanners. I can't reach into your computer and retrieve those. You own it. This is a very reasonable fee to get something that costs well into 5 and 6 figures of programming. And anytime we make an update, we have to do so across 7 platforms. It's not cheap, but we do not pass that on to you. How do I get access to Telegram Room? Everything is inside the members area. Yes, if your platform can plot Canadian stocks, Jerry, absolutely. Canadian markets, yes. I don't care if they're European stocks, Canadian stocks, Indian stocks, US stocks. It works on anything that can be plotted. If you can plot tulips or tea leaves, it will work. Yes, Heikenhachi and Rico will work, correct. Do you get an alert? So that's going to depend on your platform. Depending on your platform, you can be alerted to when a setup, a 1, 2, 3 bottom or a 1, 2, 3 top has set up, either via a trigger or in the process of setting up. Absolutely, you can do this on your own. In fact, I encourage you to. I did this on my own manually for, gosh, 10 plus years. Do you understand how time consuming it is to go through every chart and sit here and go, okay, I think this is a low. Let me take this. Let me get my calculator out and measure from here to here, and then add that back. Okay, that's going to be, 57 points. 57 points plus 39.62. I mean, do you see how inefficient that is? Very inefficient, especially if you're looking at an intraday chart and trying to trade real time. So what this does is I've had employed very smart people to program this. I am not a programmer. I don't even know how to spell programmer. I'm just kidding. Even though I did go to Alabama, I do know how to spell programmer. Paid very smart people to program this. So what this is this is it's a tool, because now that we can take this tool and we can run scanners against it that alerts us. I'm running scanners across daily, weekly, 10-minute, hourly, 4-hour, across stocks, futures, FX, multiple time frames, multiple markets. So I know I can go do whatever it is I'm doing, and I can be alerted to those potential setups. What time are the weekly sessions? Every Thursday at 11 Eastern. Yes, they are recorded and put into the members area. No to Sierra. The stop is below the low of the number one or above the high of the number one. Absolutely. Yeah, I got a lot of folks that trade the FANG stocks trading weekly options. They use weekly options, trade FANG stocks, both buying calls and puts outright and selling spreads. No, it doesn't matter what time of day you trade, whatever time of day works for you. If you're an end-of-day trader and you can only look at stocks or markets at the end of the day, that's fine. If you want to day trade, you can pull up your favorite time frame and day trade. Do both. No, there is no better time frame. I mentioned that earlier. There's no better time frame. You figure out what works best for you. This is price action. All this is price action. Price action is fractal. Does not matter what time frame. Thank you so much. How many signals can you expect in a week? Depends on your time frame. If you're on a tick chart, you're going to get several. You get a dozen maybe signals on a tick chart a day. If it's a 5-minute chart, you might get 2, 3. Depends on market movement. Depends on volatility. Oh yeah, we love volatility. I want to give a shout out to those that have joined. I see a lot of folks say exciting that you're in. Ryu says mission accomplished. So I want to thank those. Well, I'll see you in the market tomorrow. Go ahead and get your indicator downloaded, installed. All the installation instructions are inside the members area. And I've got to wrap this up, but I want to say thanks to Jeffrey Gibby and the Metastock team. I really do appreciate coming back in. This has always been a good event, and I know you've got a lot of good speakers the rest of the week. A great crowd, and I'm happy for our new students and members. So thanks again, and I wish everybody a good and safe environment in the markets and in life. Everybody take care, and I'll see you on the flip side.
Silas, enjoy that game, and thank you. I want to show a chart we actually we got that Silas in for our last Online Trader Summit, which was October 27th, and you should be able to see it right now. This is a chart of the DIA. We're setting up a really nice 1, 2, 3 pattern. I believe we were talking. What day was that? It was like the 27th. So it's right in this area. Hit its target really nicely. So I like this pattern. It's a nice classic 1, 2, 3 pattern. Silas, good job in kind of creating it. I also like how customizable it is. As a user, if you want, you can define the difference between 1 and 2, how many bars have to pass. Between 2 and 3, the amount of movement that you want and all that kind of stuff. I just love the fact that you don't have to customize it. This is kind of the default settings, but you do have that ability. So Silas, again, thanks for coming. With Metastock, we do have the scanning and the expert advisor. And let me kind of go in and we'll just kind of talk about that a little bit as well. You have the 1, 2, 3 automatic pattern identification. You have the stop loss. You get the targets. Those are going to be defined for you. You get the commentary. I love commentaries. Like, we're going to show you where the positions are. We're going to list out what the stop losses are and those targets. That's going to be displayed for you. It's all going to be explained to you in plain English with the commentary. It's really, really easy to kind of do it. And of course, we're going to have scanning. I love scanning. You can scan whatever markets you want, whether it is in Canada, the US, London, India. If we have any of the Indians still with us, you should be on there. Medania says, I purchased 3S code but could not locate the indicators to download for other platforms. Medania, we can help you with that. Reach out to us. You can reach out to us at sales@metastock.com, and we'll be able to kind of help you with that. So whether you bought them from us or through somebody else, we'll be able to kind of help you, kind of point you in the right direction. So there you go. There's the email address you can use for that. So in addition to that, again, it's a $497 cost. That does include your private Telegram room. It'll include your user-defined parameters, unique to, you can go ahead and define that exactly the way that you want. You're going to get the trading course, everything Silas talked about as part of that. All of it's only $497. Here at the event, we're going to do a conference special. It's going to be $397. So to take advantage of that, you can give us a call at 800-882-3040. You can also visit us online at metastock.com/saleschat. So I want to appreciate Silas. Thanks for coming in. Have fun at that soccer game. Get out of here. I'm going to go ahead and get you rid of you. I do want to say thank you again to Stocks and Commodities for help supporting us. Great magazine. Again, if you do any of the add-ons today, you'll probably get 2 years subscription for free. Stocks and Commodities. If you do our extended trial, you'll also get at least 5 free months of that. So I want to say thank you to CMT Association for sponsoring the events today. They do a great job. We appreciate it. Tyler's going to come in a couple of days. Tomorrow, we have another. I was looking at the lineup tomorrow. Man, we've got another exciting lineup. It's going to be exciting. The day after the election, we're going to see kind of how everything shakes out. But we'll start the day. Actually, this is Thursday. We have another good lineup on Thursday, too. But we'll start the day with Vince Vora tomorrow. We're going to have Rahul Mohindar. I'm going to talk a little bit about some of my favorite things in Metastock. We're going to have John Osborn talk about value and valuing stocks. Larry McMillan is coming in. Anne Marie's coming in. Dan Passerellis, Steve Primo, and John Seville. So we have another full day tomorrow. It's amazing. So for all of those people that came today, or for all of the speakers we've had on so far, thank you for helping us support the event. Thanks for coming, whether you're watching us on YouTube. Hey, if you're watching us on YouTube, like and subscribe. It helps a good deal. Whether you're watching us on GoToWebinar or any of the other platforms, appreciate it. I hope you've enjoyed the event. If you haven't voted yet, go vote. That's a good opportunity. Thanks for coming today. We'll see you tomorrow.
Hi, Kelly Clement here from Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.